Welcome to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
Oh, it was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
It's this new industry where now billions of dollars are being made.
We're here to bring cannabis into culture.
Day two, y'all. Day two. Day two. It's day two. And it's Elliot and Javi. We're back. We're back. If you are feeling good today, drop a 1 in the chat. Please, questions, comments, feedback, all of that stuff is valuable to us. I will engage with you as much as possible, as are my colleagues. Javi, my friend, how are you today?
I'm doing great. I mean, I always love the commercial for the Cannabis Hour, especially the part where Mara Gordon says, I've seen the benefits for myself. I go like, yep, same. You know?
Wait, you consume? I'm shocked. I am shooketh.
Very rarely.
Shooketh am I, Javi. It is good to be with you here.
It took me years to come out of the cannabis closet, though. Like, even when I was writing about cannabis, people asked me, do you consume? And I was like, that is a personal question.
Now it's not. Yeah.
I mean, yeah, now it's not.
Yeah.
By the way.
Well, I mean, for Google advertising, it still may be, but you know, we'll get past that roadblock when we can. It is good to see you today, Chris, Paul, BW. Thank you for being back, y'all. Let's keep the questions coming. The dialogue in the chat yesterday was rocking. There are 2 tracks. The Cool Kids track, right here. And then you have my older brother, shorter brother's track and track 1. You know, there's good stuff on both tracks. Don't get me wrong, but please do make sure you check the agenda out in the description below. And you can see which sessions you would like to view.
Who is in our track? That's what we want to know.
Yes. Who is in our track? Well, first up, urban-gro. We all know how the ancillary space is looking right now. It is hot. It is wonderful. I do want to say, you know, they haven't given me a soundboard yet, right? And like, we host a podcast every week, so you know what? I found my own, and I'm pumped about it.
Mm-hmm. I mean, my God.
I don't know if anybody
Want
heard
to talk
that.
a little bit about urban-gro and the news around them?
Oh, well, I'm sure he's going to talk about it, but maybe you could tease it a little bit.
Just one little spoiler. So, you know, only a few days ago, less than 10 actually, they raised $62 million. They announced that. They recently debuted on the NASDAQ. I'm sure they will be talking about that. They are eyeing the European markets. Very, very interesting.
Yeah. I got some questions after his presentation for me personally, but again, everybody, please continue to drop your questions in the platform chat, the YouTube chat. We are monitoring both all day. There is tons of networking to be had in the platform. This is what this conference is for people to meet each other on one side. On the YouTube side, we thank all of our retail investors for being with us. Tons of companies that you could potentially get involved with today. And we're starting off with urban-gro. Awesome company, and one that may, you know, shake up the landscape a little bit. I'm excited. So,
you know what else I'm excited about?
Yeah.
There's a panel at 11:40 about creative ways to finance your business, right? And we have Jen Dooley from Green Thumb Industries, Doug Gordon from LeafLink, Sanjay Argawal from MGO, and our host, Spencer Israel. You love him. You know him from Pre-Market Prep. He is joining the Benzinga Cannabis Capital Conference today for an amazing, super interesting panel you need to watch.
And yes, we did make him. He had no choice in the matter. Oh, man. I'm very excited for the day ahead. I will say, I do believe the videos from yesterday are available for replay. Yep. If they're not up right now, they will be soon. Shortly, may be a little too soon, but you will be able to see those videos. Tons of amazing content. The New Jersey panel yesterday with Jen Drake, the COO of Air Strategies or Wellness, and Nicholas Vita, CEO of Columbia Care, was particularly passionate. Very cool panel. We heard from Charlotte's Web. We heard from HempFusion, who we're going to hear from again today. We heard from Precision. Just every major company is on the board either yesterday or today. So very excited for the content ahead. Javi, I want to cue you up for what you do best, though. And as a preface to this, Benzinga is the leading voice in financial media for cannabis, and it is all thanks to Javier, Tony, and the cannabis writers that we have on staff here at Benzinga. So please, Javi, show us what you do.
Have an exclusive for you today. You have not heard about this before right now, and you heard about it first on Benzinga. Rainbow Realty Group announced the closing of a $47 million raise. Of the total, 10 million was raised from nearly 200 individual investors via the real estate investing online marketplace CrowdStreet. What's interesting about this real estate fund is that it's not exactly a REIT, but what they do is sale leasebacks and secured loans and go for properties between $5 and $15 million. You can read all about it on benzinga.com/cannabis. It's premium content, exclusive. We have one every day. Yesterday was Philo's news about a Twitter exec, and the day before that, it was Coach Capital's $100 million raise. So, I mean, if you're not in Benzinga Cannabis, where are you getting your news from?
Yeah.
And wherever you're getting them late. What are you doing?
Look at the conference yesterday. George Allen comes on here and announces his acquisition and the name change. I mean, that was awesome. Honestly, like Javier, you do a wonderful job. We also do this every week. Benzinga Cannabis Hour, mirror is getting me there. Benzinga Cannabis Hour every Thursday from 4 to 5 Eastern Standard Time. We talk to 3 executives in the space. We keep it diverse, we keep it fun, we keep it casual, but we do talk about ways for you all to get involved in this industry. And, touching on the CrowdStreet, we had a couple Regulation A's. We had one yesterday with Mystic Holdings, very cool Nevada-focused company at the moment, poised for expansion, poised for an IPO, but they are basically including the average Joe here, like you and me, which I think is super cool.
I'm a fan. Some other financing news. MedMen announced this morning that Ascent Wellness Holdings invested some money into its New York operations. Kronos Group released its fourth quarter and full year results. Both of these stories will be on benzinga.com/cannabis. And we also have 2 very interesting news items out of Verana Holdings, expansion-wise, and I won't spoil them. Go to benzinga.com/cannabis. Find out. I cannot give you all of the news here.
Yeah, all the news is on benzinga.com/cannabis. We have an app, we have a site, we have a podcast, we have a conference. It's all there for you. That being said, Javi, I think we'll see you later in the day, my friend, but I'm ready to get started. Many more times.
You'll be fed up of my face by the end of the day.
Javi, I could never get fed up with your face. All right, so Brad is making his presence known. I think he is with us. Brad Natras, the head honcho of urban-gro. That is NASDAQ listed UGRO. I have some questions just about the space in general, but Brad, are you with us, my friend?
Yes, I am. How are you doing, gentlemen?
Oh, we're
glad
great
to be here to kick off day 2.
Awesome. You know what? We're going to let you do it strong. We're going to let you get started. We'll talk to you in a bit.
All right. Sounds great. Thank you. Well, good morning, everyone. Thanks for joining. My name is Bradley Natras. I'm the co-founder, chairman, and CEO of urban-gro. We're an engineering and design services company that is successfully integrating complex equipment systems into high-performance facilities in the controlled environment ag segment. Working in the cannabis space for the last 6 years, we've acquired a massive knowledge and momentum. And now with our recent NASDAQ uplisting and the associated raise, we intend to not only capture significantly more share in the global cannabis market, but we're going to also aggressively expand our reach within a second horticulture subsegment, vertical farming. With that, we'll get started. A little bit of easy reading for you later on tonight. urban-gro is a Colorado-based company. We have 44 employees, of which 65% or so are what we refer to as experts, a variety of engineers, professional engineers, controls, mechanical, electrical engineers, and horticulturists, masters in plant scientists, environmental scientists, a large group of individuals that have experience in growing multiple crop types. We've worked on over 300 projects, and this acquired expertise is not only our largest asset, it's also our most differentiating factor as well when looking at urban-gro compared to the competition. Looking back at 2020, it was most definitely a crazy year. The impact of COVID was different on urban-gro versus others in the ancillary cannabis segment. In summary, for us, there was about 2 to 3 month delays on projects. However, we've still finished strong. We increased revenues and finished just under 26 million. Moreover, we also met our goal of obtaining not one, but 2 operational cash flow quarters in Q3 and Q4. So we've entered 2021 with more momentum than we've ever had. And we finished last year with just over 14 million in backlog, which will be projects and equipment systems that are due to be invoiced and shipped early this year. Most exciting, of course, and what's different about us today is our recent NASDAQ listing. Earlier this month, we completed a $62 million raise. And with this uplisting, we're now in a position of strength to fund our growth plan. Since our uplisting, we've also had a couple of other important announcements. We paid down 5.8 million of our debt, and we also hired a very experienced president and COO, Jim Dennedy, who's focused on building our structure to also support this rapid growth that we're experiencing. The controlled environment ag market overall is booming, not only in the cannabis sector, but also in the non-cannabis sector as well. Further define controlled environment ag, it's a segment that's represented by any facility that is self-contained and has fully controlled environments. There's 3 primary facility types in this segment as urban-gro looks at it. First, and our current sweet spot, indoor facilities. They can be ground up builds or building warehouse retrofits. The second segment, where we intend to further expand in the non-cannabis segment, is vertical farms. And finally, third, a segment that we'll look at in the future, but not today, greenhouses. Also, you'll hear me talk today about our involvement in ag tech. Ag tech is the use of technology to enhance operational efficiencies for our clients and moreover, increase their yields or help them increase their yields. Today, these 3 key deliverables, design, integrate, and commission, is where we make our money. It's important, again, to emphasize, while the majority of our engineering and integration business has been in the legal cannabis market, we have a decisive advantage compared to the competition when entering the non-cannabis segment. We've had the opportunity to learn from working with the most high-valued, expensive crop in the world. And we're now taking these learnings and properly controlling an environment over to the vertical farming segment. Regardless of the crop being grown, we engineer and integrate controlled environment ag facilities. It uses the same engineering and design services team, as well as the same custom equipment systems, which are all most commonly born in the global horticulture marketplace. I'll get into some greater detail on our solution. We're much more than an engineering firm. In fact, we offer 3 engineering and design service solutions to our clients. First, we did start by acquiring an engineering firm a couple of years ago. And with that firm, we offer a complete line of mechanical, electrical, and plumbing services that culminate with stamped construction documents. But we don't stop there. Cultivation space programming, that involves looking at the future state of a facility, not only at startup of operation, but 1 or 2 expansions into the future. Then we bring that back to today, and our engineers help make sure the facility is designed to drive the most efficient use of space possible and make sure it's equipped with the proper controlled environment systems as well. Second is integrated cultivation design. This involves the designing of the inner workings or the guts of the grow. It really utilizes those experts and the acquired expertise that we have. So in addition to integrating in benching and lighting systems, we're also designing the flow of air in the facility and the flow of water. When it enters the facility, does it need to be treated with reverse osmosis? Do we have to temper it up or temper it down? And more importantly, when it leaves the facility, it's now wastewater. How do we treat that wastewater? That varies. It varies by country, city, and also county. We then look at all those regulations and our engineers design that wastewater treatment system accordingly. After we've designed the facility, we move on to the integration and commissioning. Again, utilizing those experts that we've built up. We continually vet new best-in-class complex environmental equipment systems around the world. We then procure these systems, we integrate them into the construction documents, and we sell them to our clients as well. But we don't stop there. We then go out and we send our engineers to commission those systems to make sure that they are operating to the manufacturer's specification and to make sure our clients' teams are properly trained on how to utilize those systems to the manufacturer's specifications. It's a green ocean, and we are definitely seizing the opportunity. Our business has grown up in the North American cannabis segment, and we've had the pleasure to work with and continue to work with some of the most well-known MSOs in the space, as well as the rapidly increasing number of single state operators as well as new states open. We successfully expanded to Europe last year, and although we weren't able to physically open our office as planned, we still closed 6 engineering design services projects. We also work closely with some of the best equipment manufacturers in the world and have built strategic partnerships with large European contractors as well. We're definitely set up for future global expansion. All of this combined, our experience with 300 controlled environment ag projects and the expertise that our team has built, it sets us up perfectly to enter another rapidly growing subsegment of controlled environment ag, food-focused vertical farming. This segment, again, uses the same engineering services and the same complex equipment systems as we use and integrate in the cannabis segment. The opportunity is clear. Today's field farming methods, they're not sustainable. Controlled environment ag is truly farming's future. When you compare vertical farming versus field farming, 10 to 50 times input in yield, the market for vertical farming food is expected to exceed 13 billion by 2026. It's a growth rate of about 25% per year. And moreover, smart money has entered the market. The controlled environment ag industry raised approximately 600 million in 2020, and that was up nearly 50% over 2019. But these initial investments, they've been made into brick and mortar companies in the space, cultivators, producers, wholesalers, retailers like Gotham Greens, Plenty, Crop One, Sensei Ag. Investments into ancillary infrastructure providers, companies like urban-gro, companies that possess the expertise in engineering these facilities to perform a certain task in the build out. It's only just starting. As compared to field farming, in controlled environment ag facilities, every aspect is controlled, each and every harvest. Just a few examples, the crop's protected from weather-related issues. Don't have to worry about a drought, don't have to worry about a rainy season. These facilities also allow multiple harvests per year versus predominantly one season-dependent harvest in field farming. And finally, probably most important, integrated pest management. It's much easier indoors, and you can control it predominantly by biologicals and not use excessive amounts of chemical pesticides. In fact, urban-gro's plant scientists who address this need. We travel on site, they write pest management plans, and then we sell the biological insects on a recurring weekly basis as well. I'll now focus on what I consider to be the most exciting part of the presentation, especially because of our recent raise. It's how we'll utilize those funds from the raise and the attention from the NASDAQ uplisting to execute our growth strategy. Our leadership team has built our aggressive growth plan on 3 key pillars: organic growth, acquired growth, and partnered growth or invested growth. I'll start with organic growth. Word of mouth referrals by far and growing as our existing clients expand. That's by far our number one driver behind organic growth. But complementing this, there's 4 key components that we have in our plan. The first is building out our sales infrastructure. Last year, the 26 million, we did that with 3 directors of sales and 1 executive vice president of sales. It's time to build our team out so we can take on more demand. It's not only capturing this demand, but it's also accessing new global cannabis markets as well at the same time. Hiring the right expertise will allow us to access their network of both clients and also of vendor partnerships that they have. Second is accelerating or bolstering our digital marketing strategy that's focused on lead generation. Our marketing to date has been primarily trade shows, which we could not participate in 20. It's also been grassroots efforts. Our 2021 marketing plan will strongly revolve around investing in digital marketing. We engaged a premier digital marketing agency a couple of months ago and launched a US SEO and AdWords campaign across digital and social media. And we're already seeing significant results from those efforts and continue to expect to see significant results going forward. The third is aggressively expanding into the European cannabis markets. As related to the US market, the European market is really where the US was 4 to 5 years ago. There's a strong demand for controlled environment, GMP certified, pharmaceutical grade indoor facilities, exactly our sweet spot. The European market today is estimated to be at about 250 million and is forecast to grow to over 30 billion in the next decade. Fourth is expanding our reach into the non-cannabis vertical farming, controlled environment ag segment, as I discussed earlier on in the presentation. Second is acquired growth. There's a gap in the market. We found a gap and we are building the solution to fill it. There's an increasing global demand for end-to-end turnkey solutions, turnkey cannabis cultivation facilities. And by making just 2 or 3 strategic acquisitions, we can tap into these significant revenues. 4 acquisitions, we're targeting accretive, synergistic, service-focused acquisitions that complement our existing business, the engineering and design services, integrating them into the projects, and a cascading effect to further increase revenues by integrating in our complex environmental equipment systems. That will help us drive increased profit margins as well in 2021. We're also looking at acquisitions to speed up entry into the non-cannabis vertical farming segment, to acquire that expertise, to look at companies that have been actively participating in this segment. It'll provide us as well with access to pre-existing customer and vendor partnerships. Our third pillar is invested growth or partnered growth. It's making investments to fuel growth and access lead generation. So in addition to looking at acquisitions in the controlled environment ag market to increase our speed of entry, we're also focusing on making investments in ag tech companies that will not only provide us with a competitive advantage for our post-startup managed service offering, but they can also be used by our clients today, post-startup, to increase their efficiencies as well. That managed service program at urban-gro is called GrowCare. One of the investments we've made so far is in Adiza. It's a California-based IoT remote monitoring and sensor company, and urban-gro owns a 20% stake. This investment builds a credibility for urban-gro as it builds our brand as a technology forward-looking company. It plays into our whole ag tech offering. Adiza's solution provides a very important tool that can be used by our clients to enhance their performance. For example, in this picture was generated by placing high-density wireless sensors throughout the facility or throughout a grow room, above the crop, within the crop, and also sensors in the substrate. These sensors are feeding data every 3 minutes. And so we're able to allow our client to see what's happening real time at the microenvironment level of their facility. Moreover, we're helping them avoid a catastrophic or an event, any event that could affect yields in a negative way. In this picture, that red dot that you see in the upper left-hand corner, that's a real picture, and that was caused by drip stakes on a bench actually being blocked or clogged, the supply feed. And therefore, they were able to proactively solve that issue. So in addition to training, auditing, and offering maintenance programs to our customers, we're also able to look in 2021 at adding a remote monitoring solution as well that's built on this Adiza technology. Financial highlights, the new urban-gro, our public peer markets group, other ancillary companies operating in the cannabis space and primarily trading on the NASDAQ or OTC markets. They consist of companies that are currently trading at market caps of 8 to 16 times, recently even as high as 20 times trailing 12-month revenues. urban-gro today, or in the last couple of days, we're trading at just over 3 times the trailing 12-month revenue. This being said, we are now most definitely in a strong financial position. We have more than $50 million cash. Our $14 million backlog is strong entering 2021. and we only have $1 million of debt today. It's very low interest. Our current market cap is only approximately 88 million. So in my opinion, we represent a very attractive investment opportunity. In summary, to summarize our position today, we're at the right place, the right time, the right value. The controlled environment ag space, both cannabis and non-cannabis segments, have tremendous momentum, and we're positioned to enter both smoothly. And further, with the recent legislative indicators, positive legislative indicators, we expect this demand to only accelerate, and we're setting up our infrastructure to handle that demand. Value indicators have been assigned by our public markets peer group, and we believe we have the opportunity to closely track. And now with the funds from the raise, we'll be in a position of strength to fund our growth. We'll add that additional expertise to bolster our team. We'll target acquisitions to complement our continued organic growth. We'll make investments into ag tech companies to complement our managed service offering, and in turn unlock the value that exists in the market for us and for our clients and for our investors. 21 should indeed be a fantastic and transformational year for us. It already is. I'd love you to be a part of us and enjoy this journey. But thank you for your time and interest, and I'll now open it up for questions.
Yeah, very nice, Brad. Awesome presentation. Definitely a growth opportunity there. So we do have a couple questions in chat. Alexander B., I think you touched on the balance sheet a bit there. Very attractive. From Gherkin Sisman, what do you think of aquaponics and urban-ponics as a future market? I guess let's hone that in to specifically for urban-gro.
Well, we work around what our clients are looking for as they build out their facilities. We do have expertise and engineers on our team that have experience in aquaponics. But that's the special part about urban-gro, this expertise in 300 facilities and the experts. I would ask that he call urban-gro, reach out through our IR team, and then we'll connect him with the right individual on our team that can answer that question in a much stronger way than I can.
No, very cool. Very good. Yeah, you're right, Alexander B. I actually didn't ask the full question there. Let's touch on this first. 2021 forecast. Can you give some information there? And then do you have how much cash does UGRO currently have on the balance sheet?
Okay, so I'll start with the latter. We currently have a cash position of over 50 million.
Right.
And as I mentioned, we only have $1 million of debt now, very low interest.
Which is awesome.
Thank you. We don't give guidance, but here's what I can tell you. We finished the year strong with record revenues, and that was after 2 or 3 tough months tied to project delays. We finished with 14 million in backlog at the end of last year, and we didn't stop selling. During the uplisting progress, what I did is I had our key leadership team, 3-4 individuals, focus on the uplisting and the raise. Everyone else stayed focused on what the goal is, making sure the operation's running smoothly, making sure that we're putting ourselves in front of as many clients as we can. We didn't lose any momentum during the process. So we're in great shape entering 2021.
Awesome. I have one quick question. If you give me a quick 30-second answer here, and then we'll pop off.
Sure.
Is the international expansion, since this is a cannabis conference, does it mirror that of non-cannabis crops as well? Or are you targeting different areas internationally for different crops? And it sounds like you do that based off your clients' needs as well.
Yeah, it's a great question. We are targeting different areas of the world for different crops. One nice thing is controlled environment ag is really crop agnostic. And so there are certain areas right now that have a lot more momentum in the world, in vertical farming, for example, as food production. But as for cannabis, for the cannabis sector, Europe right now, it was affected by COVID for sure. It wasn't far enough along really to carry that momentum through COVID, but it is a tremendous opportunity because they have the demand for the services that are offered and the complex environmental equipment system integration that urban-gro offers. The whole marketplace, the whole segment will benefit as we expand further for sure.
That's fantastic. So this is Bradley Natras, NASDAQ UGRO, urban-gro.com. It's been a pleasure to have you, sir. If you're in the platform, please take meetings with Brad. Awesome opportunity here, as well as our retail investors. Check out the stock. Brad, thanks for being here, my friend.
Thanks, Elliot. I really appreciate it. Thank you.
Glad to have you. All right, y'all. We are going to keep it moving with an awesome piece of content. Let's go ahead and bring him over. Jonathan Small, the editor of Entrepreneur. Wow, I sounded very, I feel like a field reporter there. Editor of Entrepreneur. Let it be known I have no field reporter background. How are you, Jonathan? Good to see you.
Good to see you, Elliot.
Oh, I'm glad to have you here. I'm going to hop off and let you go ahead and introduce your panelists. Very excited for this one.
Yeah, well, thank you. Thank you so much. And welcome, panelists. I think you're all here. This is the Canadian Catalysts panel. And my name is John Small, and I'm with Green Entrepreneur magazine, greenentrepreneur.com. And it is a pleasure to talk to you even this early in the morning. I'm in LA. It's now 7 in the morning. So I am drinking lots of coffee and excited, though, to talk to my panelists. Looks like they're almost all here. Guys, I think I'll let you introduce yourselves and talk about who you are and what you do at your wonderful company. So let's start there. So let's start with Mikkel Rutherford. Welcome to the panel, and let us know a little bit about yourself and what you do over at Slang Worldwide.
Thanks. Yeah, pleasure to be here, John. It's just Mike. It's just spelled weird for no good reason at all. So
I'm
yeah,
sorry,
Mike Rutherford.
Mike.
No problem at all.
This is what happens at 6 in the morning in Los Angeles. Sorry.
No worries. Yeah, so I'm CFO of Slang Worldwide, a leader in cannabis consumer packaged goods. We've got 6 distinct top performing brands in multiple verticals. We operate in 14 states, Canada, Puerto Rico, and abroad. I was previously the director of finance for AgriFarm, and I'm now a member of the board there. And that's a Canadian LP, which is a joint venture between Slang, Canopy Growth, and Greenhouse Seed Company.
Oh, you're on mute there, John.
Welcome to the panel, everyone, and thank you for clearing that up. John, since you are so politely let me know about my mute button, tell us a little bit about yourself.
Yeah, absolutely. So my name's John Arbuthnot. I'm the CEO of Delta 9 Cannabis here in Winnipeg. 3 main business groups under the Delta 9 Cannabis umbrella. Firstly, we're Health Canada licensed for cultivation, processing, extraction, and wholesale distribution across 6 provincial markets, touching upwards of 25 million Canadian consumers with Delta 9 branded cannabis flower, pre-rolls, kind of the full suite of consumer packaged cannabis products here in Canada. We're also a licensed retailer. We're currently operating 10 bricks and mortar retail stores, as well as online across 3 provincial markets, and expanding our retail store chain up to 20 stores this calendar year. And we operate a business-to-business segment. We sell our proprietary growing equipment. We provide consulting and licensing services to other licensed and pre-licensed cannabis businesses. Shares trade on the main board Toronto Stock Exchange under the symbol DN.
Terrific. Welcome to the panel. And last but not least, Joel, welcome. First of all, it looks like there's some sort of fire going on behind you. So hopefully there's either it's the steam coming off the grass or you need to evacuate immediately. But welcome.
Yeah, thanks, Jonathan. I'm a little north of you. I'm here in Vancouver, BC. You can see outside the window. I'm working from home, obviously for COVID reasons, but it's a beautiful, clear, sunny day here in Vancouver, but it's cold outside. In fact, we had snow on the ground yesterday. So I think what you're seeing is the venting from my heating system here.
Right. Okay.
For my right shoulder there. So
either that or somebody's enjoying a bong outside.
Could be that as well. Well, thank you so much for having me. I'm the CEO of Christina Lake Cannabis. And Christina Lake is where our facility, which is one of the largest outdoor grow facilities in all of Canada, is located. It's in south central British Columbia, just above the U.S. border. And we started about 2.5 years ago, and we built out a world-class facility where we have a 35-acre property where we're growing cannabis outdoors. We also have a indoor cultivation building, and we have a purpose-built processing and extraction facility that we built at the site. So we turned in our first crop this past year. Had a very, very successful crop, generated around 35,000 kilos of cannabis biomass, and we've been turning that into oils and distillates for sale within the Canadian marketplace. So the company is listed here in Canada under the symbol C, under the CSE under the symbol CLC, and it's also listed in the US on the OTC under the symbol CLCFF, John.
Great. Well, welcome to the panel. Let's, before we dive into this topic of cost cutting and consolidation, let's talk about this past year, 2020, what you guys witnessed in the Canadian market. I just got a news alert that actually sales were up 120% in Canada in 2020. So despite all that was happening in the world, the Canadian cannabis market seems to be flourishing. What is your take on the market in Canada this past year?
Maybe I'll lead that off, John.
Sure, John.
From our side and kind of participating in multiple verticals here in Canada. I mean, we were fortunate when things really started to get scary last March. We learned, quite early on from multiple levels of government that our operations would be considered essential for cultivation, for retail, et cetera. So I would consider ourselves quite fortunate that, there haven't been government mandated shutdowns of facilities and things like that, which for cannabis to have gone from illegal to essential here in Canada and within the scope of a few years, I think is quite remarkable. But, to then see the continued acceleration of the market, as you mentioned, I think retail sales have been up almost month over month throughout all of 2020 in terms of the figure stats tracked by Stats Can. So, we're seeing more people now in the Canadian market starting to participate in legal cannabis, moving away from the black market. I think there's been a lot of positive takeaways from that. Obvious challenges come with running your operations through COVID. I mean, physical distancing in production spaces and processing areas, retail stores, installing plexiglass barriers and hand sanitizer and, taking all those steps to keep customers and staff safe through all of that. So it has certainly not come without challenges, but again, consider ourselves fortunate that we've been able to operate through all this and continue to grow.
Mike, what did you see over the past year over at Slang Worldwide?
Yeah, I mean, I echo a lot of what John said. I mean, we obviously had a little thing called COVID happen in 2020, which,
Wait, what's that?
Yeah. It impacted things similarly, like John said. But, on top of that, 2018, 2019, you saw, a lot of money raised, a lot of money come into the space, a lot of companies go public. That obviously slowed pretty dramatically in 2020. The capital markets tightened, and it was a year where, I think a lot of companies had to take a step back and look at what assets they'd either built or had acquired over the course of the last couple of years and try to make the best of kind of what they had for the period. And that's what, specifically AgriFarm, who operates in Canada. I mean, that's what we did at AgriFarm. We were positioned, don't have the same, not quite as much space as Joel has, but AgriFarm sits on 20 acres. Also got an outdoor cultivation license in 2019, and that allowed us to, significantly, decrease our raw material costs in 2020, which was extremely helpful. Also, AgriFarm hasn't taken any new debt or equity in since 2017, so we really had to rely on the scrappiness of the sales team and leveraging partnerships. And one of the things we did was that we were able to do is through the Slang network, AgriFarm was able to leverage the inside sales team of Slang, which is essentially a team set up to drive sales to retail. And we felt that was a great competitive advantage for us in order, to be able to get products on shelves in Canada. So, a great example of that is our Firefly Mini, which basically went from a standing start in December to being a top 5 disposable vape pen now. So, being able to leverage the assets that we have, the team that we have, and partnerships allowed us to, fight through a pretty difficult year.
Joel, do you echo some of these observations? You've similar experience?
I certainly do, John. I think John and Mike both, point out a lot of the dynamics that we've seen within the industry. I mean, if you look back over the last 2 or 3 years since legalization in Canada, you had, just a massive rocket ship initially with cannabis companies, and then of course the hangover that came with it, and a correction and a downward spiral for a period of time. We missed that. We were in construction. We weren't yet public, so we missed a lot of that phase. I think our timing has been very fortunate in the sense that our facility has been complete. We've started to produce product, and we've listed our shares all within the last 6 months. So we missed some of that pain and some of the tough learning curve that was there. The two things that we've been really focused on and watching within the Canadian landscape are, and John touched on it, which was the black market. That's been a difficult situation in Canada. On one hand, you have the licensed producers like the three of us who are trying to do it in a highly regulated, legalized environment with all the additional costs that come with that. And you have another industry that exists in the periphery where they don't have those costs and they don't have those regulations. And you've got to compete head to head with them. So that was a challenge. I'll come back to that in a moment. Second thing is lack of distribution of retail outlets, which John touched on as well. The government was quick in licensing production, but it was much slower in licensing distribution. And the government, through Health Canada, which governs the cannabis industry in Canada, has since recognized that. They've begun to really accelerate the openings in Ontario and Quebec, the two largest provinces in Canada. And that's really starting to filter through and having a positive impact in terms of access for customers, particularly on the recreational side, to products. So that's helping to alleviate some of the bottlenecks in the industry. And then going back to the first problem, which was the black market. One of the advantages that we have with Christina Lake Cannabis is that by being one of the lowest cost producers in Canada, in fact, our costs are typically about 10 to 20% of what an indoor producer or greenhouse producer would be producing at. So very, very low cost. Not only are we cheaper than them, but we're also considerably cheaper than the black market because, of course, the black market can't grow outdoors on large scale the way we're able to do that. So, we've been very fortunate and successful in being able to offset some of those challenges.
Let's talk about, what happens in Canada so much predicts what's going to happen in the rest of the world. And you guys were so quick, have been one of the pioneers in legalization. But with that, we've seen a lot of changes, cost cutting, after sort of the ebullience of excitement of legalization, companies across the sector have been forced to do some cost cutting. And I would love, John, to start with you. What is your take on that, on cost cutting in the industry?
No, certainly. And I think things have really come full circle. And, to expand on Mike's point from the last question, I think COVID really, accelerated that focus toward, rationalizing cost structure and where capital markets may not necessarily be immediately available to companies, figuring out how do we create a profitable business with the asset base that we have and really demonstrate a responsibility for shareholders. But, for us, I think this process started at Delta 9, immediately in the wake of legalization. There was real get it done attitude before legalization. I mean, if you need to open a store on a fixed date for October 17th, 2018, you throw every resource you have at it, and marketing and advertising for that launch, and getting facilities ramped up, and building supply chains, and all of those components. There was an amazing effort, I think, across the sector and the teams at respective LPs and retailers to ramp things up over the last few years. And now with the dust settling on the first inning here in Canada, it's time to take that look in the mirror. Again, I would say COVID has accelerated that, but now companies really taking a hard look at SG&A. really taking a hard look at things like cost per gram or key performance indicators in retail, like wages and salaries as percentage of revenues, things like that. So you're starting to dial in those factors that are ultimately going to drive competition. They're going to drive prices down. And I think what investors are wanting to see in the second inning and beyond is demonstrated profitability from the Canadian market, that this has been the quickest market to evolve in terms of a G20 nation toward federal legalization. Can there be profitable businesses built? Can we displace black market, to Joel's point, based on cost competition and the competitive factors in terms of product development and value propositions? So I think cost cutting, across the board, it's played a main part of the narrative for a lot of major and all the way up and down the ladder in terms of market cap for companies in the space. But I think will continue to be important moving forward as you now start to see other international markets start to seriously pursue legalization.
Mike, what's your take on the cost cutting across the Canadian market?
Yeah, I mean, I echo what John says as well too. I mean, if you haven't been focusing on profitability, for the last couple of years, you're going to be left behind. You've got to get to that point of being able to show, your shareholder base that there's going to be return on their dollars. So, and we have I'm sure like the rest of the guys on the panel, we try to run a pretty lean organization in terms of OpEx. And, we have just functional things. We have a, systematic process on a quarterly basis to review all costs and vendor relationships to make sure that we're, running, as lean as possible. But, in particular, a couple of things that we've done that were pretty helpful in 2020, which once again, it's necessity kind of breeds innovation, and COVID accelerated that, I would say, to be creative in looking at where you can generate some cost savings. A couple of our biggest expenses, hydro, a portion of our production is indoor. So hydro is a big expense for us. We worked with an energy consultant, and through them, we were able to access some credits that we previously hadn't. And it turned out to be a pretty sizable refund for us, which was a great initiative. And we also put an energy plan in place, which is creating cost savings on the hydro front on an annual basis of over $100,000. So, just a great win ultimately for the company utilizing, that consultant. And another thing is our team. People make a company, and we invested in our team. And when I say that, what I mean is we cross-trained a lot of our staff, and we created that competency to be proficient in a number of different areas of the business. And that for us created a lot of efficiency, whether it be just scheduling, but more importantly, having that, ability to have cross ownership of functionality in different aspects of the business ultimately results in a cost savings in terms of, the human capital deployed. So, our team is a huge part of what we do, and we invested in them. So, those are two specific things that were wins for us.
Yeah. Joel, similar experience? I mean, what have you guys had to do in terms of cost cutting? As we know, it's something that it's a reality for every company now. There's no shame in it.
Yeah, being a late entry into the marketplace, Jonathan, we were fairly lean when we started. We didn't have the benefit of the heady days where cannabis companies were living high on the hog. So we recognized that we had to be pretty lean when we started. I've been involved with Christina Lake Cannabis now for 2.5 years, and I've never taken a single paycheck. All my pay has been through equity, and that's the case with my senior management team. We take our pay in equity so that we're aligned with our shareholders, and that's one of the considerations we've done for trying to maintain our costs and keep our costs lean. The other things that we've done, we've really tried to strive to introduce technology where we can use technology to automate what is, still farming. And an example of that was that we were finding that trying to monitor 25,000 plants, individual plants over 25 acres is, daunting at best, and requires a lot of man hours, literally hundreds and hundreds of thousands of man hours going out, checking plants, making sure they're well watered and so on. So we went searching for technology. We found a very innovative drone technology out of China that we brought over to Canada. And if you can imagine this, out in the middle of our field, we have a little airport with a little tower, and it controls 3 or 4 drones that basically fly our property when we're cultivating. And it takes thermal images and can determine if there are sections of the field that are under duress, not getting enough water, getting too much water, not getting enough nutrition, getting too much nutrition, under attack by pests, that type of thing. So that helped to significantly lower our costs. Right now in our extraction building, we're introducing a very leading edge technology that we've been beta testing with a company called Vitalis that makes extraction equipment that is going to almost 3-fold increase our throughput on our CO2 extractors. So dramatically increases the volume output of our end product. So those types of things we've been doing to try and lower our costs and keep very, very competitive.
Well, shift to another trend that we're seeing, and that is the consolidation and M&A across the Canadian market. Wonder, John, we'll start with you again. Your take on it, sort of the challenges, both the benefits and the challenges of a consolidation in the market. If you could share your thoughts on that.
Yeah, consolidation, and we've been speaking to this for over the last 12 months. We see it as very essential, and particularly in the Canadian space. As we all know, there was an explosion in the number of companies participating in the space, and that overall sense that this would ultimately be the green rush here in Canada. And as much as we're very bullish on the opportunities for profitability, et cetera, in the Canadian space, that explosion in the number of companies and competitors has created challenges. In terms of the number of publicly traded companies here in Canada, I think there's still over 200 operating in the space, and this is call it a $10 billion a year in annualized revenue run rate industry. So for any industry, that's a large number of publicly traded companies, and not to mention all the private entities within the space. So, I think in the context even of our previous comments around cost cutting, you look at consolidation then as an opportunity towards building scale, getting to a size for these companies that you're able to do things that smaller players just are not. We have taken some first steps in 2020 in terms of retail acquisitions. We added actually 5 stores, so we more than doubled our store count from 4 to 9 over the last calendar year. 3 of those store openings were acquisition based. I see a huge opportunity for a roll up in retail assets in terms of quickly expanding our retail chain through acquisition. And as a retailer builds scale, that builds, again, more opportunity to work with producers and manufacturers to build shelf space awareness, to build that promotional presence, and again, to build scale to a point where profitability becomes that much easier. So we see consolidation as an opportunity. We see it as essential. I think that combination of cost cutting and consolidation will be key in terms of the next phase of growth for the cannabis marketplace. And then you speak to challenges. It's valuations can be a challenge. Bringing in different management teams working together can be a challenge. Alignment of interests between shareholders of different companies, and what's the overall capital structure. I mean, you could almost foresee there's endless opportunity here for consolidation and almost endless challenges. But we are starting to see momentum in that now, whether it's Hexo, Zenabis more recently, Afria, Tilray, High Tide, Meta. You're starting to see that consolidation happen. And I think it may not be a wave. It'll be a continuing beat of the drum, if you will, of consolidation moving forward in the space.
So we have 5 minutes left. I want to give Mike and Joel a chance to weigh in on consolidation, really, and also your predictions for kind of what you see happening in 2021 and beyond in the market here. Mike, we'll start with you.
Yeah. I wanted to just jump in quick, and Joel, the drone technology sounds incredible.
Very cool.
Yeah. I mean, I think in terms of consolidation, I think We haven't seen this, yet in Canada quite to the same degree that we've seen in other markets. But like John pointed to, I mean, you're seeing, snippets of that starting, and I think that drumbeat is going to continue to push forward. Hexo acquiring Zenabis, a few big transactions as of late as well. So, I think we will continue to see that. Some of the challenges, I think. There's been, from raising funds and growing quickly, there's, unique financing structures that exist in the marketplace right now. There's also, the balance sheet for some companies are not that clean. There's, there's convertible debt. There's, some interesting things there. So, there's things like that need to be solved for in terms of cleaning up balance sheets before I think some companies will ultimately be able to be consolidated and will be good targets. So a lot of that, largely revolves around cleaning up the balance sheet, whether that be assets or equity. And similarly, the funds that were raised a lot of times were put into some pretty big assets, whether it be cultivation or greenhouses, for example. And some of those assets are now redundant. So consolidating performing assets is hard. Consolidating redundant assets is even more difficult. So I think, those will be some of the challenges that need to be overcome. And I'll I guess, stop there and pass it off to Joel. Yeah.
Joel, you get the last word here. Predictions for 2021. What is your drone's eye view of the market?
Good stuff. I'll just touch very, very briefly on consolidation. I mean, our story is kind of a natural outdoor sun-grown product. No pesticides, no insecticides, a very, very clean product. That's basically our story. So what we've done is we've tried to identify acquisition candidates that are consistent with that story. We've been in discussions, for example, with some companies that are in the food products business. They're putting cannabis THC into food products and they're looking for a supplier. So we've been in discussions with them because, they have the same, the same mantra, the same values as our company. So that's really driven our consolidation view and acquisition view of what we've been up to, Jonathan. And as far as, going forward, boy, what's I think really going to be the big game changer here over the next number of months is going to be legalization in the US and what that means vis-a-vis Canada. We've been positioning ourselves to take advantage of that, whether we do that by ultimately selling product into the US when that opportunity avails itself, or whether we actually make a move into the US and duplicate what we've been doing in Canada, but do it in the US where we see obviously a much larger market and greater opportunities. So I think that's going to be really exciting and interesting to watch over the next 12 months.
Well, gentlemen, thank you so much for taking the time to share your wisdom with us and your outlook. And I wish you continued success with your various endeavors. And Elliot, I pass it back to you.
Thank you, Jonathan. Awesome panel, you guys. Great to hear from the Canadian side. We keep talking about Canadian versus US, and it's so nice to get a weighted voice here for Canadian companies. So again, thank you, Slang, Delta 9, Christina Lake, and the one and only Jonathan Small. We will talk to you guys soon.
Thanks so much, everyone.
Thanks, everyone.
All right, y'all. We are going to keep moving along. We have still an exciting day ahead. Abstrax, KushCo, HempFusion, GTI, LeafLink, tons of content to come on the Cool Kids track right here. Please like and subscribe. If you want to like and subscribe this channel, you will get updates on our upcoming conferences. Please also like and subscribe our main Benzinga channel. That is where the other track, we don't talk about them, but that's where that's happening. And you will get content every single day on how to invest, what to invest in, what our guys think is best, and they are awesome. So let's keep it moving. So excited to have Abstrax with us on talking about trusting in terpenes. If there's one thing I am undereducated in when it comes to the cannabis plant, which there are many things, but let's just talk about this one, it is terpenes. I'm super excited to hear what Abstrax is doing in the space. We have Max Kobe, CEO of Abstrax Technologies here. How are you, sir?
I'm doing great, guys. Thank you so much for having me. It's a pleasure to be here today.
Oh, we're pumped to have you, my friend. You are already sharing your screen. I don't even need to be here. I'm peacing out, Max. Throwing it to you.
All right, guys. Well, thank you so much for the time today. I'm Max Kobe, CEO and co-founder of Abstrax. We really appreciate the opportunity to be here to talk to you about terpenes and introduce our company, who is leading the charge in botanical terpene product formulations. We're a leading pioneer, supplier of terpene flavorings and ingredients with a focus on researching cannabis and botanically derived terpene formulations. Our passion is pioneering terpene-driven formulations that create unforgettable product experiences. And we're helping to shape the cannabis industry and to develop new and innovative product applications for consumer packaged goods. Now, I know a lot of you know what terpenes are, but I want to give you a quick overview. Terpenes are responsible for the way plants smell. Terpenes are also the key ingredients responsible for the complex flavor and aroma profiles that create cannabis, wine, and hop profiles. Terpenes are also used in plant medicines, perfumery, aromatherapy, as well as flavoring ingredients. Terpenes are the most functional flavorings and aroma compounds, and cannabis is actually the most abundant source of these valuable compounds throughout the plant kingdom. Terpenes are the key ingredients that allow manufacturers the ability to produce standardized product formulations that not only provide flavor and aroma, but also benefits for the mind and body that help create these consistent consumer experiences. We have been operating since 2018 and developing leading partnerships with some of the world's largest multi-state cannabis operators, CPG brands, and research companies. We're also in many cases the exclusive or primary supplier to many of these companies, including the largest distributors of cannabis goods like KushCo. We actually just recently renewed our partnership with KushCo. It's been an amazing partnership, and we continue to expand our distribution with companies like Greenfield, who's one of the largest alcohol suppliers in the nation. Our research and technology, proprietary formulations, and dedication to quality is what creates our wide scientific moat, product moat, and reputational moat, which is not easy to replicate without a significant amount of time, money, resource, and relationships invested. First, it starts with our specialized Type 7 manufacturing facility, which is conveniently located in Southern California, which allows us to study, extract, and optimize the highest quality cannabis and botanical product formulations. We then set up a separate food-grade manufacturing facility where we produce the highest quality flavor experiences without using any type of THC, and we're able to distribute these products to over 33 countries for our customers to use in their product applications. We have developed our R&D program utilizing state-of-the-art analytical technology. We have partnerships with leading cultivators in California. We've analyzed over 1,400 samples of the freshest, highest quality, and most popular cannabis strains available throughout the world. Our research has led to the identification of numerous new flavor compounds and ultimately the development of over 85 custom terpene testing standards, which enables unprecedented accuracy of testing, as well as the creation of superior formulations in an IP portfolio. To improve the speed of our research, we have developed our own custom software solutions, which speeds up the analytics and analysis, which finds the relationships in these strain formulations in seconds. All of this technology and research wouldn't be possible without an amazing team of PhD-led award-winning manufacturers, chemists, material scientists, and chemical engineers. This has allowed us to provide unparalleled and proprietary product formulations that have protectable IP along with patents pending. Finally, with our expansive library of ingredients, we have developed the gold standard for quality management systems, including ingredient purification, standardization, and quality testing, along with peer-reviewed research. At Abstrax, we are creating the highest testing standards for terpenes in the entire industry, utilizing multidimensional GC technology. We have developed a 3D metabolite fingerprint that is able to identify over 400 compounds in cannabis and other botanicals, which allows us the ability to quantify the flavor, aroma, and effects of botanical profiles quantitatively with a complete picture. rather than most other testing labs throughout the US, which are currently only testing for between 20 to 40 terpenes using the 1D GC technology shown in the picture here, using current industrial testing standards. At Abstrax, we're able to go beyond 1D into the second dimension and identify over 10 hidden compounds in a singular industrial testing standard using our technology. This would be like if you could only see the tallest building in front of you, and if you had a bird's eye view, then all of a sudden it would open up an entirely new perspective for you, which would allow you to see the entire city landscape. This is our 3D metabolite fingerprint. This is the type of exploratory research that has allowed us to quantify over 400 compounds in cannabis and hops, discover many of these new compounds, develop our own custom testing standards, and importantly, and most importantly, has really allowed us the ability to reproduce cannabis and botanical formulations with absolute precision. Our research and technology has created an enormous proprietary library of standardized terpene extracts, many of which are unique to Abstrax. We empower our clients to create proprietary formulations that are key ingredients in their products that are extremely sticky and improve the quality, safety, and margins for manufacturers. Our technology is not limited to cannabis. In fact, it is directly applicable to both hops and hemp. First, we select the optimal profile to be standardized. Then we select the input materials and extract or refine these base ingredients. We then refine all the additional botanically derived terpene isolates and aroma compounds to ultimately combine with the extract to optimize and create a targeted profile. And the last steps are to customize either the flavor, effects, or final application, including oil-soluble, water-soluble, or powderized delivery systems. This proprietary formulation process allows us to standardize cannabis, hops, and hemp extracts to be consistent, safe, and more effective. With over 400 natural compounds, it becomes challenging to standardize your ingredients found in cannabis, and it was of the utmost importance to us to ensure we're able to standardize every ingredient that goes through our manufacturing process. This would not be possible without a robust quality management system. We created the gold standard for quality in the terpene and cannabis industry that ensures all botanical isolates are steam distilled, molecularly purified, and of the highest purity, meaning they're organic compliant, kosher certified, and we test everything 3 times to meet the strictest standards for cannabis products, which is far beyond the requirements for food grade ingredients. We're ISO certified, HACCP certified, GMP certified at an FDA registered facility, and all of our products are kosher and organic compliant. Resulting from our research program was the first discovery of the gas, which according to Terpenes and Testing magazine was in Industry Insiders is revolutionizing the terpene and cannabis industries. Weedmaps then coined this discovery as the definition of what makes cannabis dank, which is the quintessential aroma of cannabis and what sets good cannabis apart from others. We were very fortunate last month to be voted from Business Insider as one of the hottest cannabis startups of 2021. And we have also won multiple industry awards for manufacturing and have many industry publications as well as peer-reviewed research. Abstrax terpene ingredients power many product applications beyond vape, including food and beverage, alcohol and beer, as well as personal care items. Abstrax has either been an exclusive or primary supplier to many of the world's largest cannabis companies, which are using Abstrax terpenes to help differentiate their vape product offerings. Terpenes are driving the enjoyment of both cannabis and beer. Terpenes in beer is worth $1 billion in the US alone for the microbrewing industry, for craft brew. Our technology developed for cannabis is directly applicable to beer to revolutionize the brewing process, not just adding flavor, but actually supplementing hop profiles to create more consistency. Our products improve the flavor, stability, and profits for brewers. Abstrax is providing the key ingredients required for alcohol and cannabis companies to work together. Flavorings and alcohol is an enormous segment of the market and a growing opportunity for Abstrax. Abstrax terpene profiles not only improve flavor, but also consistency, shelf stability, and allow more control over the flavoring that goes into the beverages. El Hempe was one of the first alcohol companies to create a terpene-infused mezcal and RTD line of beverages with Abstrax. Terpenes are not only provide benefits for both flavor and aroma, but they also create mood enhancing benefits in food and beverages. We're pioneering studies to help prove the efficacy through the gut that these do in fact impart benefits on the mind and body, including energy, focus, uplifting, and calming functional flavors. Cannabis is our roadmap to understand how these ingredients work. And through our proprietary emulsification process, we can provide not only oil-soluble terpenes, but also water-soluble terpenes and powdered terpenes for different types of food and beverage applications. Functional terpenes for aromas is an untapped segment of the market. We developed some amazing functional aromas for some brands, including Fifth and Root, which really allowed them to differentiate their products on the shelf to ultimately get into Ulta, Nordstrom's, Revolve, and Anthropologie. There's so many benefits to terpenes beyond flavor, including helping the skin to absorb cannabinoids, as well as skin hydration, and to help decrease inflammation. And now we continue to work on new applications for terpenes, including terpene-infused rolling papers, which is a way for cannabis companies to share the experience of this wonderful, amazing plant with the entire world without using any THC in their products. Today, we offer key ingredients that are used by some of the largest cannabis companies in the world and now emerging CPG brands that are looking to utilize terpenes in their products. We've developed different categories of products, including cannabis terpenes, flavored terpenes, isolated terpenes of the highest purity, food and beverage terpenes that are both TTB approved and water soluble, proprietary liquefiers that have proven safe for vaping, as well as terpene infused rolling papers and optimized cannabis derived extracts. Everybody needs terp testing in order to develop a consistent product formulation. So what we do is we focus on testing aroma, flavor, and effects. We develop customized product data sheets for our clients in order to optimize the quality of their products. We offer safety vape aerosol testing to ensure that the products that we create for our customers are safe and consistent throughout the vaping application. And we also assist our customers with degradation studies. All this allows us to create custom terpene formulations, functional flavoring aroma systems, and custom applications for our clients to really educate their customers on what these flavors and experiences are intended to do. We're really excited about the future of Abstrax in applying our technology for new applications, including the development of our hop terpene profiles, hemp terpene profiles, and optimized extracts, as well as AI-based functional terpene blends for food and beverage manufacturers. What sets Abstrax apart from the competition is simple. Abstrax is the only flavor house in the entire world that specializes in terpene and cannabis research. We are the only licensed manufacturer and research company located in the US today that can physically touch cannabis, partner with cultivators to understand the complexity of these aroma profiles. We've developed leading technology that's one of a kind in the US. We've innovated new custom product applications and provide custom formulation services to our customers. And we've developed the most robust and highest quality management system in the entire industry by developing our own set of terpene standards. Our existing footprint allows us to distribute our terpenes to over 33 different countries. About 10% of our business today comes from Canada, and we're currently benefiting from intrinsic growth in the US with our existing MSO clients, but really looking forward to the emerging markets like Mexico, UK, and Asia as well. Terpenes are a fast-growing segment of the global flavor and aroma industry. We are looking to be a supply chain disruptor by pioneering terpene research with cannabis and applying that to CPG applications. Terpenes were actually accounted for over 36% of the global aroma category, yet we know this much about terpenes today, and cannabis teaches us this much about those possible applications. A lot of those new discoveries we're making in cannabis are really going to allow us to pioneer new functional flavorings for the global aroma industry. Key activities driving our growth. So we own our niche of cannabis science. We're now transitioning that niche to hops, hemp, and outside the cannabis industry by developing new leading product applications for new specific markets like food and beverage applications, cosmetic applications, and flavor and fragrance applications. We're going to be benefiting this year from new MSOs and key accounts that we brought on last year that are going to provide us intrinsic growth through 2021. We brought on new distributors as well as renewing our partnership with Kush, which is going to bring over $1 million new business this year and over 400 new referrals. We have some amazing partnerships that we've set up with distributor partners, and we continue to focus on our channel expansion with dedicated internal sales resources, new terpene blends, infused products, and expanding our product offerings. We're going to continue to grow our catalog as well as our client base and improve our marketing to all the customers that we're not touching today. 2020 and 2021 is off to a great start, as you can see. We're still adding the headcount that we need. Key accounts and MSOs accounted for almost 25% of our business in Q1 of 2020. And then by Q4 of 2020, it grew to almost 45% with increasing average order values and repeat orders from existing clients added in Q3 and Q4. Our initial go-to-market strategy was an exclusive relationship with KushCo, which worked great. They're an amazing partner. They helped us get in front of all the largest MSOs. We all faced headwinds going into VapeGate in Q4, which allowed us the opportunity to really expand our sales efforts internally by adding on our own sales team and hiring on some additional sales and distributor resources. It was a blessing in disguise. We've been able to renew our partnership with Kush. They've been awesome to help us really expand the marketing and presence in the market. But we've also been able to bring on other companies like Greenfield, who are helping us to really penetrate CPG and alcohol space. Our client base is now broader in cannabis and starting to access CPG as well.
Hey, Max, we do have a couple questions, so I just want to let you know in case you want to get to those here in a second.
Absolutely. So we're already at, just want to showcase that we're already at 1.4 million in EBITDA in 2019. So with continued sales efforts, we're going to get right back there and beyond. We are tracking towards 10 million in revenue with larger CPG offerings, and we expect to really continue our growth as we develop our food and beverage applications, which are our largest clients. And finally, we're raising growth capital of 2.5 million at a $25 million valuation. And I welcome any questions that the group has today. Thank you so much.
Yeah, got tons here. Awesome presentation. Seems like you are a sleeping giant here, my friend. So, you know, from Richard, if we can probably just give succinct answers, I'll get to as many questions as I can here. You got tons. Who are currently your top 3 customers? Sounds like Kush might be one of them. How are they using what you're providing them, you know, in their impact in cannabis?
Sure. Actually, Slang that was on here before is one of our favorite clients. So they, you know, Curaleaf, Cresco, Columbia Care, all marquee clients of ours. They use our products to develop product formulations in their vape applications as well as their edible gummies. Other clients, including companies like Anheuser-Busch that are using our products to create flavorings in their beer applications.
Very nice. So another question, and perhaps a good follow-up to the multi-industry focus here. Why is there not a greater focus on cannabis-only derived terpenes? Is it the cost, or are there other reasons?
No, absolutely. So at our types of, what's unique again about Abstrax is we're the only one that can provide product development with cannabis-derived ingredients. We do offer cannabis-derived terpenes in California. There is a limitation to the restrictions to transportation, which is why we offer both products to our clients.
Fantastic. Is there a potential plan, I mean, after this raise for retail investors to get involved, AKA you want to give us a little hint on your strategy over the next couple of years?
You know, we're going to the moon. So
hey,
you know, we got some great partners, some amazing industry support, and you know, we're really looking forward to being a supply chain disruptor in the flavor and fragrance industry, and where that takes us, we're excited to see.
All right, Max, awesome to have you. You do have a few more questions, more on the operational and science side in our YouTube chat. I would love for you to hop in there and answer some of those, but it's been a pleasure listening to you, and I expect to see a lot more of Abstrax moving forward, my friend. This is awesome stuff.
Thanks everybody for your time today. I really appreciate it.
Beautiful. All right, Abstrax Tech, that is the CEO, Max Kobe. Thank you again for being here, sir. Awesome questions in the chat. Please keep asking. Honestly, that's how we get the best, I think, answers from these executives is getting the audience engaged. So let's keep moving. We talked about KushCo a little bit in the presentation for Abstrax. Let's hear from KushCo. Let's bring over Nick Kovacevic. I believe that is how you say his name. He will correct me if it is not. It is OTC.
Yes.
KSHB. Did I get it right, Nick?
You did. Yeah. We are Nick Kovacevic, OTC listed, KushCo Holdings. Symbol is KSHB. And I'm trying to update my background here too.
I like it. It's very what's the park in New York City down in Brooklyn? Oh my gosh, I can't. Yes, Coney Island.
Yeah,
yeah, we Coney Island.
I'm actually on the board of directors for the OC Fair. We had a board meeting yesterday, and I picked a heck of a time to join the board right when the pandemic hit.
I like it. It's very cool, man. Well, I'm going to let you take it away, and I will pop back in with questions here in about 10, 15 minutes.
Okay, sounds good. All right, so let me get my background going and
fun anecdote here. First time I met Nick was at Cannagather in New Jersey. And I think you were the most famous person there. I was trying to shake your hand because Patrick on track one was like, hey, say hi to Nick for me. I was like, I will. But I could never reach you.
Yeah, I remember that. That was like the height of it all. It was the first go around. Now we're back in the second go around, but we're doing it all virtually. So anyways, I'm gonna go with no background here.
Love it.
Okay, so I'm gonna share my screen and we'll start the presentation. Let's see. Which one it is.
Is there a website, Nick, just so we can go ahead and get that out there?
KushCo.com.
KushCo, that's KushCo.com. KushCo is a leader in cannabis for years. OTC, KSHB. Excited to have Nick with us, especially after one of your partners just got done presenting. I think that's pretty cool.
Yeah, I saw that Max Kobe over at Abstrax. He's fantastic, and I definitely highly recommend their terpenes. We do with our clients. So great company. Actually, having some issues here sharing my screen, unfortunately, but I think I got it figured out. Here we go.
Yeah, okay. There you go.
Now we're live after a short delay. So hi, welcome everyone. Thank you for tuning in for KushCo Holdings presentation. I'm the CEO, Nick Kovacevic. We've been around quite a while. We just celebrated our 10-year anniversary in the industry. So that was in December of last year. Not a lot of companies have been in the legal cannabis industry for 10 years. So we're proud of our history and our heritage. But we've continued to move forward as everyone knows, the industry is continuing to advance and change. It's a dynamic industry, and I think we've done a great job of trying to stay ahead of the curve and continue to evolve our business to match the changing dynamics within the broader industry. We are a premier provider of ancillary products, so we do not touch the plant. And that was an important thesis that we had when we started the business, with hopes of going public, which we did, and with hopes of listing on a major exchange, which is still in the works. We've sold over 1 billion units. We've sold a lot of product, and mostly in North America, but also around the globe. And recently, we refocused the business to align directly with MSOs and LPs and larger leading brands and operators. After the capital crunch that happened last year, we saw this group of customers much better positioned for the long run. And so we focused our efforts there where we think we're going to be able to derive the most return on investment. So looking at that 10-year history that I mentioned, goes back to 2010 when we founded the company. And we started really as a packaging company under the name Kush Bottles, started by selling generic pop top bottles. And, we grew the business into legal markets that were opening up like Washington and Colorado. We made an acquisition, a few acquisitions along the way. First one was to get into the vape sector. The next major one was to get into the energy category, butane and propane and ethanol. And you'll learn more about that later. And recently we acquired a 19.9% interest stake in Excess Financial, does equipment financing for companies looking to purchase extraction equipment. Our vision is to be the most trusted partner serving the legal cannabis ecosystem. And I think you'll find that we've done a great job of building a strong reputation in the industry as a trusted partner. And we are still, of course, on the mission to expand our offering across the entire ecosystem. And what is that ecosystem today? Really, cannabis and CBD, both medical and adult use, mostly North America. So that's what we've highlighted here. We have 37 US states that have legalized for either. We've got 91% of Americans in favor of legalizing either medical or adult use. And we're seeing the economic benefit, 320,000 jobs created from this industry and so many more coming. And that's what's really driving the policy change. We've now seen states like Arizona roll out their program in record time. New Jersey both voted in November. And we've got governors in states like New York and Virginia, Pennsylvania, Connecticut, Maryland, all pushing toward legalizing cannabis in their states. So it's never been, we've never seen this much momentum, both at the state level and at the federal level with Democrats in control. Leader Schumer, this is a top priority item for this Congress to take on, and we hope to see federal cannabis reform happen during 2021. And a lot of this is just existing market, converting the illicit market to the legal market. When that happens, you'll see this growth. These numbers, in my opinion, don't factor in much of new consumption, right? Consumers that never have tried cannabis, that have used alcohol, that have used other substances, that might benefit from cannabis, where you don't have a hangover, where you don't have calories being consumed, depending on the type of product you're consuming. So my expectation is these numbers can be even larger if we start to destigmatize cannabis even more, and we start to educate the public on this as an alternative to something else. So this is our business at a high level. We've got packaging, paper, and supply. So originally our core focus, still a big part of our business and growing. We're one of the leaders in selling vape hardware. We're partnered with C-Cell, who is owned by a parent company, S'more, now a $50 billion publicly traded company in Hong Kong, with so many resources to be able to continue to innovate and continue to stay ahead of the curve when it comes to vape technology. So we're really excited about that partnership and being able to offer the highest quality, most innovative, most reliable devices on the market to our large MSO, LP, and leading brand customers. And then, of course, our energy division, and what's pictured here is our stainless steel tank. We looked at the market. We saw that everybody was putting ultra high butane, ultra high purity butane into a carbon steel tank, which can chip and flake and erode. And this was creating a scenario where you'd actually have impurities showing up in your finished goods, whether it's your oil or your concentrates. Well, an easy way to eliminate that was to change the vessel that carries those solvents from carbon steel to stainless steel. And we were able to do that with a partnership with Worthington Industries. And we just launched these stainless steel tanks into the market. They're being gobbled up. Everybody that accesses these tanks does it via a signed contract for a minimum of 6 months, but mostly for 12 months. So we have now over 25 of those contracts signed, and we expect to have over 100 by the end of the fiscal year. So really locking in our clients with innovation and building defensible moats around future competition. We also offer CBD services. Obviously, CBD retail is slow, but that's okay. We landed a large deal with United Pacific, one of the biggest deals announced in recent months, and that was 350 gas station convenience stores that are now stocked with a range of brands, most of which who we represent, that have wellness centers set up in these convenience stores. And we're seeing sales of CBD now happening every day in these stores. And KushCo is getting a small percentage of that for brokering the deal. This division is profitable for us because it doesn't tie up any cash, and we just collect the fee from the work that we do. And as I mentioned, we have a 19.5 now, been diluted a little bit, stake in Excess Financial. We really believe in their business. Phenomenal operators, setting up equipment financing lines of credit with a lot of the largest leading players out there and financing their growth as they need more equipment. Excess is their partner to help solve that. And we have a partnership that also allows us to cross-sell. Obviously, anybody buying extraction equipment is going to need butane, propane, ethanol. They're going to need vape pens. They're going to need packaging. So look at the mix shift. Really, these are three main buckets. We see, vaporizer revenue is higher by percentage, about 2/3 of our business, whereas packaging is higher in volume, but it's a lower price item. Obviously, a cartridge versus a jar, it's a big price discrepancy there. So we're selling more volume of packaging, and it's growing as a overall number within our portfolio. And then energy and natural products is always going to be a smaller subset, but it's a nice reoccurring revenue, high margin business, especially when we have something unique like our stainless steel tanks that we're offering. And one of the most important pillars of our business is our customer service and our customer relationships. And we're very proud to be able to put out a survey to our customers. And here's what they said. They love the in-person touch. They love that we have the ability to scale with their business. That's becoming a bigger and bigger focus as these MSOs are getting so large. The supply chain is critical. It can't go down. And so we're the trusted partner that many of the MSOs are turning to ensure that their supply chain works, and it works at the scale, not only that they're at today, but where they're going tomorrow. And we all know these MSOs are growing at a very fast clip, and they're even doing acquisitions to further accelerate that growth. People love our one-stop shop portfolio, the ability to offer a variety of various options, whether it's packaging within the packaging bucket, paper, supplies, or across the three buckets. We can sell them the butane that they need to produce the oil, the vape cartridge that they use to put the oil into, and the child-resistant package that goes around the vape cartridge with the label that goes on top so that they can go to market compliantly. Now we'll dive into the financial overview. So this is our report from fiscal Q1 2021. Our Q1 started in September. So this is September, October, and November. Typically a slower quarter for us, yet we were still able to achieve growth from the prior quarter. And the growth was tempered a little bit because of the global freight headwinds that are affecting every company, not just us. There's container ships lined up in the port right here in the Port of Long Beach. Last time I counted, there was 15 to 20 boats still sitting out there waiting to get unloaded at the dock. So this led to some orders being pushed into December, which led to a record December in company history of 14.7 million in sales. And we were expecting those headwinds to go away. They're still existing, but nonetheless, we're able to find ways to get product to our clients on time and continue to be that trusted partner that can deliver. We also announced that we secured a long-term supply contract with one of the top 5 largest publicly traded MSOs. 4 of these types of contracts in total, with more coming. 20 stainless steel tanks. That number's already much higher. I said 25, it's probably in the 30s. And we were able to achieve gross margins over 20% for the 7th consecutive quarter on a non-GAAP basis. We're keeping cash SG&A very low. We've been focused on managing our costs, controlling what we can control, and that's led to positive adjusted EBITDA now for the 2nd straight quarter in a row. So we were pleased to achieve positive adjusted EBITDA for the first time in 3 years during our fiscal 2020 Q4. And we also achieved positive cash flow in that quarter, and then followed it up with positive adjusted EBITDA again here in fiscal Q1 2021. But we did not have positive cash flow because we were bulking up on inventory for Chinese New Year. So it's, I think the previous presenter, my friend Max, notably called out VapeGate. The vape crisis did affect our business. It forced, for the first time really in company history, a declining year in sales. We've never had that. We've always been a growth company. But during that year, we really fixed the business. We cut a lot of costs. We cut over 50% of the costs out of the business. We really got focused on the right areas, and we turned the business around, and we got it profitable with the right clientele. Again, focused on the largest, most sound operators in the industry, the companies that are going to be growing much faster than the rest of the industry over the foreseeable future. So it's a great turnaround story, but it wasn't easy. Obviously, I'm proud of our team for what they were able to do. And we're showing our top 100 customers as a percentage of our revenue growing. And that's important because we're focused on fewer clients, but we're growing the business tremendously with those fewer clients. And now we're seeing the company back growing again. We grew from Q3 to Q4. We grew again from Q4 to Q1, and we're forecasted and guided to grow again from Q1 to Q2, which we're finishing up at the end. Actually, today is the last day of our fiscal Q2. So it's great to have the business back growing again, but doing it in a profitable manner from an EBITDA standpoint. We do break out revenue by geo. An important takeaway here is that our revenue is starting to match and mirror more of where the MSOs are based. Historically, we've had a lot of sales in California, but a lot of the MSOs aren't investing in the California market. And so our revenue has shifted more over to medical states, where we see a lot of MSOs invested: Florida, Maryland, Pennsylvania, New Jersey. Also Canada, we're seeing some good growth in that market as we're focused on the LPs. And we still expect overall year-over-year growth in the legacy markets, but we can't look at this as much on a quarter-to-quarter basis, as we have larger clients, and so sometimes orders shift out of different periods. So we're going to look at this internally more on a 6-month basis and make sure that we're on pace to grow in all the markets to the best of our ability, notwithstanding things that are out of our control. We know that Massachusetts shut down dispensaries when COVID first hit. We know that Canada right now is pretty locked down due to COVID. Nevada, suffered really hard with COVID, which is why you see it up here. So there are some things within our control, some things outside of our control. But the important thing is we're focused on controlling what we can control and aligning ourselves with the best-in-class operators, and the rest should take care of itself over the long haul. And then we show our revenue breakout by category. As I mentioned, our packaging business is growing, up 9%, when the total business was only up 1%. So that's great to see. We continue to be a leader in vape. And with our new stainless steel tanks, we expect big things out of our energy and natural products bucket. Services, small revenue, but again, meaningful because it's all 100% gross margin, so it's profitable. This is our P&L income statement snapshot. So as you can see, year over year, even though we had more revenue last fiscal year in Q1 at 35 million, we had significantly less or significantly more costs associated with that revenue at 15.5 in cash SG&A, which led to an adjusted EBITDA loss So with less revenue, we were able to move adjusted EBITDA from red to black. And that just shows you what this business can do as we get the revenue growth back. As I mentioned, we're back growing. So when you see the revenue start to tick up, it won't come with the same level of costs that it has in the past. Our business, it can recognize a lot of efficiencies and economies of scale as we grow sales, and a lot of our fixed costs are truly fixed. Probably about 85 to 90% are fixed. So as we scale, we'll add incremental costs with headcount and things like that. But you'll see that leverage show up in terms of the bottom line results. So we're excited to really get this business to the scale that it should. And we've told people that as we get to that, 250 million in revenue, this business starts to see a double-digit EBITDA on the bottom line. Second quarter of positive adjusted EBITDA, as I mentioned. So this is the trend that you're seeing here. Went from losing 6.8 million in Q1, did some write-downs in Q2, but on an adjusted basis, we lost 5.7 million, and then 2.7, and then crossing over that inflection point, getting to profitability in Q4. And here's our balance sheet snapshot. This does not take into account our recent equity raise. So we just raised $40 million last weekend, announced it on Monday. The deal closed on Wednesday. This was an incredible capital raise for us. It was the best terms that we've gotten as a company in terms of discount. It was a 6% discount to market. It was less warrants than we've issued on previous registered direct offerings. We were at 40% warrant coverage. We were 3 times oversubscribed. So we had over $120 million of investment dollars that wanted to come into our deal. We closed at 40 million. And this was a mix of legacy funds that have supported the company historically, but more importantly, arguably more importantly, it also included a wide range of really high quality long funds that want to support the company for years to come.
Hey, Nick, we do have a question in the chat if you would like to address that, but not sure if you want to leave us with a final thought on your presentation first.
Sure. I'll just finish this really quick and then we can address it. So this is our revenue guidance for the fiscal year, 130 to 160, and guiding to positive adjusted EBITDA to the tune of 5 to 7 million. Again, we're just finishing our Q2, so we're about halfway through our fiscal year. So keep that in mind. This is our management team. It's all available at KushCo.com. You can check out our leadership team. Great mix of entrepreneurial zeal with seasoned executive experience, folks with 20 plus years experience at large corporations like Nike, GE, Nestle. So it's a good mix. And again, I'll leave this slide on our investment. Oh, I want to get to one more slide. So investment highlights, I'll skip that. And I want to show the valuation versus our peer group, because I think this is the most compelling thing. And one of the reasons that our recent equity raise was 3 times oversubscribed. People are seeing that KushCo is undervalued, especially when you look at NASDAQ listed peers. These companies are similar in that they don't touch the plant, similar margin profile, maybe outside of Akerna. And these are the revenue multiples that they're getting, price to sales multiples compared to KushCo. As you can see, we're at the very low end. And if we, got a fraction of the increased multiple that they got, we could be looking at doubling the stock here in the near term. We believe one of the main things that could help that is an uplist to a major exchange, which is something that we've been working on, but we're optimistic will happen this year. Okay, now I'll flip back to the investment highlights while I take questions. So what's the first question?
Yeah, we have a question. It's a few questions, but I think it could all kind of be addressed here by you in one answer. Touching on ESG. So we had some questions about environmental sustainability, and if KushCo is doing anything to adjust any chemical usage or toxic water runoffs, et cetera. And then we also have some questions about diversity of board members. So ESG just in general, I think on KushCo's direction in the next year.
Yeah, no, great question. It's a big focus of the company. We actually have a whole webpage dedicated. Go to KushCo.com. I forget the link itself, but you'll be able to see it on there. And it also talks about CSR. We're doing a lot across all fronts on ESG. I mean, environmental. Obviously, we're a packaging company, so the big focus is going to be on launching more environmentally friendly packaging options. There are some misnomers out there. People think that things like biodegradable are more eco-friendly 100% of the time. It's actually not true. The reason being is it takes a lot of energy to produce a product, and when you're biodegrading it, then you have to use the same amount of energy again to make that product the second time. Whereas with recyclable products, you recycle those goods and you need far less energy to now remake them. Our country is also not really set up to compost. So compostable is great, but we don't have a setup for that. We're better set up for recycling, but there needs to be a blended approach, which we're taking. We have compostable products that we offer. We have products that are recyclable. The vast majority are recyclable. We try to lean toward glass products. So we're doing what we can from the environmental standpoint. We're also trying to move some of the production domestically. We do have production domestically and in North America, so that we're avoiding a lot of the environmental impact of shipping these goods across the Pacific Ocean. And when it comes to social responsibility, the company is invested in multiple areas, one of which is Mission Green, helping, led by Weldon Angelos, helping people get out of prison that were put in for cannabis. Also, we just donated over 100,000 books to children, and we were down at the downtown in LA handing out hygiene kits to homeless folks. So we've got several initiatives, again, all on our website at KushCo.com. And then when it comes to governance, look, we have great corporate governance. We've got independent board, we've got committees. The one area that we've called out that we're lacking and we'd like to improve is adding more diversity to the board of directors. So great call out there. And that's something that we've already signaled that we're working on.
Fantastic. Awesome. Nick, it's been a pleasure to have you. Always happy to have our friends at KushCo here with us. Is there an email, if there are any further questions they can reach out to?
Yes, there is. And I'll flip to that slide right now. Najim Mostamand is our Director of Investor Relations. You know Najim. He's fantastic. He gets back to everybody, and please reach out. We want to engage with you. We're putting out a quick email every couple of weeks, kind of summarizing what's going on at the company. We've got press releases going out. I mean, a lot of information. This is really an exciting time to look at our company because of what we've gone through the last 18 months. It's been challenging, and we've gotten through it, and we're coming out the other side just stronger than ever. And so that's why there's so much interest right now from the institutional investor community. And we like to get the retail investor community updated on our progress as well. So thank you guys for giving us the platform. We're always pleased to come to these shows. You do a fantastic job, and thank you for bringing all these great companies together. We're proud to be a part of it.
Thank you so much, Nick. Really appreciate you being here. We will talk to you soon, my friend. Please do reach out, ir@kushco.com, Nick Kovacevic. Thanks again, man. All right. So real quick plug on the Benzinga side. If you like the content you're getting here, you can see it weekly. Benzinga Cannabis Hour. Can you cue me up, Madam Nicole?
Welcome to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
Oh, it was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
Is this new industry where now billions of dollars are being made.
We're here to bring cannabis into culture.
Awesome. I love doing this every week. We have awesome conversations, and I do encourage all of you on this channel to come back. You can ask me questions for these executives weekly. It is not just at this conference, and we will continue to do our best to make sure your voice is heard with these executives. Jeff, fabulous questions in our chat on YouTube. I'm sorry I couldn't get to all of them individually. I tried to succinctly get that there, but something that should definitely be discussed in more detail. So thank you again for asking us there. Let's move along, I think, to one of the more exciting companies in the CBD hemp world, HempFusion, listed on the OTC. They are CBDHF. They're also listed on TSC, CBD.U. And we have not Jason Mitchell. I apologize. Danny Brody is with us today.
Danny Brody's stepping in. Good, Elliot. How are you doing?
Good, man. Good. We're having a great day so far. Excited to hear what you all have going on at HempFusion. I'm going to let you take it away, my friend.
100%. Well, thank you for the quick intro. I'm going to get my screen shared here. And I think that should work. Perfect. All right. Welcome to the HempFusion corporate presentation, everyone. I'm Danny Brody. I'm the Chief Corporate Officer for the company. And today I'm going to tell you a little bit about what we are doing in as little time as I can, 15 minutes. So let's just jump right in. So we just went public a couple weeks ago, January 6th on the TSX. Our symbol is CBD.U. We now have a US symbol as well, CBDHF. And today's a big day for us. We just announced we got DTC eligibility. So for all the investors that are listening, that is massive news for the company. We are now able to electronically settle trades, which means that probably 99% of the US population can finally access our story, which hasn't been the case to date. We started with just a US clearing symbol. We've got an uplist to the OTCQX a couple weeks ago, and now we've got the kind of the pinnacle of liquidity coming in here for our US shareholders with that DTC eligibility. So anyway, let's jump ahead. HempFusion Wellness, we are the future of health and wellness. This is a completely integrated CBD company. And yeah, we're basically utilizing the power of whole food hemp nutrition. And we're doing it the right way. We started with a foundation based on compliance. I'm going to jump into what that is, why it's important, and what you need to know about. And next up here, we've got 4 brands, right? So we've got our HempFusion brand. We've got a really unique strategy with Probulin Probiotics. So that's a wholly owned brand that we have, all probiotics. It comes down to this Trojan horse strategy I'm going to tell you guys about that's really unique and interesting and differentiates us. Next up, we've got our doctor practitioner line. We've got Biome Research and HF Labs coming into play. So next up, I'm going to just run through these points very quickly here because it's a lot to take in. But like I said, compliance driven. This is the foundation for our company. This is the most important part of our company. And it's the reason me as an investor came into the company a couple of years ago, put my own dollars in. We brought a whole finance team that helped finance HempFusion. We raised $59 million for the company. And it all stems from this basis on compliance, right? We didn't want to take any risks with our money. So that being said, we've got a very strong platform here. Like I said, regulatory compliance. It allows us entrance into these major markets like food and drug mass. That is the largest by dollar volume channel in the entire marketplace. So we want to be very focused on that. We've got products for that, which I'm going to come back to. And a really exciting story there. So next up, we've got a proprietary product portfolio. We now have 48 products on shelves today selling, and a whole wide variety of products. So I'm going to break down what those ones are in a second here. Research and development, a big aspect of the company for us. We always want to be pushing the R&D aspect of CBD, right? We want to be bettering the industry. We want to be completing clinical trials. We want to be doing all this research, finding the best products that the consumers want. And that's exactly what we're doing. We've got 5 revenue channels. So we've got our food and drug mass, which is the largest by dollar volume channel that there is. We've got the convenience channel that we're about to launch into with gummies. We have got the doctor practitioner channel. We've got the e-commerce channel, and we have the natural channel, which is where we started. So that being said, we are attacking these 5 channels very aggressively. And I think that's part of the reason investors seem to be responding well to our story. We've got a very strong management team, extensive leadership, extensive governance, extensive experience all around. And that is just so important when you're building a company like this, to have that foundation firmly established. Next up, international expansion. This is a huge differentiator for the company. We either have purchase orders or we're selling in 8 countries right now. So it's not just a US based story. We've expanded to India, we're in South Korea, we're in Mexico, Brazil, some other big ones that we are working on coming very soon as well. And a cash position. We had 13 million in cash at the end of September. We just did a 17 million US dollar IPO. That puts us close to that $30 million sort of number there. And we've got a very extensive retail shareholder base. So we had over 3,000 shareholders when we went public. And again, it all comes down to having shareholders that can go and buy the products, right? We want to have that crossover between products and shareholders, where you have shareholders that come to know to love the products and vice versa. It's this really unique synergy that we've seen happen. So next up, the domestic opportunity. So we've got our 5-channel strategy that I broke down. We've got the natural, we've got the food and drug mass, we've got the practitioner, the convenience, and e-commerce, of course. So very impressive and important to know all these different channels for us. And the fact is, I mean, everyone knows the market size, right? It's a big market. It's almost as big as the overall cannabis market, right? So 16 to 25 billion, depending on the market research firm that you read, but overall it's a very exciting market that we're targeting. And again, I want to hit on this compliance side, because this is what really establishes the firm foundation for the company to grow off. We've raised $59 million now. We've built this foundation. We've got all the products, and now we're scaling. So I just want to stress the importance of this, but with the FDA impending announcements coming for CBD, right? We're looking at all these different things. So IND preclusion exempt is a big one. We've got USDA certified organic products already on shelves. Again, a big differentiator there. We've got Ola Lessards, our Chief Marketing Officer. She is the first female that was elected as the president of the Hemp Roundtable, and she's the first 2-term president for the US Hemp Roundtable. So we're super proud of her. And that's a big one for us. We've got direct access to the entire US Hemp Roundtable, which is huge, of course. We're working on self-grass affirmation. We're part of the largest CBD study to date that's known. It's the Valid Care study for toxicology and liver health. We're working on our novel foods application for the UK. Again, you can see this on your screen here, but DNA verified industrial hemp is huge. NOAL for topicals. NDC numbers are big as well. So again, we try to do things the right way, not right away. So we want to take the time to do things right, and that's the foundation for this company. Again, I want to put this up on a screen here so you can see how it relates to some of our competitors, but we do rank very strong on that compliance side. Next page. So I mentioned products. We've got 48 products in shelves, but where are we selling them? Well, you can see it here on the screen. We're selling in Europa. We're on Amazon. We just launched an Amazon e-commerce store for Probulin. That's been doing incredibly well. We averaged almost a 7 or 8 to 1 ROAS, which for every dollar we spend on ad, we generate that $7 or $8 on revenue. So big numbers there. We're selling in Whole Foods, Fresh Time Market. We're in Publix. We're in all these different retailers, 4,000 across all the states. Next page, we are, okay, so food and drug mass. This is such a huge, important aspect for us. This is the largest dollar volume channel that there is. This is your Albertsons, your Kroger's, your Walmarts. So we have entered into one of these stores. We were in one of the top 5 largest FDM retailers now, national store. So look for more news on that. But this is where we want to focus. We've got products specifically for this, which I'm going to touch on in a second here. Convenience is the second large channel that we're going after. There's over 27,000 stores in our immediate pipeline that we're targeting. That's your 7-Elevens, your Circle K's, your Speedway stores, all these ones here that you can see on the screen. There's 152,000 convenience stores, right? So we're launching our specific gummy products, plant-based vegan gummies. That's the future. So we want to be in all these different stores, and we now have the products to do exactly that. Next up, the launch of Doctor Practitioner line. So again, this is a unique one for us in the sense that not many other companies have have targeted products specifically designed for this channel. But doctors and practitioners and chiropractors is such an incredible avenue for us because A, not many other people are doing it, but B, the retention and the rate, if you have a doctor prescribe you something, the chances of you using it are a lot higher than if you just go buy it in, say, a convenience store, right? So this is a very, very strong market for us. We've just launched this, so we're going to see how it goes. Obviously, COVID's been a bit of a headwind with this front because we're no longer seeing doctors are no longer seeing their patients as much in person, but still a huge market for us. We're going to see how that one goes. And e-commerce is a massive one for us too, right? We've got almost 96% of our sales are in stores, right? In stores. So the e-commerce switch is coming and it's coming fast. Next up, some of our products. We've got products specifically designed for sleep, specifically designed for stress, specifically designed for energy. So it's not just take a couple drops of CBD and see what happens. These are actual products designed for specific things. And I want to hit on this quickly here. So these are our FDA drug listed OTC over the counter topical products. One of our competitors was just bought for $100 million because of these products. And the fact is, this allows us entrance to that food and drug mass channel, right? These products took years to develop. They cost millions of dollars to develop. And the best part is they are completely proprietary for us, right? So these aren't white labeled products. Jason Mitchell, our CEO, has made over 300 products, and he's entirely responsible for the formulations behind these ones. Again, big differentiator, helps us establish a moat, helps us get more sales in the largest dollar volume channel that there is. Just making sure I'm not over on time. Okay, we are getting close, so I'm gonna just rip through this. OTC products, again, this is huge, guys. We are not just targeting the CBD market with these products. This is your global pain market, right? The largest market that there is. This is the eczema market, the aging and beauty market, right? This is wound care. These are products that are targeting massive, massive markets, not just the CBD market, which in of itself is already very large. Again, research. This is such an important aspect for us. We're part of this large valid care study on human safety and toxicology. This is in response to the FDA as well. So very important that we're really trying to lead this. We just announced a clinical trial last week on different cardiology markers. So things like that are just so important for us that we always want to be bettering the CBD industry as a whole. Provolone probiotics. Again, this is our Trojan horse strategy. This allows us to not only get into retailers in the States that aren't yet selling CBD products, but international that isn't yet accepting or allowed CBD products, right? We can get in the door, we can get all the relationships, we can get these probiotics in these stores and countries ahead of any CBD regulations unfolding, right? So this is massive for us. We can prove our products, we can prove our team and our abilities, right, to do all of this. And then the second that CBD is legalized or accepted in certain stores or countries, bam, we're already there. So very exciting for us, very exciting Trojan horse strategy. And that helps us get into all these new countries. Again, you see that here, the Trojan horse side of things. Let's come back. This is obviously an investor presentation. I want to hit on shareholders and share structure. We've got an incredibly clean structure, one of the best out there, in my opinion. And the fact is even with $59 million raised, we still have almost 50% of our company owned by founding members, insiders, directors, management, and strategic investors. So that's a big number. Again, a big differentiator. We also have 10,000 shareholders. So we went public with over 3,000 shareholders. We've had a whole lot of buying in the market. We went public at $1. We're now trading just under $3 in about 6 weeks. So a lot of shareholders coming in there, and a very clean structure. We've got our next batch of shares coming free trading on May 6th, the balance on July 6th. So we had some free trading on the IPO, some free trading in May, some in July. All of our warrants are staggered at 18 months. They're both tradable as well. So that really allows us a lot of runway before we're met with any shares really coming at us. So it's a very exciting, very well-structured company. Obviously, that's important for shareholders. And guys, we have the team to do it. Dr. Jason Mitchell's our CEO. Like I said, he's launched over 300 products when he was with Country Life Vitamins. He's launched all of our products now, all of our Provolone probiotics, which by the way, is the fastest growing US probiotics company out there. according to Spin's data. So again, massive for the company. We've got John Visser, Chief Revenue Officer, Ola Lessard, Chief Marketing Officer, head of the US Hemp Roundtable, Nancy Angelini, heading our doctor practitioner channel. You can see on the side here, we own every single relationship with all of the buyers at all these stores. So there's a lot of exciting things that we're working on as a company. Unparalleled financial team. Dave Doherty's raised over $630 million for cannabis companies. I've been right there with him. We've got Des Balakrishnan, probably the #1 securities lawyer in Canada. Bruce Valentine, CFO of the year. He took Otterbox up to $1 billion in revenue. And Gord Fox, who's incredibly talented, legal as well. Management team, I'll let you guys read about these guys on your own because I'm running out of time. But incredible team put together, incredible board of directors put together, and really just a very well-rounded team. That was one of the things that we really tried to bolster as we headed into our IPO. We really wanted to make sure we had that public market experience. We had CPG experience, we had e-commerce experience, we had all the different channel expertise to really drive this forward. And now that we've raised $59 million and laid that foundation, everything is really starting to come together to start scaling that company, to start scaling our company to 2021 and beyond. So I haven't read the chat, but I know it's 9:37 where I am. So I assume there's either some questions or I'm getting told to
Yes,
zip
sir.
it. So
I have a couple questions. One from the chat far earlier that I waited till you, just for you, Danny, to
nice.
answer.
Yes.
It's really, we heard in the panel yesterday from Deanie Elsner and from Jason, about the transparency of the CBD industry and what's needed there to take the next step forward. I don't think we really talked about lab results and labs specifically, and the part that they're playing and how efficient and accurate are those results if a company has them tested 20 times. Does that question make sense to you?
Yeah, that's a great question. And what I've seen in my experience is it's a new industry, right? It's a newly regulated industry. So there's going to be a curve that happens when people are testing different things. You're figuring out what to test for. So, in the early phases, like they talked about on the panel yesterday, there is, I think Deanie mentioned there was like 90% in the UK of products that didn't have what the label said it had in the product, right? It's just an insane number.
Yeah.
So, I mean, as the industry evolves, I would certainly hope, and I think we have a duty to ourselves to hold each other accountable, but that number needs to be accurate. That number cannot be misleading consumers, right? As a new industry, that would just be the worst thing ever, to have things advertised that weren't the reality. So to bring it back to your question on labs specifically, I mean, I'm not going to be able to tell you the specific answer. I'm not a lab tech or anything like that, but all I know is that having guys like Jason on our team that are doctors, that we have all these designations, we have all these memberships, we have all these things that we're doing to better the compliance of our company and the industry as a whole. It's getting better. It's for sure getting better. But I think that's an important question that, as the industry evolves, I would certainly hope that this evolves with it.
Yeah, I think we actually do have a question from the chat here from Tobias. Do you already have novel food status in the EU?
Great question, Tobias. We do not. However, we're in the process of filing that. So I know the deadline's March 31st. We want to be ahead of the curve with this. We're well on it, and you can expect some news from that, in the coming weeks.
Beautiful. Fantastic, Danny. We appreciate you being here. Tell Jason we missed the dude, but we were glad to have him yesterday. We missed the dude, but we have Danny
I'm
here
your dude
with us
today.
Hey, it was awesome, man. Great
Awesome.
presentation.
Thank you, Elliot.
Yeah, of course. All right. So that was, again, HempFusion, OTC listed, CBD HF, TSX listed, CBD.U. So let's keep moving. Honestly, I think one of the more exciting panels of the day, at least, is called Money Talks, led by Benzinga's own Spencer Israel, the producer of Pre-Market Prep. If you are a retail investor that follows Benzinga, you got to know this guy. He's the guy. He's an ETF lover, if there ever was one. Spencer, get your mic and camera on so we can see that beautiful mug.
I'm here. What's going on?
Oh, I feel like every time I see you, there's like one less cardboard cutout behind you. Where do they all go?
I move them away for the sake of today.
Consistency is key. No, I'm kidding. So this is an exciting panel. It is brought to you by MGO from their Cannabis Top 50. I'm sure we'll touch on that a little bit, but Spencer, I'm going to turn it over to you.
Great. Thank you very much, Elliot. So yeah, the name of this panel, Money Talks, Creative and Impactful Financial Strategies for Cannabis Companies. The impetus for this was that, look, financing, the state of financing in cannabis was already, shall we say, interesting. And that was before a pandemic hit. So we wanted to do, is we wanted to bring together a few people who have a window into this and ask them how they've navigated these waters. So with me now are representatives of two companies that are on MGO's Cannabis 50 list, which Elliot just mentioned. The list highlights companies that are moving the industry forward in some way. Doug Gordon is with me, I believe, or maybe he's not here yet. But we've got Jennifer Dooley, Chief Strategy Officer at Green Thumb Industries, of course, the MSO, and Sanjay Agarwal, who is a partner and tech services leader at MGO. And then if Doug Gordon hops on, I will intro him. Jennifer and Sanjay, welcome. Oh, wait, we're on mute. See if we can unmute you guys.
Hey there, can you hear me?
I hear you. How we doing?
Awesome. Really great. Thanks for having me.
And Sanjay, I believe we unmuted you as well. So we got you here. Excellent. Excellent. Sanjay, let's just start with you. Can you maybe just give, because you have more of a macro perspective on this industry. Can you maybe tell us how we got here? What is the state of financing right now in cannabis and sort of how we got to the point we're at, and then we'll get to the weeds a little bit.
Yeah, it's been an interesting ride in the cannabis industry, right? I mean, we had a period where business was booming, things were going very, very well. And then sure enough, the cannabis markets started to dry up. And after that, COVID-19 hit. So companies have been really strategic and creative in finding ways to raise capital. I mean, we all hear about the RTO transactions going public in Canada, and SPACs are the latest things now. SPACs are really popular. I think there's a certain confidentiality component to a SPAC where investors can invest in a shell company. They're not outright investing in the cannabis operating company yet, and then at a certain point, a transaction could be done with a cannabis operating company. So I think a lot of family offices are favoring, the SPAC transactions and like the level of confidentiality there, at least for a certain period of time. But I'll actually turn it over to Doug. I mean, I think Doug was going to take this session, right? So.
Doug Gordon, welcome. He is the Executive Vice President and Head of LeafLink Financial. Doug, I had asked Sanjay, and we'll throw it over to you now. Tell us how we got to this point when it comes to financing in cannabis, and what is the state of that market right now?
Yeah, sure. I apologize for being a few minutes late.
Okay.
So, the state of financing in cannabis right now, I would say it's gotten better, but it's all on a relative basis. So without banks playing in the space, it's very, very difficult for small and large operators to, find debt solutions that allow them to, better manage their business, better manage cash flow, do certain types of transactions. However, what I will say when I say it's gotten better is that larger operators have now been able to access the private debt markets in a much more deliberate way. Private commercial lenders are very active in the space. However, their expectations on the sophistication of operators is very, very high. So in terms of compliance, in terms of managing financials, managing tax strategies, their expectations are very, very high. So those types of options have only been really available to the largest operators in the space, while smaller operators are still, doing the best they can to best manage their cash flow without the traditional means of financing that are afforded to businesses outside of cannabis. And we've actually just started seeing banks start considering providing traditional products like working capital lines of credit. There's other solutions like LeafLink Financial, which I run, which are just trying to provide trade credit to the industry. So basic services that enable businesses to run better. But until banks are entering the space, the cost of capital remain very, very high for both large and small operators. And ultimately, companies like Green Thumb, they'll be the ones that are able to access this and continue to drive that cost of capital down. But it's until banks start playing in the space and traditional means of financing are available, smaller operators are still going to be afforded very, very high, expensive cost of capital and products that don't necessarily meet their direct needs.
Jennifer, how have you felt that in terms of the sophistication that Doug just spoke about? How have you felt that in your day-to-day and in your efforts to raise capital?
We feel it, of course, and I'm sure everyone does. Just to take a little bit of a step back here, the reason, or one of the primary reasons why this is such a challenge, is because there is no access to the US capital markets for US operators. And so just to kind of put a little bit of context and some numbers to what that means, or why that is so problematic, and why we are trying to be really trying to push this conversation forward. And you saw that with our RTO, and one of the first to do that in June of 18. We raised some large private debt, single sourced by ourselves, getting our S1 registration ready for SEC compliance, all these things to get ready for US listings, but we're not allowed to today. So what's going on here? The US market is, we've got over 325 million population compared to Canada. It translates to roughly about $100 billion market opportunity that we all know about. Today, the run rate for that opportunity is about $20 billion. The US companies trade about 2 times that. Compare this to Canada, 35 million population, but a $10 billion market opportunity. Is 10% of what the US operators have the capability to capture. Yet those companies are trading at 8 times today. Why is that? Those Canadian companies can list on US exchanges because it's federally legal in Canada and still federally illegal in the US. So what we have here is this massive outsized allocation of resources, quite frankly, going to Canadian operators who do not yet have the opportunity to access the consumer opportunity, which is the great American cannabis growth story here, which we very strongly believe in. And it's quite problematic. Companies cannot fuel their growth unless they have access to money, quite frankly. And that's like kind of the bottom line here. So it's we're trying to do what we can to push forward and make those moves. And we saw that with some more recent direct investments into the US market here that we've been able to pull off, but it's not an easy feat. And we need to we're seeing momentum. You heard Sanjay talk about it. We'll talk about it more later. But it's a big challenge, and it's all hinging on the access for US operators to be able to list directly on US exchanges, to have access to that US capital. It's the largest capital market in the world.
So you've done what you can do for now, which is trade on the OTCQX market in the US, which is where you're limited to. What was the thought process behind that?
Yeah, it's an inroad, right? It is like one step removed from being, or a few more steps removed from having more traditional access. So folks down the street in the communities, you can go online and you can buy and invest and have the opportunity at the investment of an early stage cannabis company for people who aren't institutional investors. And so if we think about that too, of we're all here trying to democratize access to cannabis broadly for the consumer, but it's also a real wealth generation opportunity for investors and those who are maybe historically been kept outside of those opportunities in early stage industries. And so this is the birth of a brand new industry here in the US, a new consumer demand driven industry that's existed for decades, for centuries globally. It's hitting a standstill. It's a policy driven standstill.
But Doug did say things are getting better, and Sanjay, I want to throw it to you. How are things getting better from your point of view?
So when you look at a fast growth cannabis operating company, they have an additional avenue now that they didn't have before. I mean, a lot of multi-state operators are looking at the market and saying, we have the opportunity to pick up desirable target companies in all stock deals. Don't even have to issue any cash or cash equivalents in the deal, which is excellent. But the SPACs have become a threat now to that, because a lot of cannabis operating companies are viewing the SPACs as a quick way to access cash, maintain independence, and really the SPACs are going to compete now with multi-state operators in terms of fast growth, desirable cannabis operating companies, right? So I think that there are more avenues now through the SPACs and through acquisitions with multi-state operating companies as well. So it's good. Things are looking good. I mean, we're off to a great start this year. So.
And I just want to clarify one thing. I think there's a big difference between the equity markets and the debt markets as it pertains to how these businesses are able to access capital. I think, we probably all agree that the investor demand is probably at an all-time high. We kind of go through these phases every few years in cannabis. So from an equity standpoint, I think things are getting much better. But from a debt standpoint, general working capital, that still remains relatively scarce, from most operators. But to Sanjay's point and Jennifer's point, I think that the equity markets is still challenging. It's not as straightforward as we're starting a business in a traditional CPG industry. It's definitely not that straightforward, but it definitely there's been major strides made to allow for more liquidity to flow.
Maybe Doug, you can touch on the major differences there between cannabis and other consumer packaged goods industries.
Yeah, so the hurdles of entering cannabis, I mean Jennifer can probably speak to it more directly, given being an executive at one of the largest operators in the country. But if you're starting off in the CPG industry outside of cannabis, I mean there are specialized investors that are experts in those given industries that you can go talk to for capital. There are examples of large-scale companies that can be strategic partners. There's clear exit opportunities that exist. There's clear liquidity options that exist. In cannabis, it's all forming in real time, right? So the first movers in the space were typically high net worth individuals and family offices that were able to deploy capital relatively freely and were okay taking on the regulatory risk or any kind of audit risk that would come with making an investment in cannabis. Now what we've seen is more institutional investors start entering the space, and obviously the Canadian Stock Exchange has enabled companies like GTI and others to thrive and be able to raise capital in a more traditional way, still not as traditional as it would be in the U.S. capital markets, but just the pathways have been so different. There's just much more structure in other industries in terms of the available of liquidity and the willingness of investors with multiple expertise to come in and provide funding. On a debt basis, it's very, very similar. There's really, there's a formula, how to raise debt. And there's a way that you raise bank debt. There's a way that you raise private debt. In cannabis, getting debt lenders comfortable in an industry that has as Sanjay would speak about very, very difficult tax codes to navigate on a state by state basis, getting to understand the risks that are involved in lending to a cannabis business are wholly different than that of another CPG business. So there are just many hurdles just based upon education and learning that these operators have to go through. And ultimately, banks are the single source of financing for most small businesses, and that's inaccessible to businesses in the cannabis industry right now.
Jennifer, let's talk about some of the things that you've done. You already sort of mentioned some of them previously, but in the past couple of weeks, I've seen a couple of headlines out of Green Thumb. You did a direct offering, I believe, and you guys are raising some money. So can you tell us about that? Oh, we're on mute here. I think we lost. Did we lose Jennifer? We may have.
I cut out a little bit, so I think I got your question, which was. Can you hear me?
Yes, we hear you.
Okay, sorry about that. I had a little bit of a connection flop
okay.
out. I believe I heard your question. What's been going on? Yeah, to tag on with Doug there, we are seeing an open up though, right? So we did just successfully register shares and issue direct equity from our company to an institutional investor in the US, approved by the SEC, which is like massively a positive step in the right direction.
Yeah.
And what that says to us is, okay, the story that we all have been talking about for, 10 years now is starting to kind of stick, and people are really starting to see and believe in the opportunity and the longevity of the opportunity, supported by, mass consumer support, and there's political kind of bipartisan support for this topic. And these investments from a $100 million direct investment by a single investor for us is just a big vote of confidence for us, for our business. We feel that gives us some comfort. Okay, we're on the right track. We feel like we're onto something, but it's also adding some dollars to our business that will be with us for the long term. And we hope that this is a positive step, and we see it as an incredibly positive step that, we have the SEC registered shares directly issued in the US. So if we think about the US capital markets as like a giant pool of, capital opportunity, the direct investment, while not listed on a US exchange, is kind of like a little crack. It's like a little channel, a little tributary, just like drilled into that big pool. So the next step is really kind of widening that channel, and that channel widening is US operators being allowed to list on US exchanges to have that same access to capital as our Canadian counterparts do. Otherwise, what it's really doing is it's like we're sending competitive edge via capital resources to our, to our global peers. And why not have businesses and entrepreneurs here in the US have that same opportunity while it's still, very new and early. We've got a long runway to go, but if we don't start to make some progress, we're kind of going to get in our own way here.
I'm sensing a theme in how you think about things. Every step forward is a little bit crack. You're opening OTCQX, a little crack. Direct raise capital, a little bit crack. Can you share who that institutional investor is? Is that public?
Excuse me. It's not public. Sorry. It's not public, and it's something that we don't necessarily share. We take those relationships really seriously. Yeah. It's still a little bit of a new frontier for everyone here. Sure. We did just, as required, some of these folks do have to file 13Fs. Mm-hmm. There was one that was, issued and kind of uncovered from December. We had a single buyer place a $300 million, they own $300 million in our business. And so we don't know, of course, what everyone else's cap tables look like, but we believe that that's a pretty significant investment and pick and strong vote of confidence for Green Thumb. And we hope to continue down that path of finding investors who believe in our vision for the long term here. It's not a quick flip. It's like, we're building $100 billion industry together with all of our peers. And we want to have a seat at the table, and we want to have a seat at the table with partners who believe in that sustainability and the longevity of that vision.
Sanjay, I had asked you the last time we spoke about sort of what was on your radar from the regulatory front. And the very first thing you said was 280E reform. So what's going on there?
Absolutely. Something everybody wants to hear about. So what I'm hearing from a lot of folks is that as we get past this $1.9 trillion stimulus package, right, and we move into some other initiatives that the Biden administration has, and I think Kamala Harris is probably going to take the lead on this, but we're going to be looking at the Biden administration really looking at 280E as part of overall cannabis legalization at the federal level. And a lot of people are expecting that Biden will come out and issue instructions to the IRS to really stop the application of 280E to cannabis businesses that are operating legally under state law in an effort to study the impact of 280E, and even from a budget perspective, whether a federal cannabis tax, like we have in other industries, could really replace the application of 280E and what impact it would have. So I do think that we will see something like that. I don't have a crystal ball or anything, but I think as just to mitigate the harm that 280E has and the impact that it has on cannabis operating companies, it sounds like from a policy perspective, it's something that could happen later this year or next year. And then the next question is what impact will that have on audits? And what we tell our clients is, look, 280E is being fully enforced. I mean, IDRs are being sent out on a weekly basis in the thousands, right? So we all still have to comply with 280E, or at least find creative strategies to mitigate the impact of it. But there's still going to be audits. And even if, some type of order is issued by Biden, that wouldn't necessarily prevent the IRS from going back and auditing prior years, right? Maybe they won't do it because it's not consistent with the policy at that point, but we still have to be cognizant of the fact that as you're doing deals and as you're, filing returns, that there is exposure with taking aggressive positions in 280E, right? So that's what we're looking at. And I do think that there will be a federal cannabis tax because we're in a situation now where the government is looking to raise revenue and raise the corporate tax rate to 28%, raise individual tax rates as well. I mean, there has to be revenue raising measures in order to make up for all of this relief that's been granted and that's going to be granted in the next few weeks. And so just doing away with 280E is going to have a revenue hit for the Treasury. And so there will be a federal cannabis tax once 280E goes away.
And Doug, have you seen pretty much the same thing? You drawn the same conclusions?
Yeah, totally. I mean, from a political standpoint, I think that the tailwinds are in our favor. And I think that, what the signals I've heard is that decriminalization is kind of at the forefront, but then, deschedulization may be in the future, but there's incremental steps that'll be taken to improve the operating ability of companies in the cannabis industry. So 280E is an enormous burden. It can't be understated, like how difficult it is to run a business and not be able to write off, expenses. Like it's just it's not logical in any way, shape, or form. It just is the way it is. And when this does get taken care of, the margin increase it'll have for these businesses and be able to better plan cash flow, I mean, it'll be tremendous. But I think that one of the things that Sanjay mentioned around audits is that, it doesn't erase the years of, the enforcement of 280E. And you've seen many companies try to fight this. And you actually even seen Harborside, who fought it pretty deliberately in the press. They now settle their 280E tax bill. So there's been signals that, hey, this is being taken seriously. It is being watched, and we understand it's a problem. And I do think it is going to have a major impact on businesses being able to, operate their business more efficiently. However, there's going to be other taxes, as Sanjay mentioned, and the state by state taxes are still, they're still working out their kinks. But at the end of the day, I think standardization will be a huge step forward across the industry, just understanding what the tax liabilities need to look like, what they are, what they will be going forward, and that will allow for better planning. I also find it interesting that the IRS commissioner came out today and said, it's a security issue for their employees to be getting paid in cash for their tax liabilities, which is a whole other issue. But it seems like the right attention is being paid to some of the problems that these operators are facing.
Right. Jennifer, I imagine this would make your life a little easier.
Yeah. It's like something that we definitely pay attention to. It has a huge impact on our business and really drives up our effective tax rate. I don't have the exact numbers, but we were looking at them before. It's like the amount of taxes that U.S. cannabis companies contribute exceeds some of that of our Fortune 100 companies, which is insane to think about when we recall the prior conversation about how capital constrained we are. It's like you're kind of fighting with your arms behind your back a little bit. And so it's a really positive movement. They're obviously still in some enforcement. So like, how's it going to shake out? But, things are moving, it feels like, in the right direction, and the right people are starting maybe to feel the pain points. If the IRS is nervous about cash, maybe that means credit cards can become available, so there's some positive action.
I wanted to ask Doug about the program that LeafLink launched last year. There was Green Thumb. I apologize. I want to ask Jennifer about the program that you launched last year, the LEAP program, the Licensed Education Assistance Program. Can you speak about that a little bit?
Yeah, sure. Thanks so much for asking about that. So, we all have a real responsibility and opportunity here to take what is the new birth of an industry to kind of repair and harm and some of the harm done by the war on drugs. And our ELITE program is one of the initiatives that we have across our business that's trying to afford opportunity and access to opportunity for those who've been historically kept out. And so LEAP was a pro bono application assistance program that we did here in Illinois at the onset of adult use to take our licensing expertise, which we've been really successful winning those licenses, and said, hey, we can kind of provide our skill sets and help folks fill out their application so that they can be successul operators. Now, phase 2 of that, once those licenses are issued, is okay, now it's one thing to get a license and one thing to kind of write people a check, but how can we help people be successful? There's a massive learning curve here in cannabis, and we've been at this for 5-6 years now. We're kind of continuing to run up the learning curve and are looking for opportunities to share that with people to afford more access and access to opportunity.
My question for Doug was about the senior secured credit facility that LeafLink started last year. Can you tell us about that?
Yeah, sure. So, we launched LeafLink Financial. I joined LeafLink in 2018 to build out LeafLink Financial. And, the goal was to solve the payment issues that every B2B industry faces, not just cannabis. The problems that cannabis faces are just on steroids compared to those of, traditional industries. But the same issues around credit management, invoice reconciliation, traditional payment mechanisms, and then cash flow management are pervasive in cannabis and honestly in B2B as well. So obviously navigating, state-by-state cannabis laws, commercial lending regulation as it pertains to the products we want to introduce, and just getting things comfortable with, offering credit, and doing so via the ACH rails was, a huge lift. But, the need for trade credit in the industry, I think is, a big step forward. And matching that with an ACH payment rail is even bigger step forward. And what the $250 million credit raise enabled us to do was expand our service offering of being able to purchase the invoices from sellers directly that were originated on the LeafLink marketplace, which does over $3 billion of transactions annually. Enables us to have liquidity flow to the sellers so they can have be able to issue net terms to their customers and have those customers have net 30 terms that are afforded in any other industry. have them, pay us directly and have the sellers have liquidity to, go and manufacture more product and, grow their business. So I feel like, factoring is just one element of the program. And what that credit facility enabled us to do was to, start deploying liquidity on a more aggressive basis and get in the hands of more operators. We now have over 1,000 customers that are utilizing the program. And we're going to continue to expand that and be able to, help businesses, more and more with their payment needs and, enable liquidity to flow on both sides, being able to allow sellers to pick and choose when they get paid necessary to their business and allow buyers to, tell us when they want to pay, to make sure that everyone's able to manage cash flow independently of the needs of each other. I think that's something that, many B2B industries really, really need, is a way for the cash flow needs of one side of a transaction to not impact that of another side of a transaction. And that's the role that we want to play by dislocating those needs.
So Sanjay, outside of 280E reform, the rise of SPACs, which I guess you see as not a short-term trend here, what else is happening in the near term? We all know that federal legalization will change everything, but that may not happen for a hot second. So until then, what other changes, trends are you seeing that could help operators like Jennifer?
Yeah, so there are a lot of creative 280 strategies that can be put in place, and these are all backed by separate independent business purposes, right? But for an MSO that's vertically integrated, there are very creative ways to move things around, take a separate trade of business position with respect to non-plant touching activities, or even with respect to plant touching activities to some extent, to deduct more and really, mitigate the impact of 280E. And a lot of these structures are defensible. The authorities go back several decades. And so it's really being proactive, working with tax advisors, not just focusing on cost of goods sold allocations and everything else. We need to get more creative at this point. And so never a good idea to leave dollars on the table, right? So that's why I encourage all multi-state operators to really work creatively with their tax advisors to look at what they can do in order to mitigate the impact of 280E more stringently. And then also in the M&A world, I mean, we're seeing a lot of deals now where you have cash-rich targets that are single state operators, and you have an MSO that's coming in doing an all stock deal. So all of a sudden you have access to this cash at the target company level, and it's not going to be $100 million raise or a $200 million raise, but for a fast growth operator to have access to $20, $25 million by doing a deal, it's basically like doing a capital raise essentially, right? And you can bring that money back from the target to the parent company or any other entities within the operating structure, tax-free post-acquisition. We're also working a lot with multi-state operators that are doing deals and waiting for the deal to close by using transfer pricing strategies to support, the MSAs and really bring back more cash from that target company, even though the deal's not closed, back into the acquiring company and have it all be supportable and defensible. So there's a lot that can be done right now, just in terms of a pure operating company, but more with an operating company that's looking at acquisitions of single state operators as well.
So it's 12:09. I guess we have like 30 seconds left. Any of you have any final thoughts that you want to leave us with, Doug, Sanjay, Jennifer?
Just thanks for having me here. Obviously there's a ton of action in the industry, or really, a lot of excitement. We're super pumped here at Green Thumb with everything that's going on, and looking forward to seeing what this industry turns out to be, and, try some of our dog walkers.
Yeah, I think we are all excited to see where this goes. I want to thank my panelists, or our panelists here, Doug Gordon, Jennifer Dooley, and Sanjay Agarwal. Guys, thank you so much. This has been super informative, and looking forward to seeing where things go. Elliot, welcome back.
Hey, that was awesome.
Thanks so much.
Not every day we get to have GTI, LeafLink, MGO, and Spencer. So thank you all very much. Have a wonderful rest of your day, and we'll hopefully talk to you very soon. Fantastic.
Awesome. Thanks.
Thank you.
Yeah, so I mean, GTI, major player in cannabis and beyond, as we all know. LeafLink, you really need to know them. They're an incredible company, and everybody in the industry probably is connected to them at some point that works in the industry. And then, of course, Sanjay and the whole MGO team, Lorna, Jennifer, Scott, we thank you all for making this panel happen, supporting it. They have released a cannabis top 50, which includes Benzinga as one of the leading voices in the industry in the knowledge is power section, but GTI, LeafLink, and so many others are represented there. So please do look that up. I believe you can see that report in their booth on the platform. They do so much more in the space though. MGO is an awesome company. Thank you again, Spencer. Now transitioning to, should we call her the elitist of elite moderators? I think Deborah Borchardt of the Green Market Report. Well, she knows how to lead a conversation as an event provider. It's so nice to have you with us. How are you today? Oh, you might be muted.
I hate that when that happens. I click on it.
I hear you. I have 2 mute buttons, so I try to just do one at a time.
Yeah,
it's so good to have you. Yeah, of course. Of course. I'm going to let you take it right away with our good friend Robert over at Fluent.
Fantastic. Hi, Robert. Thanks for tuning in. I want to just introduce you to anyone that might not be as familiar with you. You are the CEO of Fluent Cannabis, but some people may know it as Consortium Holdings, but you do operate most of your businesses with the name Fluent. You are a native Floridian. You co-founded the law firm of Litvick, Beasley, Wilson, and Ball back in 2001. And you've been a consultant for various parties, helping them obtain cannabis licenses. So you bring to the Florida Fluent a native, someone that knows the market, someone that knows the state. But just so that people don't think you're just a one-trick pony, Fluent is not just in Florida. They've also got flags planted in Pennsylvania, Michigan, and Texas. Which there's not a lot happening in Texas, but first to market is always a good thing. So Robert, thanks so much for being here with Benzinga.
Thank you. Thank you. It's a pleasure to be invited to be a part of this conference, the virtual version of it. I attended it last year in person as a spectator, and it's interesting to go to this format now.
So let's just jump right into Florida, because that's really where the meat of the operation is. And one of the things that you've got coming up in Florida is this Sweetwater facility. And it's pretty exciting. It's pretty big. It's a big one. It's 26,000 square feet. Tell us about your plans for this facility.
Yeah, thank you. It's a little bit of a pivot away from the way that we're doing cannabis in Florida. Florida, to start with, cannabis doesn't like to grow here. It's hot, it's humid. Cannabis doesn't like wet feet, and it rains here every day. And so we end up growing indoors primarily. And because we are such a high demand in this market, and still the demand still continues to way outstrip the supply, we end up growing indoors in large format spaces. Behind me in my virtual is our Tampa facility. It's 14 rows, 14 towers, 6 rows high, all one space, kind of a macro environment. But to heat and cool and dehumidify that space is very tricky. Sweetwater is a different concept. The result of these big macro spaces in Florida is it's meeting demand, but the flower quality is fairly mediocre, to be honest with you. Florida is filled with mediocre flower.
No, don't say that. No one ever says that.
I don't know that we could sell our market flower out west, what we sell to consumers in Florida, and because it's also a young consumer state. And so as the consumer taste develops and we go from what I call tequila shots to fine wine, those consumers are going to demand more and more qualities. It won't just be THC driven. So the Sweetwater concept is to embrace that. It's a big facility, but it's broken into segregated 1,600 to 1,800 square foot grow rooms. So you start with good genetics, and then you able to adjust the finite details of the environmentals to allow those genetics to obtain their potential. I did this with another company. I've also started several other companies in other states. And what it does is it allows you to adjust the environmentals and come out with a real high quality flower.
I love that you own that. Now, I will say right off the bat, I've never purchased anything in Florida. I've never tried any product in Florida, so I don't have any personal experience, but I have read a lot of reviews along that line with consumers saying they weren't thrilled with the level of quality of the product in Florida. So I love that you're owning that. You're not trying to pretend that maybe consumers in Florida aren't thrilled with what they've got. Clearly, as you said, the demand is there. So I love that you're acknowledging consumer complaints and wanting to address that. One thing that I had mentioned early on when I was describing the business and talking about Texas and how you were, kind of first to market there. Another place that you've kind of been first to market as well is edibles within Florida. Certainly Florida did not start with edibles being on the shelf. They added them in later. So where is the state right now with edibles?
So the state, from a regulatory point of view, was very reluctant on the edible methodology of delivery, and it's because edibles goes towards candy, and so the development of the edibles rules was very, very difficult pathway to make sure that there's no coloring allowed, there's no the size and the structure, and so it was a tremendous amount of consumer protectionism and basically young people protections that were put into it. And because Florida is a conservative state to start with, getting an edibles rule developed was very difficult. Then when it was developed, of course, everyone had to market shift and put the GMP certifications in place and get there. So it was kind of what I called my JFK moment when I took the chair as CEO. As I said, we're going to have edibles out in mid-October. We're going to beat everybody to market. And we did. October 13th, we were rolled out with approved edibles in our stores. Like our other issues, though, catching the volume has been tremendous. Our edibles sell out. We've got a very short shelf time. We've got 7 to 8 flavors out now. We're balancing the sours versus the sweets, and running customer surveys on what the next flavor should be. And we're using a 10 milligram gelatin puck, which is a very common chewable edible. We've got a hard candy coming out. The question will be is what the edible shelf will look like in Florida, because some of the products that are out west, the baked goods and the chocolates and so forth, may not do as well here because they're just not as durable. And so we're leader of the market in it as far as first to market. We are trying to catch the volume and the demand like all of our products. It's a good problem to have because the demand still outstrips supply, even in edibles. And we see that it's becoming a good alternative because we're still a true medical state. And an edible, as far as a method of delivery, is really effective to that person that just can't smoke in any form. They can't vape, they can't flower. And so edible really gets them the relief they need.
Right. I would think that form factor would be one that would be very desirable, because to your point, if it is medical only at this time, people are more health conscious. So a smokable type of consumption kind of seems to go against the idea of health and wellness, whereas an edible fits right in and certainly is fairly convenient in consumption.
It is. And, our edibles are gluten-free and now I'm working on a sugar-free. So I'm trying to get as healthy a method of administration as possible. If I can come out with a gluten-free, non-GMO, sugar-free edible, I'm going to do it.
You're the winner.
That way we meet the market demand and that concern.
So you recently talked about Michigan. And you noted that in that state that you had just recently harvested your 2020 crop, and that produced in excess of 4,000 pounds. The Michigan market has certainly turned into a really hot one. It started off a little slow. A lot of municipalities were like, yeah, I don't think I want to do this. And then it seems like they're all like jumping in now. They once they saw it wasn't this horrible thing, and that it was actually not such a bad thing, and actually kind of a positive thing. It seems like the state is really starting to grow and grow pretty quickly.
Yeah, having come from Florida, which is a very conservative state, Michigan was easier to understand from our perspective because Michigan, while being a northern state, is very, very conservative. It's more like Florida in its demographic. And so understanding how they wanted to just wade into the process and see and make sure that it didn't result in, drug users laying on the street corners, which didn't happen, has allowed everyone to relax a little. The problem in Michigan that's different than Florida is we have a different environmental problem. It gets cold there and it snows a lot. And so it's an outdoor grow state right now. A lot of the development in Michigan infrastructure wise will be to push indoors. Our project now is to put greenhouses on the ground so that we can get away from a pure outdoor grow. You also see Michigan, which is a typical outdoor state, having that big Croptober commodity crash. And so pricing is variable throughout the year in Michigan. When we put the crop in, biomass was at $7.50 a pound. Today it's at $2.30 a pound. Now there was a little bit of market alteration. There were some issues that happened with some people bringing in some product from other states. That's been fixed. But getting Michigan more stabilized with indoor grows to get crops out in the summertime and crops out in the early spring to stabilize that market will be the next challenge for that state. Get us away from price variability that comes from an outdoor harvest.
Well, I'm sure, as you noted, that the people within the state, they're cautious, they take their time. So once they kind of get through this idea of it not being such a scary industry, I think you're right. I think that they will start to see that indoor growing might be maybe a better solution than having all these plants outside and where it's kind of hard to keep them secure. You're also in Pennsylvania. You have one site in Pennsylvania, but that's not all that you've got planned. Tell us about your plans for Pennsylvania.
Right. Pennsylvania, we're a retail presence. It's not a vertical license scheme like Florida or Texas. And so we just have a retail site. We're in Hanover. We have a license for 2 additional sites. We just started construction in Mechanicsburg, and we're working on locating our 3rd store. We have Pennsylvania is regionalized, and we're in the Southeast region, so we need to stick in our box. But our next site will either be Harrisburg or Hershey, depending on how the demographics work out. Pennsylvania, though, is just like our other states. It is undersupplied. The demand exceeds supply. But because we're a retailer, one of our struggles is waiting for cultivation to catch up there. Some big players have entered the market. Cultivation's under construction. But, you know, it's like when we work through a cultivation center, you've got to build it. And then, of course, you got to plant it and grow it. And it's a crop. And so you've got a 16-week realization of that effort at a minimum. And that's not if you don't have to go through additional regulatory steps. And so getting production online is a lag time of 6 to 8 to 10 to 12 months once we recognize it. And so what you're seeing in some of these states is just getting the production going. Pennsylvania is catching it up. You should see more product availability and more map coverage in Michigan in 21 and 22. And then hopefully as those consumers get more coverage, you'll see a little bit of pricing decrease. But right now pricing's on the up because demand's on the up.
And, you know, there's a lot of talk here in the Northeast. I'm in New York, New Jersey, they expect that adult use sales will begin. It could be as early as this summer. New York is like, lining up right behind New Jersey. And there's a lot of talk that Pennsylvania may get that pressure to go adult use just because they're going to be surrounded by legal adult use states. So again, you might, have planted your flag in a good spot, because if Pennsylvania keeps going like the rest of the Northeast, you might be really well set up for adult use sales when and if they ever occur.
We get our 3rd store open. In fact, our team right now is already looking for more licensing, or even maybe cultivation licensing, because we're really keen on Pennsylvania. We're there to stay, and we'll continue to increase our footprint there. I don't know enough about the political dynamic of Pennsylvania compared to New Jersey or New York to know how fast they'll follow the rec wave. They'll get there. But what we'll see is, again, Pennsylvania is kind of similar to Florida. We're still in a medical scenario, but our demand is ever increasing on a very fast slope. With the rec move, which will happen in Florida as well, probably 24, that slope just increases all the more dramatically. So again, it's all about building out the production.
And I love your brand. I love the way it's very sleek and modern. It's got a real fresh look to it. That was clearly a choice you guys wanted to go with. You wanted to go with this very sleek, clean look that's, it's very appealing to a modern customer.
Yeah, our branding and our product selection is it's very young and energetic. The company came out of Miami, Florida. Miami's got a good vibe, and it's always on the cutting edge of fashion and excitement. And so A lot of our marketing and staff comes from that Miami vibe, and you're seeing that kind of carry throughout the state. And of course, we're going to stick with the Fluent brand in other states also. They'll carry that brand with them. Our color scheme is very is very Miami, I guess is the best way to put it. It's bright and flashy and sort of speak. The problem, of course, is that we're not rec, so we've got to tone it down a little so that our product line still meets that medical market and still and it looks and feels like the medicine that it is.
So we'll feel like we're going into the Sunshine State when we walk into a Fluent operation. A little bit of sunshine in every package.
That's right.
Well, thank you so much, Robert. I think that we are getting the word to wrap it up. Unfortunately, we didn't get to talk a lot about Texas. Not a huge market right now. Again, you got to be in early and take your time with it. So certainly, I'm sure after the couple of weeks the folks in Texas have had, there's going to be a lot of medical marijuana patients signing up there if they could have the stress as a patient condition.
Yes, the Texas, there's two bills in Texas, a Senate and House bill. They both cure some of the major market obstacles. And so we really think Texas potential will start to be realized in 22.
Hi, Elliot.
A fantastic discussion. Obviously Texas is an interesting market, but next time, Robert, this isn't the last time we'll see you in the next coming months. So hopefully this conversation with the two of you can continue. So thank you both so much for being here.
Thanks, Elliot.
Thank you for having me.
Robert.
Thank you.
Of course. Awesome. So that again is Consortium, otherwise known as Fluent, Fluent. Their website is getfluent.com. Ticker is CNTMF. Awesome company, strong landscape. Deborah, thank you so much for leading a wonderful discussion. So like we did yesterday, we have a lot of friends in this industry and we'd like to support them. So please tune into this quick, I think 1.5 to 2 minute commercial on one of the elite firms in this industry.
Hello, I'm Tom Zuber. I'm the managing partner of Zuber Lawler. I'd like to thank our friends at Benzinga for the opportunity to speak today. Zuber Lawler is one of the most selective law firms in the United States. Our attorneys represent clients around the world, from offices in Chicago, Los Angeles, Silicon Valley, and New York. We focus on high-stakes deals, intellectual property matters, FDA, import-export, and other regulatory work, and litigation. We work in languages covering 90% of the world's population. Zuber Lawler is unique in the sense that the firm represents a long list of iconic Fortune companies and global funds, and has also been representing leading cannabis companies for over 12 years. This provides our attorneys with an ideal perspective from which to manage high-stakes, complex matters in the cannabis space. Indeed, Zuber Lawler practices at the cutting edge of cannabis law. As examples, Zuber Lawler is a pioneer of the two-stage M&A deal, allowing continuity of cannabis operations in the context of U.S. restrictions on the transfer of ownership of cannabis licenses. Zuber Lawler obtained the second ever issued U.S. plant patent for a cannabis strain, as well as utility patents on cannabis processes, machines, and formulations. Zuber Lawler obtained federal trademark allowances for cannabis brands in relation to relevant products. One of our attorneys obtained the first ever issued generally recognized as safe designation from the FDA for hemp seeds and foods. And Zuber Lawler advises hemp companies on international import-export issues relating to North America, South America, Europe, and the Middle East. Zuber Lawler is currently managing major patent, trademark, trade secret, and commercial litigation in the cannabis space. I'm excited to participate in Benzinga's virtual Cannabis Capital Conference. I hope to meet you virtually and in person sometime soon. Thank you.
Yeah, we all wish we were meeting in person. Zuber Lawler is the real deal. They provide so much insight to the companies in the space. So you're going to hear from them later with a couple operators, Item 9 Labs and Body and Mind, talking about what to look for in companies when it comes to their contracts. So stay tuned for that. But first, very interesting discussion with Daniel McRoberts from Lotus Ventures on scaling craft cannabis. Daniel, how are you today?
I'm doing awesome. How are you doing, Elliot?
Oh, very well, my friend. Very well. Excited to have you. I have some questions laid out for the end. But again, if anybody in the chat has questions for Daniel about Lotus Ventures that come up during this, I will convey them to you. But I'll let you go ahead and share your screen and get started.
Awesome. Thank you so much, Elliot. Awesome. So thanks everyone for tuning in today. We have a super exciting story going on. My name is Daniel McRobert. I manage the investor relations and the marketing communications for Lotus Ventures, Inc., which is the publicly traded licensed cannabis producer in Canada, and also the owner and operator of the premium craft cannabis brand, Lotus Cannabis Co. We have a very exciting story about scaling our craft cannabis operations that reached profitability in our first year. So yeah, let's get started. Just a standard forward-looking disclaimer, this presentation is for informational purposes and not a recommendation to buy or sell our securities in the company. However, it can be used to help you make informed investment decisions. And if you have any questions after the presentation, please feel free to reach out. I'm happy to answer anything. So, for the people who aren't too familiar with the Lotus story or kind of need a quick refresher, our company was formed back in 2014 through an amalgamation. Shortly thereafter, we submitted our cannabis license application to Health Canada and subsequently listed on the Canadian Securities Exchange. From the end of kind of 2014 to midway into 2017, we were in the Health Canada approval process for being a licensed producer. We didn't hear too much during that time, as there were, I think, 500 other applicants in the queue as well. Moving kind of in towards the end of 2017, we received the notifications we needed to start our construction. We got that going. About a year later, we announced our first purchase and sale agreement with Auxly Cannabis, which I'll touch on. And then in October, Canada legalized cannabis for adult use purposes. And a year and a half after we started the construction of our facility, we were granted our cultivation and medical sales licenses from Health Canada. We received these licenses in 27 days after submitting our final evidence package to Health Canada, which was actually one of the quickest turnaround times in the industry. We really credit this to our whole production team never cutting corners throughout the whole kind of build of our facility. And we feel confident when we need to obtain future licensing from Health Canada, we should have the same kind of efficient process. Moving forward into kind of 2019, we imported our starting plant production material into the facility and commenced our first production harvest that October. For the next kind of year and just under a year, we really dialed in our growing facility, our growing processes, and just really learned how our strains reacted on a commercial scale. In our first year of being a wholesale company, we received positive feedback from the industry, our wholesale partners, as well as consumers, especially for one of our strains called the California. We subsequently launched the California strain in a collaboration with one of Auxly's brands called Collab Project. And we've been in the consumer adult use market in Canada now for about 6 months, but we are still a wholesale company primarily. Towards the end of December of 2020, we reported our first fiscal year in production. We recorded $4.6 million in sales and $1.5 million bottom line, which was a rarity in the Canadian cannabis sector so far. So we were very excited to be one of the early Canadian producers to reach profitability. So over the same 5-year period, our company has raised just over $17 million, primarily through equity private placement financings. Our largest investment to date has been from Auxly. In our agreement with them, we received $5 million to help with the construction of our initial facility. And a part of that is an offtake agreement, which I'll touch on a bit later into the presentation. Again, we've raised primarily through equity financings. We haven't raised using any long-term debt to date or any convertibles. The only debt we brought onto the balance sheet was some short-term loans just to kind of bridge us to cash flow. We got past that point. We're cash flow positive now. And like I said, we reached profitability in our first year. So we've done all this while keeping our share structure intact. For the cannabis industry, under 90 million shares is relatively low. We believe that a lower share structure can be more attractive to investors. So we've really kind of kept this as a metric that we want to keep intact moving forward as well. Operating wise, our company had no crop failures in our whole first year of production. Anyone that is familiar with farming, especially cannabis farming at scale, will understand how many challenges on a day-to-day basis that you have to kind of troubleshoot. So our team made it 31 straight harvests in our first year of production with no crop failures. So that's a huge shout out to our production team. And we feel like that's a very underrated part of this business. So I'll touch on that a bit later too. On a wholesale basis, we had our flower, more specifically the California, being sold in 8 provinces in Canada through wholesale relationships. And our first year, we sold 1.2 million grams of premium craft cannabis. So in our first facility, the production capacity is approximately 2 million grams. So there is still the potential for that kind of growth in sales just from our initial facility. On the financial aspect, some things to note: we had a 61% gross margin, which has been pretty consistent over the past couple quarters. We had a 32% net margin. That's a real testament to keeping our operating expenses low continuously throughout the year. And again, we posted a positive 1.5 million in net income. So we were super excited to be one of the early cannabis producers to report a profit. So delivering results, what does that mean to our Lotus team? And the key points to remember about our company: Lotus is a simple and concentrated business. We created our own custom, low-cost, high-quality facility, and we believe we have some of the top cannabis growers and the cannabis genetics in the world and in a licensed regime. So we're super excited to kind of share more about our team and the genetics as well. So just to start off on a simple and concentrated business approach, and thank you to the Ontario Cannabis Store for allowing me to use these graphics. When we were constructing our company, we always consulted with our now Chief Operating Officer, Carl Correa, as well as our head growers, our production team, and really asked them, as medical growers, what is the consumer really looking for? Before we even started the construction of our build, they were always familiar with the traditional market. If you walked into a dispensary, you're finding a bunch of flower products under a glass table. So we really figured, we were saying dried flower will probably kind of transition into the licensed market as well and dominate most of the market share in the for the product segments. As we can see, dried flower and pre-rolls in Canada is totaling approximately 70% of the market share. I looked this week and it was 68 as last reported by Health Canada. And as we can kind of see in a more mature American markets, the dried flower and the pre-roll segments typically total around 50 to kind of 65% of the total market. So we believe we're targeting a very large portion of the market. Then when you kind of dive into a bit deeper into the segment of dried flower, we're finding that consumers in Ontario, and this trend we believe to be similar across Canada, consumers are really purchasing for with intention. So as you can see, a group of consumers are definitely drifting towards the lower THC product in Canada and Ontario. They're probably more CBD dominant strains, maybe an older demographic, not looking to get super buzzed off their experience. And then you kind of have the opposite end of the spectrum, where you have the daily, the weekly, the monthly users that are looking to get toasted. And you can see in Ontario, if your product can test greater than 20% THC, you'll probably find some sales success there. So that kind of relates back to why we created an indoor facility. It gives us the best opportunity to control the growing environment. The more you can control the growing environment, the better chance you have for repeatable results. THC right now is one of the driving factors in Canada. I believe it's the same in the States. So we feel very confident that we can grow exactly what the consumer is demanding in the market right now. So the market opportunity to start in Canada, in October, there was approximately $270 million in Canadian cannabis sales. In December, this number jumped up to 290 million. On an annualized run rate basis, this is approximately $3 to $3.5 billion in Canadian cannabis sales. prior to legalization, there were expectations that the Canadian cannabis market was going to be somewhere between $5 to $6 billion. So if that's the case, there's still about $1 to $2 billion of growth still needing to be had. And as we saw on the previous slide, dried flower is the king and taking a lot of the market share of that. So we still believe we have a lot of growth ahead of us. So as mentioned, part of the investment that we got from Auxly, we had a purchase and sale agreement as well, where they are purchasing at least 50% of our production with a right of first offer on the other 50%. Over the first year, Auxly has provided us with fantastic national marketing and distribution for our flower. We started receiving a lot of positive feedback on a wholesale basis. Consumers were starting to figure out our flower, who was actually growing it. There was more talk about Lotus actually growing. So we figured it would be a good time to kind of launch in collaboration with one of Auxly's brands. We already had that kind of existing relationship there, and they've provided us with a great distribution model. We've got our product into BC, Alberta, Ontario, and New Brunswick already, as well as a number of private and public retail establishments. So when we actually do get to the point of getting our own branded retail product into the stores, we have those connections already made. So how'd we do over our first year? We didn't start recording sales until the second quarter of the fiscal year. This was just due to payments being received. However, if you, in our first year, like I mentioned, we totaled about $4.6 million in sales. If you take the sum of the past 4 quarters, we reached just over $6 million. So it's not a bad starting point. We believe with our consistent production, moving forward into 2021, we should see continued growth. And then once we can get the expansion facility started and going, that will just drive the growth even further. One metric that we like to kind of try and keep as consistent as possible, especially moving forward, will be the top line gross margin. Over the past few quarters, we've kept it pretty consistent between 55 to 65%. This is just as a wholesale company. We aren't receiving the highest selling prices right now as we're just participating in the wholesale market. So there's still a lot of room for potential growth, whether that's through decreasing our production costs or increasing our selling prices. But right now, a 55% gross margin is not too bad as a wholesale company. And again, we've had a pretty good bottom line as well, too. So kind of relating to the margins, our production cost has stayed relatively consistent. It did pick up a bit in the third quarter due to just less people on site. But as we've kind of progressed through the pandemic, we've had more people start coming back on site. The production cost has decreased, but our goal is to continually decrease this over time. Our facility design was built, again, for the low cost of production of a high quality product. So if we can continue to decrease this, it will only help improve our margins. So now for the fundamental piece of our story, it is our facility design. Everything that we've kind of put into this and constructed has always been focused on the consumer first off. We've known just from being kind of medical growers over the past 15 to 20 years in Canada, the consumer is looking for a consistent experience every time that they get a product. Whether you're buying Coca-Cola or Nike, you want that repeatable purchase. The same thing goes for cannabis. As the market matures, we think this will matter a lot more. So you can see why we designed it as a pharmaceutical grade design. We want to keep every part of the facility as pristine as possible. Again, this kind of allows us to give our plants the cleanest environment possible. And in return, they have yielded great results for us, which gives us better sales, which gives us a better bottom line. Another thing that we designed our facility for was to mitigate a lot of the potential and common risks that come into the cannabis cultivation business. For anyone familiar or not familiar, pests and bugs trying to enter your facility is a very popular thing. The spread of bacteria, pathogens, powdery mildew. There's a tons of things that can happen that could kind of affect your crop potential. So we've kind of started at 100%, and we always try and keep our facility at 100%, whether that's for sanitation, just processes, methodologies of everything. It's very strict standard operating procedures to comply with Health Canada. And our goal is just to provide consumers with the cleanest environment or the cleanest product possible. So by doing that, giving the plants the cleanest environment, they'll return the favor. On the craft style kind of the side of things, in the back portion of our facility that you can see here connected to our HVAC system, rather than one giant flower production room where you see maybe in some standard greenhouse operators or an outdoor grow, we've separated our flower production rooms in a very innovative way, where we're harvesting one of 6 rooms every 12 to 14 days all throughout the year. Again, this might be in comparison to a standard greenhouse operator or an outdoor one where they might only get 1 to 2 harvests a year. Having that indoor environment where you can control the environment, you're not being affected by external factors like the snow and rain in Canada. It provides you with that smaller, condensed kind of craft style grow. And then we can continuously just keep flipping batches on a bi-weekly basis. And that's a huge contributor into providing Canadian consumers with a fresh product year round. So we feel like we have a very innovative kind of harvest cycle that is unmatched in the industry. And as consumers continue to demand higher quality and fresher products, we think we can excel in that scenario as well. So our production cycle is very unique. I don't know of any other company operating a harvest cycle where they're harvesting every 12 days. But as you can see here, everything that's gone into our facility design, the growing processes, the methodologies, and the end result have all stemmed from having some of the most authentic growers in the world, in my opinion. Our team has had their personal medical licenses to grow for consumers and patients since the start of the medical regime in Canada. Our chief operating officer, Carl Correa, along with our production team, helped consult with our engineers for the whole kind of build of our facility. Everything that's gone into the design has just been strictly focused on how can we produce the highest quality product consistently. And as you can see on the left, in the middle picture, we have 6 of these rooms. They yield approximately 60 to 70,000 grams of premium cannabis every 12 days. So at that, it provides us a reliable cash flow scenario when trying to scale up, especially if we're looking into kind of debt financing moving forward. One of the kind of main differentiators with our guys is in the production facility is how much they care about the health and the well-being of each individual plant. I've been up there tons of times, and every single time I've been up there, each flower production room looks identical. You can't tell anything apart. That's the great part of our facility, where if you can make it as consistent as possible inside, you should get a more consistent result after your lab test. So that's been the goal through the whole process. And our results kind of speak for themselves, and everything's working great. So it's been super great to really kind of just be a part of this whole project, learn about the kind of cultivation aspect of everything. And I'm really glad I'm with some of the best growers in the industry. So you can have some of the best growers in the industry, but if you don't have the top genetics, you might come out with a subpar product. Everything in Canada has to be strictly regulated and pass quality assurance tests for moisture content, microbial levels, heavy metals, solvents, pesticides. Our flower has consistently over the past year passed all of the tests for all of those, while also testing between 23 to 28% THC. So kind of going back to the Ontario Cannabis Store slide, if you can produce a product that is greater than 20% THC, then you're going to be selling a lot more than the mid-grade product or the lower grade product. So we feel like we've hit it right in the breadbasket here. Over the past 6 to 9 months, the California has been testing consistently between 23 to 28. We've received, I would say, only positive feedback online from this, and we're super excited to bring in future strains with just as good attributes or better. So like I mentioned, we launched our first strain, the California, in BC, Alberta, Ontario, and New Brunswick with CoLab project. since launching, we reached the 6th best-selling flower SKU in Ontario. We reached the #1 selling flower SKU in New Brunswick, the #2 3.5 gram SKU in the National Canna Cabana Network, as well. The Ontario Cannabis Store just recently put over 200 products that they are planning on delisting eventually over the next year. Our California was one of the strains that did get chosen to be chosen for to always try and keep that one in stock because it is in such high demand. So again, as we can bring in new strains, we'll look really forward to kind of introducing the high quality strains for our consumers.
Hey, Daniel, we are at time here, my friend. If you could just leave us with one final thought.
Sure. This was almost the last slide anyway. So we've reached profitability in our first year. The cash flow situation for us is improving consistently. Our building permits for our expansion have already been approved by the township. So once we can get the financing for that, we plan on scaling up our production, and it'll pretty much be just a replica of our first facility. So we're using the same design, the same team, the same genetics, and we'll just add 2.5 times more production to what we currently have. So I appreciate everyone tuning in today. We just have a very high quality story, high quality grow, and high quality team. So I wanted to share that with everyone. So appreciate your time.
Awesome. Daniel, really quick, I'm curious, what does the timeline look like on a Lotus brand?
Yeah, so right now we're planning on running that in correlation with our expansion facility. With our initial facility, we are expecting to be able to bring in another, at least 1, maybe 2 strains. We'll probably do this through our relationship with Oxley again / collab. So it'll kind of give us that intro into the market. And then naturally, once we kind of create that brand, which we already are, we'll have that loyal consumer base, and then we can kind of bring in our own branded strains.
Beautiful. Awesome. Obviously, a pretty big growth potential here for Lotus. It's great to have you with us, Daniel. I look forward to hopefully hearing an update from you at our future events here. But please, again, that is lotuscannabis.ca. Daniel McRobert here is the investor relations contact. He is the man with the plan, obviously. But my friend, we will talk to you soon.
Awesome.
And have a good day.
Awesome. Thank you guys so much for having us.
Of course. Happy to. Awesome. You know, I learned a lot about Lotus there. Maybe a company I wasn't fully familiar with, but I sure am now. They are rocking. So, we have heard from a ton of public companies today. We've heard from several private ones, even ones that you can get involved in as an average investor. As we move forward, we have several more opportunities here. This next piece of content I'm very excited about because it's really educational for investors on what you can look for in the contracts of companies you're looking to potentially invest in. Also, if you hear my dog shaking in the background, we're still working from home. I apologize. I'm not in her mind. But anyway, we have a couple of very exciting speakers, including Jeff Zuber from Zuber Lawler, who we played the commercial for a couple minutes. How are you, Jeff? Oh, you might be on mute there, Mom. Here, let me see if I can unmute you.
Sorry about that, Elliot. Thank you.
Oh, no worries. There you are.
Doing well.
Good to see you, Jeff. Good to see you. We also have Michael Mills, the CEO and president of Body and Mind. They are OTC listed BMMJ. How are you, Michael?
Great to see you, Elliot. Thanks for participating here.
Beautiful. We also have Kim Kovac and Jeffrey Rasas, but I did see Janet come in, so I will stop stealing her thunder and let her take over.
Hey, good morning. Thank you. Hello, and welcome to this segment of the Cannabis Capital Conference, and its title is Engineering Cannabis Deals That Are Built to Last: How to Avoid Common Contract Pitfalls That Lead to Painful, Crying Litigation. My name is Janet Jackham. I'm a partner with the Zuber Lawler law firm, which has offices across the nation and consulting affiliations across the globe. And my law practice focuses on serving cannabis companies, particularly with respect to their business transactions. I've worked on, 2 million contracts in my day, perhaps. And so I'm also looking forward to hearing about what our experts can share with us to do a better job, even better job on our contracts. We're going to reflect a bit upon the maturation of the cannabis industry over the past 15 years. Our panelists have experienced firsthand the growth of cannabis startups, which are now worth hundreds of millions of dollars. However, even the most successful of cannabis companies has experienced obstacles to growth and profitability. Often, at least in my experience, we'll hear more from our experts. Often those obstacles are the result of verbal agreements, never actually put down in writing, or a failure to anticipate what would be an unusual event, or poor or no due diligence practices. So by studying the details of cannabis transactions of our speakers' collective experiences, we're hoping to share with you numerous ways you can improve your today's and your future transactions. So I'm delighted and honored to moderate this panel of distinguished cannabis business leaders. And each is very knowledgeable in cannabis contracting and also minimizing risk. So let me introduce our panelists. First up is Kim Kovacs, CEO, ArcView Ventures, which is a prominent cannabis investment firm. She has over 20 years of executive leadership and experience across technology services and investment companies. As the founder and CEO of MyJane, Kim built a cannabis wellness technology platform, which was acquired in January 2019 by Manifest 7. Prior to MyJane, Kim founded or co-founded 6 additional companies, raised more than 100 million in equity capital, and has been an active angel investor for more than 10 years. Jeffrey Rosas, now let's see, do I have him on the screen? Yes, I do. Jeff Rosas is the Chief Strategy Officer of Item 9 Labs, which provides cannabis services and products to different stakeholder groups. Jeff is charged with guiding Item 9 Labs' strategic growth. He's a 24-year veteran of entrepreneurial ventures and business management. And he has extensive experience in funding, leading, developing, and performing corporate turnarounds for private and public startup ventures. And he's done 4 mergers in the cannabis industry. Additionally, Michael Mills is joining us. I believe, is he on?
I am, Janet.
Yeah, there you are. Thank you. Michael Mills is the CEO of Body and Mind, Inc., a multi-state cannabis operator. Mike has spent over 25 years in senior management positions in industries spanning manufacturing, media, technology, and finance. Body and Mind has operations in 4 markets: Nevada, California, Arkansas, and Ohio, and it continues to assess opportunities for expansion within those markets and in new markets too. And finally, Jeff Zuber, partner Zuber Lawler. Jeff is the founder of the firm, which has been named the leading US law firm in cannabis, and it is also a leader in other emerging industries. Jeff focuses on high stakes intellectual property, regulatory, and commercial litigation for Fortune companies, and funds, as well as leading cannabis companies. Jeff has been especially successful in hotly contested corporate and partnership disputes in the cannabis industry for the 4 14 past years. Pardon me. We're going to hear today about at least some of the information on a $65 million award in an arbitration case over a cannabis distribution contract. And that award included punitive damages and attorney's fees. Welcome, speakers. Thank you for your participation in this Cannabis Capital Conference.
Thank you.
Thanks, Janet.
Let's set the stage for an investment in or an acquisition of a cannabis company. So the parties have executed a letter of intent or may have actually entered into a definitive agreement. The investor or the buyer commences due diligence activities, analyzing financials, viewing the facilities of the target, interviewing management, pardon me, and then the investors or the buyer's team starts a detailed analysis of the company's contracts. Kim, let's start with you. As an investor in emerging companies, are there any contracts, in your opinion, that make or break your confidence in the targeted company?
Yes, I would say there's probably several different categories of that. And as an earlier stage investor, we usually come in when a lot of this stuff has been sort of in the forming stage. And so, a lot of times our early stage investors, and I'm myself included, I'm guilty of this, is that you sort of overlook maybe some of the things you would normally expect from a more mature company. But I think we're getting better in the cannabis space and requiring these things up front. So just even something simple like non-disclosure agreements. So we find that a lot of times, the companies that we invest in, they didn't really think about doing that. And we're finding more companies have maybe IP or various trade secrets or things that they need to protect. And they haven't even executed NDAs with, some of their partners or maybe some others that they've been talking about with regard to their technologies or different things like that. And so for us, having just even a Dropbox where you can centralize, these things and just have one NDA that's sort of your standard or a mutual NDA that's sort of a standard and just make it part of your practice, to make sure that you're protecting those assets that you have because, as an early stage investor, we're investing in you, but also, what you have as far as your company and what you can protect. And if you're getting sort of into that habit, like first off, to us, that's really just kind of important, and good corporate governance. The other thing I'm going to mention too are board minutes. I also find it's not really a contract, but it's just something that, a lot of times we don't even look at board minutes. We don't even ask for them. We don't even know if you've even had a board meeting. Sometimes we even don't even know who's on your board. And so, if you're a corporation, you need to have a board and you need to have a certain number of board members and you need to have board meetings and minutes and just get in the habit. Like I said, from day one, just get started down that path, put them into a Dropbox so that they're readily available for us. And you're not scrambling to try to recreate board minutes when we come in and ask for them. So those are just two things maybe to kick it off.
That's very good. Thank you. Does your own team conduct due diligence review? Or for the benefit of our audience, do you use a law firm or an accounting firm or some other due diligence consultant?
Well, so our view is sort of a little bit of a hodgepodge of different types of companies now. So we started out, 11 years ago, really as a safe place for investors and companies to meet and do angel deals, right? And so we've evolved from that over the last 11 years. I mean, we had these really kick-ass events. Of course, we can't do them in person anymore, but we're doing them virtually. And we still have them. But really what we're doing now is we're looking at the whole continuum of funding. So we have an angel network still that's very active, and they do their own due diligence. So we provide a platform where they can look across this platform, look at multiple deals, look at certain types of segment deals. And they do everything on their own. So they're kind of, the Lone Ranger in that regard. We also have the ArcView Ventures, which is now a collective fund. So what that means is it's a member managed fund. So you have a group of about 60 people that kind of, go together and work together on these deals, and collectively they do due diligence and pick the deals that they want to do. And then we have our broker dealer, which then is really more of the traditional, like you said, we involve, law firms and different financial firms to help us and guide us or the company through the due diligence process, because those are usually bigger transactions. They're not early stage funding. They're 5, 10, hundreds of millions of dollars that they're raising or going public or doing M&A. And so that level of diligence needs to follow that size of a deal.
That's good. What is your outlook, Kim, for cannabis M&A deals and capital raises for 2021? And you can go out further if you want to predict.
Well, let's see. So my crystal ball, I tried this for 2020, and I think I probably threw the ball off the balcony after the first couple of months because that crystal ball wasn't working for me. I would say that a couple of things. One is, we're still sort of chasing some of the public market stuff, right, with cannabis, because we don't have a lot of great exit liquidity options for people who are early stage investors. The other thing I'd like to say is that I think we as investors have really changed our investment horizon. We're now really looking at 7 to 10 years. Before, I would say we're kind of looking at the quick hits, and that was not really, in my opinion, the best way to go. We should have really been looking at this like a traditional, I've been in software forever. I've been in life sciences for a long time. No one would ever come to a life science investor and say, we're going to go public in 18 months. You think they're whack, you wouldn't even take that phone call. And so I think from a cannabis investor perspective, we're now kind of going along those types of trajectories, which is 7 to 10 year horizon. We're looking to place capital into really well-run companies that have a very unique value proposition, plant touching or not, doesn't matter. We're really looking at the comprehensiveness of the space. We're also looking at things like sustainability. So ESG is a really big play for us right now. We're looking at how can we sort of get into and look at the global hemp markets, industrial hemp, sustainability. The Biden administration is really focused on that as well. And for us, that's a great space to be. And again, long-term capital. These things are not going to change overnight. It takes an investment today to see a return in, multiple years out. And so we're kind of looking at that. And we actually put up a consulting group last year, at the end of last year, because we were getting so much inquiry from the market and also from these large corporations saying, we want to get into cannabis. We want to get into hemp. What do we do? How do we do this? How do we get ready for this? And so we've been focusing on the consulting side as well. But so my crystal ball is, this is really the best time, I think, to jump in as a cannabis investor. The rules are going kind of the right way. The federal outlook looks great. We got a lot of momentum. That's my word for the year. And I really think this is a great time.
Thank you. That was great. We appreciate that. Jeff Zuber, I know you've seen firsthand disastrous results coming out of a sloppy contract or perhaps non-existent contract. What typical, if you can tell us, what typical cannabis disputes do you encounter where the concerns are over the contract drafting, and how do those play a key part in litigation?
Thank you, Janet. Yes, we've seen a lot. The typical types of disputes, and by the way, sorry for the mood lighting. I'm traveling here, so this is what I'm dealing with. I'm not a romantic by nature, but it's just how it out.
You're a litigator.
Yes.
Not a lover.
But a lot of times there are some vagaries in the contract, things that just aren't quite clear. And a lot of times that will cause a dispute, but you'd be surprised how many times sometimes the language itself, it was done by a competent deal attorney who knows the cannabis industry. And for some reason, one side just isn't performing. And that comes up as well. And you have to find a way to resolve those disputes. A lot of the things we've been seeing right now are ownership disputes amongst parties who put the company together and just can't get it to work out now. it's a lot of times people go into these things, and it is so important for these things to work out, to pick the proper dance partner. It really is crucial, but it is not sufficient to do so. You have to get a very good, very competent deal attorney, which I am not, by the way. I am not. I'm a litigator, but sometimes you make that initial investment, which is hard to do for a lot of these companies. It's not that they're reckless, but you have limited resources, and you can only put the money into so many pots. And I get that, but I guess what I'm here to say is that if you can find that money, if you can get that extra investment, there's no better insurance you're going to buy. Nothing that's going to help you sleep better at night than finding a very good deal attorney, and a deal attorney that knows how to put these things together, knows when to pull in a regulatory expert to assist with these things. I mean, this is an emerging practice with a lot of new laws and a lot of new regulations that we'll be dealing with for the first time, that litigators will be reviewing for the first time. So it's that much more important to get the people that know what they're doing to put these things better correctly.
Have you encountered any particular terms that you might say that could be particularly problematic? Whether it's the state law, the law of the jurisdiction relative to the contract, or its attorney's fees, or whatever. Have you seen any particular ones that seem repetitively involved in these litigations?
We have seen certain things. One thing that comes up a lot, and you want to have a choice of venue provision and a choice of law provision that puts you in general in a state court that's going to enforce these contracts. That's assuming that you're the party that wants them to be enforced, because one of the typical defenses, if you somehow end up in federal court, is that the federal court should not enforce the contract for what the federal government still considers an illegal activity. And it's a nuanced area. It's not an easy answer as to whether or not a particular court is going to do it. And a lot of these decisions are still new and still pending review, but you can avoid that and get that thing in state court with the appropriate provision. Those things are enforceable. Other things, one typical thing is when things aren't working out, how to break it up. It's very important to have a clear termination provision, notice provision for cure, things like that, so that you know if it's not working out, what you can do to limit your liability and get out of it without creating a problem that they're going to turn around and say you breached this. So a clear termination provision can also be very helpful. Some of the terms, some of the things that you really want to protect as well is trade secrets and confidential information. One of the things we do is pursue patents for these cannabis plants and the formulas. I don't do it, but we have people who do. But when you're not going that route, the patent route, you have to start thinking about protecting those things that are trade secrets, that are things, formulations that just your competitors don't do as well as you do. And you have to do that from the get-go. One of the elements of a trade secret in the Uniform Trade Secrets Act is taking reasonable precautions to protect them. And that can mean a lot of different things. For Microsoft, protecting a trade secret can cost millions of dollars and coders and tons of security. And if you're a bakery, a mom and pop bakery, it may be only showing the recipe to the people who need to see it and putting a good lock on the door. What's reasonable depends on the situation and the resources at hand, but you have to do that from the beginning, because if you don't, you might not be able to fix it a couple of years down the line when that formula is making your company a lot of money. So these are some of the things that you have to do and make sure that you look at. Common provision amongst partners or former partners is non-competes. We see that litigated a lot. That's not something that's unique to the cannabis space, but it's certainly very common in terms of people coming on board, getting involved, all of a sudden it not working out, and parties not wanting someone to walk off with customers, off with some of the business, walk off with some of the formulations. So again, can't stress enough that we know it's hard, but to get a good, competent deal attorney to go over these things with you and to prioritize them, it's much cheaper and much more efficient. You will sleep much better doing that at the get-go, rather than talking to an attorney like me, trying to figure out how to resolve the situation once it's escalated.
Mike, let me switch to you, make sure we have enough time for everyone. Body and Mind is listed on the Canadian Stock Exchange. I noticed one of your press releases directs investors and prospective investors to reach out to you by phone or email, which I thought was quite odd, but maybe the coolest, most successful marketing campaign. You know, talk to the big guy. Do they call to ask about whether the company has done any due diligence on a new market or an acquisition, or maybe they don't use the term due diligence, but they ask you, why is this a good investment? Oh, Mike, you're muted.
I'll unmute here. I get a raft of questions, including shareholders who call and offer opportunities in states. You know, a year ago, this is happening in my state, and these are this is what we feel is going to happen on a licensing basis. So yeah, I get all kinds of questions, and I wanted to touch on a couple things that Kim had talked about and Jeff had talked about, and that is time horizon. And making sure that there's good corporate governance, and that in any transaction when you're looking at an opportunity are probably two of the most important things we look at right off the bat. But I think the most important thing in a transaction is starting with the end in mind and making sure that the group that you're in discussions with share your common values, are running their business the way you run your business. And that really, you need to feel very, very comfortable before you even get into an LOI or definitive stage, because once you get into the LOI process, believe me, you can spend a lot of time going through that process, feeling comfortable, and it still may not happen. And if you're, like ourselves, run a very lean operation, and you're going through several of these processes, and then you find something that in the discovery process that didn't really match the initial discussion, then that's really the end of the discussion. But you've spent a lot of company time, and I think that for most cannabis companies right now, time is probably the biggest constraint. So that's probably the advice that I would give. And I know there's a lot of investors on watching this presentation as well, and I think that holds true for any investment decision in cannabis. There's a lot of regulatory filings that you can dive into and understand what those contracts look like. Do they make sense? Does it look like the company is being run with strong due diligence and a lot of legal advice, and going forward? And I think that there's a big difference between public companies and private companies, and I think there's a lot of people who want to get in early on a private company, and that level of disclosure that you have in that environment can be quite strong, and it can also be less strong. Whereas I think that if you're in a public company, there is a real raft of disclosure, particularly if the company's been around for a long time.
Are you likely to continue hunting for new markets or new acquisitions in 2021?
We are looking all the time, and
can we send more people to you? Sorry, go ahead.
Yeah, look, we see great opportunities. I think that, again, going back to investor due diligence, particularly on public companies, but also on private companies, you really want to go back a year or 2 or 3 years and look at what management said they were going to do and what they did, particularly on a private company basis. Did they execute on their strategy? And if they didn't execute on their strategy, did they pivot and take advantage of new opportunities? So we've been growing our business considerably over the last couple of years and expanding into new states, and it's something we intend to do going forward.
Good, thank you. Jeffrey Rasas, I apologize for the delay. I'm so glad to get to you finally.
Why, thank you.
Let's assume that the parties have not yet gotten to a definitive contract, and they're still on the dance floor, getting to know each other. Maybe they're exchanging LOIs. Do you recommend at this early stage that the parties sign a mutual non-disclosure agreement?
Oh, absolutely. Disclosure agreements are key. I mean, it gives people really a freedom of openness to be able to discuss what they're trying to accomplish. I mean, without that, I don't know really, how they would move forward in a very progressive, efficient manner. Absolutely.
Do you have an opinion? I'm really curious to hear what the other speakers say too. Do you have an opinion as to whether due diligence should be done before a definitive contract is signed or after?
I'm going to be one of those guys. I think I would have a megaphone here and I would say, absolutely. Out from the rooftops. More things are, due diligence is so important. And, from our perspective, we're really fortunate because we have and Kim referenced, many different areas or avenues of due diligence. We have a really robust system internally that we've developed. And it's really, we work off more or less the Ernst & Young process, several different screening, weighted decision matrix, go, no-go concepts. But it's absolutely key to provide, extensive due diligence. And otherwise, you end up, and I'm saying not only from the perspective of the transaction, but due diligence on the individuals. We go a step deeper. We have a risk management service that we use, comprised of CIA, FBI, I mean, the real deal. Cannabis. So we want to understand, too, as Mike said, it's important to understand the players, make sure there's no bad actors. What was their, previous doings, and because that says a lot, especially if you're buying assets, licenses from LLCs. What are the LLC members all about? And it becomes, crucial. And I might add too, to support Zuber, and Lawler, I would say don't be frugal when it comes to outside professionals. You need to use the best. It's not a place you start to, save money. And, and also, so anyway, you're also likely going to be partnering up with these people if, for example, it's a merger. So it's not like you're going and buying a car, you want to get the best deal, you're out the door, you don't care. You're dealing with cultures and people that you're going to work with. And so you want to know their character, their integrity, and as much as you possibly can about the business. And you don't be afraid to say no. If it's a go or no go, sometimes you got to say no. And it's got to make sure also that it fits with the plan that the company has put together. It can't be shiny object syndrome. Otherwise, there's $1 billion plus in write-downs we've all seen in the public markets because of shiny object syndrome. Got to have it. It's got to fit a plan.
And if I'm sure there are companies on the webinar that are interested in gaining investment money or debt. So I asked this question for them. Do you or should we conduct due diligence on a prospective investment team or a lender, for example? And I'm thinking specifically with respect to the litigation history of these partners, business partners.
I absolutely. I would say for me, and I'm going to back into that a little bit. I wake up in the morning, I grab my journal. What am I most thankful for? Of course, tomorrow's journal is going to say for sitting with this panel at this beautiful conference. But it's also what's my strategic principle? It's to increase shareholder value. So as I look at that, and that guides me day in and day out, when I look at different investors that come in, a toxic, instrument of some type can destroy shareholder value, and it is not recoverable. I mean, I've seen it happen time and time again. Unfortunately, I've been an investor in a few public companies, one cannabis in general, that went from $5 to pennies, and it had nothing really to do with the business so much as bad decisions to enter into financing that had toxicity. It had ratchet provisions, reset provisions, tied to volume weighted average pricing, and stocks can be manipulated. And I can go on and on at this. It's a school of hard knocks that I went to a few times, and hopefully people listening would take advice and not enter that education because it's a tough one. But absolutely, you need to understand the terms. They're complicated. It's like three-dimensional chessboard these days, part art, part science on capital. So again, If you don't have the in-house expertise, don't be frugal. Talk to investment bankers, talk to professionals, get people, law firms, accountants, whatever you can around you as advisors, because it's key. The terms mean everything in a financing. Unless, of course, you're looking up and your water cooler is leaving the building, then maybe it's about the money, but terms are extremely important.
Well, it's always about the money, though, isn't it, at the end of the day? And, I mean, speaking from both an entrepreneur's perspective, raising a lot of money and having those, first tough conversations and literally walking away from investors, it's really hard because as an entrepreneur, I mean, you're just scrambling to get that first phone call sometimes with an investor. And once you get them on the hook, the last thing you want to do is do due diligence and find out they're not the right one for you, because now what, right? But I would echo what Jeffrey's saying, which is, say no, just say no, because if it's not a good relationship, you guys aren't aligned on strategy, you're not aligned on exit and process and various things and where you want to go with this business, it's just going to be contentious from the first day, basically. And you don't want to do that. And I would add to the advisory side, which is absolutely key. I agree with that. But there's also business advisory. So if you haven't done this kind of a business before, or, raise money in this kind of a way before, there's a lot of people out there that can help you. Like one of the things we do at RQ, we have this women's inclusion network, and we find that women have a harder time raising capital. And so we're here for you, right? To help you and mentor you and guide you through these things and be a sounding board, just to see if it's the right kind of fit for you. So in addition to, your legal and accounting teams and things like that, just get people who've been there, done that.
Agreed.
Well, I've been given the plug to wrap up. I want to thank everyone for your contributions. A wonderful session today. And we hope to see you again soon.
Thank you.
Turning
everybody.
it over to you.
Thanks, Janet. Thanks, Elliot.
Thank you.
Thank you all so much for being here. Kim, Jeff, Mike, Jeffrey, and Janet. Fabulous having all of you here. Wonderful conversation. I look to hopefully have an update on this next time. Thank you all.
Thank you all. Bye-bye.
Bye-bye.
All right. So that was those were our good friends at Zuber Lawler. They are an elite law firm in the space, joined by Kim Kovach of ArcView, Michael Mills from Body and Mind, listed on the OTC at BMMJ. And then Item 9 Labs, Jeffrey Rasas is the Chief Strategy Officer, also listed on the OTC INLB. Four fabulous panelists. Zuber Lawler put on a great conversation there. Thankful. Now let's keep it moving to our good friend, Deborah Borchardt of the Green Market Report. She's going to be leading a wonderful conversation with truly a cannabis OG, if there ever was one. But Deborah, I will let you take it away.
Thank you, Elliot. I'm really excited to talk to Mark Godsey today. He is the CEO of Shackelford Pharma. And one of the things that, of course, impresses me the most with this company is the work that they are doing on children with epilepsy. It's certainly a disease that really hits hard. If you know anyone whose child has suffered from epilepsy, it's just a heartbreaking thing to watch and to go through as a family and as, for the child themselves. But that isn't the only thing that Shackelford is focused on. And Mark, thank you so much for joining me so that you can tell this audience so much about this company and all the wonderful things that you guys are working on.
Great. Thank you. Thank you so much for inviting us and delighted to be here. Yes, Shackelford Pharma is an exciting venture and really has its beginnings from Alan Shackelford's work and the work that he did treating young Charlotte many, many years ago that really has changed medicine really forever. Alan, after that magic moment happened, went back to being a doctor. He's a Harvard-trained doctor. And with the story finding itself on CNN and Sanjay Gupta, many parents and their children who were unable to find medical solutions to conditions that they had, landed on his doorstep. Alan is also an occupational doctor, which means that he treats workers' compensation type conditions and largely pain, which he was using cannabis to help. And these patients often suffered from secondary conditions. And so what Alan observed with these patients that had some benefit from cannabis with these secondary conditions, along with the parents of children, et cetera, that came to his office, he developed an absolute treasure trove of information. And really, that's the womb that Shackelford Pharma has really been born from. Alan had an epiphany about a year or so ago after treating some 25,000 patients, which we believe is more than anybody's treated in the world. Also, he's been very instrumental in a lot of the legislative changes, not only in America, but around the world. He's appeared before legislatures everywhere, sharing his work treating patients. And so Alan had this epiphany that, he can treat so many patients a day, which is great, but what if he was able to scale these solutions that he has within a company, and he could treat people around the world? Watching GW Pharma and the great success that they had, which of course started from his work, he approached myself, and I have a biotech background. I've co-founded 2 of Canada's leading biotech companies. If people in the audience are familiar with coated stents, you may have a loved one that has had 1 or 2. I'm a co-founder of the company that created that, and we also created the 5th largest vaccine company in the world. So Alan approached me to help build a company around him. And there's a great saying in Africa: if you want to go fast, go alone. If you want to go far, go in a group. And so the first step was to really create a fantastic team around Alan, and which we have. We're based in Vancouver, Canada. Our Deputy Surgeon General, ex-Surgeon General for Canada, is our Chief Scientific Officer. The person that developed the equivalent of the FDA in Israel and has conducted over 150 clinical trials is our regulatory person, and we've got many other people on our team. The focus of our company, not unlike GW Pharma, is to take Alan's evidence-based work with patients and go through the regulatory process to create medicines. And medicines are incredibly valuable. And Alan's work has really connected, if you like, the cannabis market with the pharma market. And one might put a plus, but I think what probably is more accurate is to put a multiplier. And so the combination of those is really where we reside. And our mission is, as Alan says, it's all about the patients, not about the pot. But to use Alan's medicines, and I'll put those in quotation marks, that interact with the endocannabinoid system to provide relief to people with unmet medical conditions.
And I think that is so special about Shackelford. And when he was referring to Charlotte, in case anyone doesn't know, it's Charlotte Fiji, the little girl that was on the CNN report many, many years ago. But her story really destigmatized a lot of the idea of using cannabis as a medical treatment. And just that one story and that one patient did so much for the industry as a whole. But I love that his knowledge is based on real world experience, and that it's so much of what he observed, and that's so much a part of real true medicine is observation, in collecting that observational data. And to your point, now he can take that and spread it to so many people and to so many other conditions, because some of the other items that you guys are studying, in addition to the pediatric epilepsy, is things like cluster headaches. This is an area that doesn't get as much attention as some other problems that people face, but it's certainly still a problem. And I know that there have been studies about migraines in cannabis. Let's talk a little bit about the cluster headache idea and where Shackelford is going on that subject.
Well, thank you. So Alan's data but concludes that there are about 27 conditions that he was able to successfully treat. So you've got to start somewhere, sort of the proverbial 25-cent hamburger. Where do you start? And so what we did is we chose 3 areas. Epilepsy is one, and I wasn't aware, but there's about a dozen different types of epileptic conditions. Some where you, instead of having sort of a shaking fit, you go into a catatonic state. So one of our human trials, which is going to start at the end of this year, is going to focus on that. The next is cluster headaches, which is an incredibly challenging condition. Neurologists are challenged to treat it. It's terrible for people, and Alan has had success in that. From a regulatory standpoint, it's always easier to embark on a new condition if you have already established the efficacy in a related condition. So what cluster headaches does is it creates a beachhead into acute cluster headaches and also migraines. And from a regulatory standpoint, that's very attractive to us. What we also have in addition to this is we've licensed in a technology from Tel Aviv University that deals with microdosing, which has never been done before. So using incredibly small amounts. Now we're talking about micro amounts as opposed to milliliter amounts. And the animal studies have shown, and this is causing our medical team to be incredibly excited, have shown in the area of mice where you induce dementia and you face memory loss. So for a mouse, he forgets where his water is, he forgets where his food is. And then you apply cannabis, a certain formulation in a microdose form. And unbelievably, not unlike what happened to Charlotte, it's almost like magic. The mice remember where the water is and they remember where the food is. This is really amongst our doctors, and I invite everybody to go to our website and have a look at our team, has caused our medical group to suggest that this is going to challenge the current model of understanding Alzheimer's. And it might suggest that there's actually the ability to reverse it. And so our 3 trials in mild cognitive impairment, epilepsy, and cluster headaches, will be doing those human trials, a phase 2 towards the end of this year. And then we have a much larger pipeline. And as those start to move forward and our access to capital increases, we'll be slipping in additional trials following that. And the choice of going this pharma route was one that we had to sort of, we were somewhat challenged to figure out what we should do. Should we go the dispensary route? How should we deliver this to patients? And I think, without wanting to try and change policies or get up on an Apple box and change the world, how can you effectively integrate into the medical system and to really get to patients and families and create a sense of security and safety, that the actual medicine is going to be predictable and the same every time. And so the GW Pharma example really establishes that if you want to create a medicine that doctors can embrace and they can deliver that to their patients, understanding dosage and the intervals of dosage and treatment, the pharma route at this point in time is more likely the better way to go. So we have taken all of Alan's seminal work and now applying it into the regulatory setting. And unlike most medicines where you don't have an opportunity to test them on people, you test them on animals and then eventually you get to humans. This is a very unique situation because Alan has treated these conditions successfully. So we're not going to be surprised by the results any more than I think GW Pharma was going to be surprised by the results that they achieved. Mm-hmm. And it's incredibly exciting to support Alan and his vision and work with our team. Thank you.
And one of the ways that you're going about this is applying for orphan drug status. That certainly, it doesn't kind of put you at the beginning of the line, but it certainly, I don't want to say speeds it up, but it definitely shortens the time because the approach to orphan drug status by the government is, they look at it and they go, wow, we've got these conditions, not a lot of people are trying to help them. So we certainly want to do what we can to quickly get these drugs to people that need the help. And that seems to be one of the avenues that Shackelford is using.
Exactly. And we're wanting to try and lever as much as we possibly can. And we do have that regulatory expertise and with Alan's seminal work. So in the orphan drug area, the $3 million application fee is waived. You're given 7 years exclusivity in the United States if successful. And it's designed for exactly these patients that came to Alan's office that don't represent a huge market, and as a result, pharma companies are less motivated to try and support or figure out a solution. So the regulatory pathway makes it much easier. So for example, the cluster headaches, there would be an opportunity for us to apply for a subset of the population so that we could enjoy orphan drug status, and then from a regulatory standpoint, that creates some momentum and a beachhead into these other areas. And the FDA is really, I think, like a consumer protection agency more than anything. And so long as there's something that is shown to be efficacious, the FDA is extraordinarily supportive. So we view the FDA very much as a friend of the company, and the process we're excited about going through, and then in turn being able to allow doctors and others to prescribe the medicines that Alan has developed. Yes.
And Shackelford was formed in 2018. You guys did a seed round, then you did a Reg A, correct?
Correct. We currently have a Reg A that's open, and people can go to our website and get some direction there. There's still some left on the Reg A. We have about another $4 million to go, which is available to people. And I invite people to come and have a look at the company. And if there are further questions, you or your advisors or doctors are welcome to speak. And yes, we chose the Reg A. We think it's important to, there were comments earlier about investors and the type of investors, and it's really an opportunity for everybody to participate in the Shackelford Pharma adventure. And if you look at GW Pharma, how successful it's been from a financial standpoint, that opportunity is now available to everybody through Shackelford Pharma. So I think the Reg A lends itself to that. Once we finish this off, we're going to be in all likelihood pursuing a more traditional investment banking type relationship, and ultimately with a view of the company going public. But yes, currently we have this Reg A open, and people are welcome to go to our website and to investigate it or explore it. Thank you.
You know, and ultimately, at the end of the day, it's really about helping people out. It's making sure that these people and these children that, you know, through no fault of their own, have this terrible thing happening to them. And, you know, I love that you guys are out there and working hard to help these kids, to help these people that are suffering from these headaches, because it certainly, you know, hurts the economy in the sense of productivity. You maybe can't work that day or something of that sort. And then when you brought in the Alzheimer's, I can't tell you how many people I know whose parents have suffered from Alzheimer's, and how difficult it is on the whole family when you see someone you love so much go through that. It would be so wonderful if this works out and is able to treat people.
I couldn't agree with you more. And we view ourselves really as stewards of the know-how, if you like. So too does Alan. We're really not owners, and it's really for the benefit of the world. And it's super exciting to be involved. And I'm reminded of a person at NASA who emptied waste paper baskets, and he was asked what his job was, and he said, "Well, I helped put a man on the moon." And everybody who is involved in our company is absolutely part and parcel of this process. And it's a great privilege, as I mentioned earlier, to be part of this and to potentially affect people's lives. And so it's a huge privilege, big responsibility, but we're excited about the momentum that we have. The 3 clinical trials that we've got organized at the end of the year for a young company is really pretty much unheard of. So we're very excited about where we're going. Thank you.
Hi, Elliot.
Hey, Deborah, Mark, great conversation. I just want to ask real quick, Mark, what's your minimum on the Reg A, if you can say?
I think forgive me for, I think the minimum is $1,500 is the minimum.
Great. I mean, that's
really
such value. Yeah. I mean, I might visit your website. I'm just saying.
When you think of the value, and here I don't want to sound like I'm selling Ginzo knives, but the medicine is incredibly valuable if you can create a medicine. And typically medicines, when they're approved, are worth about $2.5 billion. And along the way, as you go through the clinical trial process, of course, the value increases. The value for completing a phase 2 for an indication can be, if it was in the GW Pharma case, it was valued at about $1.5 billion. Most compounds is around the $500 million range, bless you. And so over the course of the next sort of year and a half, I think there's going to be tremendous value creation in Shackelford, and it's very compatible to help people and also enjoy, commercial upside. And so, it's checking off all the boxes. So
Amen.
Yes, thank you.
Yeah, I appreciate that, Mark. Thank you so much for that info. Deborah, thank you so much for leading the conversation. Mark, Deborah, so nice to have you all. We will see you soon.
Bye.
Great. Thank you so much. Thank you, Deborah. Thank you.
Thank you again. That is Shackelford Pharma. You can reach them at shackelfordpharma.com. Incredible value in their Reg A. Highly recommend it. I'm not a financial consultant, so I don't actually officially recommend that, but you know what I mean. Awesome. Let's keep moving. Curio Wellness is up next. Do we have, is it Jarrell? Did I say that right?
You've got me.
Beautiful. Jarrell, it is such a pleasure to have you. Thank you for bearing with us. We're a few minutes behind here, but given that, I'm going to let you take it right away.
Oh, great. I'll jump right into our investor presentation and walk folks through a few slides about Curio and the Curio WMBE Fund. So thanks everybody for joining, and also thank you to the Benzinga
Mr. Dave. So how was that?
For making
Mark, you're still on.
For making the platform available for us to share information about both Curio and the fund. Before digging too deeply into the idea, I want to take a beat just to explain what the Curio WMBE Fund is and represents and why it's accredited investors. Fundamentally, we've created a cannabis dispensary franchising opportunity. We're in the process of receiving that approval. We expect it any day now. It's based on Curio's existing wellness center in Timonium, Maryland. It's at a little bit north of Baltimore, Maryland. The idea behind the fund is to enable women and minority business ownership. Really, the idea sprung from our Curio Wellness's CEO, Michael Braunfein's conversations in the industry and just observing what was going on within licensing and the lack of diversity that was resulting from the licensing processes. He and one of our key investors, a man named Theo Rogers, who we'll talk a little bit more about in a couple slides, came up with this idea that the real solution was to create business ownership opportunities that both reduce the access to capital barrier, which is the role the fund plays, but also provided ongoing operational support to individually owned dispensaries, because some of the challenges they faced can be significantly addressed by creating a network of dispensaries that leverages both the marketing opportunity of being part of a larger network and some of the operational insights that you can drive through a portfolio of stores. So that said, on the fund side, we expect to generate excellent risk-adjusted returns based on a network of 40 to 50 dispensaries we'll place in the world. Our expectation is that over the life of the fund, there's an opportunity to generate 5 to 6 times cash-on-cash return. That results in a 43% plus IRR rate over the life of the fund. We're targeting a $30 million raise. We've passed the 50% mark, so we're really excited about the progress we've had to date. That 50% that we've committed includes a $3 million commitment from the general partner, which includes myself as the managing director of the fund, Michael Bronfein, the CEO of Curio, Andy Cohen, who I'll describe or share a little bit of his background as we get going. He's the president of the franchising aspect of the effort, as well as Theo Rogers, who will serve as our investment committee chair. We expect to launch 40 to 50 stores over the course of 3 to 4 years. So we'll draw capital as we identify opportunities to put stores in the world. And then, and we also target franchises for launch in limited license states. That's really kind of the most top level description of our criteria for what makes an attractive market to launch the stores in. So just giving a little bit of a visual to the existing wellness center in Baltimore, Maryland. Really, we think of a wellness center, and the reason we describe our dispensaries as wellness centers as a place for broad access to wellness treatments and services. So that top picture on the top left of the slide, pardon me, is of our holistic pharmacy. You can think of the holistic pharmacy as the part of the store that sells access, provides access to vitamins, dietary supplements, hemp-derived CBD, all of those publicly available products that, excuse me, that make that play a role in in patient wellness. The second picture at the top is our wellness center. Pardon. Is the the waiting area. 1 second. Let me clear my throat. Excuse me. That top right picture is a picture of the waiting area for the spa services. So there are 4 treatment rooms in the wellness center that provide access to massage, physical therapy through massage, acupuncture, as well as have 3 estheticians. The idea is that the spa represents the services component of a fulsome wellness offering. And then in the bottom right corner is our classroom, as you see displayed behind me, currently empty due to COVID, but the role of the classroom is really to represent the relationship with the community that the dispensaries serve in terms of providing access to information and education around cannabis. So we teach classes about cannabis, cannabis in your body, cannabis and women's health issues, as well as other classes around some of the nutraceutical offerings that we have in the store. And then finally, we have the cannabis dispensary at the bottom left, really the star of the show, but importantly, it represents the relationship with patients and consumers in terms of being able to connect patients with treatments that best address their conditions or help allow consumers access to products that are targeted in terms of what they're trying to achieve by consuming cannabis. The next page, so I'd like to take a minute to talk about cannabis retailing and why it's unique from the rest of the retailing world, as well as an attractive opportunity to invest in the relationship with an end consumer. Among retailers, sales per square foot really is that primary metric. Within cannabis, that represents a fundamentally different paradigm. Nationally, retail sales per square foot ranges from $300 to $400 per square foot on average. In cannabis, it is multiples of that. Our wellness center, when you remove the wellness center, because it doesn't really have a role in the sale of product, ranges from $1,800 to $2,000 per square foot, and really occupies rarefied air from the standpoint of the amount of revenue you can generate in the retail footprint. Another aspect that's very unique among retailing is the breadth of the consumer demographics. Really, as you see in a lot of contexts in the cannabis industry, consumption is fairly consistent across all demographics, whether that be ethnic, socioeconomic, income, blue collar, white collar. Really, the placement of a dispensary is much more about identifying the tactical reasons to place a store, more so than finding a very specific consumer. The inventory trends are very attractive, as well as the overall aspect of dispensary ownership, which combine the high revenue characteristics with a relatively high gross margin on the product, which really is a dynamite opportunity to drive the success of a store. So a quick beat about Curio Wellness. Curio, as the sponsor and the owner of the franchising side of the relationship, was founded in 2014 and is the leading cannabis cultivator and manufacturer in the state of Maryland. We've received some great attention in terms of our ability to connect and develop products that connect wellness to cannabis, in that our focus is on developing treatments that directly address patient conditions or patient expectations around improving their quality of life. So Curio is a vertically integrated operator in the state of Maryland with cultivation, manufacturing, and its flagship dispensary. And really our point of pride on the cultivation and manufacturing side is being one of the few CGMP certified entities. The rest of this conversation will focus around the dispensing aspect, which we're building the franchising opportunity around. So the team leading the Curio WMBE Fund really is representative of the key aspects of driving a financial return to our investors. So I mentioned Michael Bronfein, our CEO at Curio Wellness. His storied background really is a story of a serial entrepreneur who led the healthcare investment platform for Sterling Partners for many years before deciding to found Curio along with his daughter, Wendy Bronfein, who you can see on the side is our chief brand officer and plays a key role in the franchising effort, as you'd expect, given her role in driving the marketing and brand message of the store, of the chain of stores. Theo Rogers, I mentioned him previously. He's a longtime Baltimore resident and very impressive entrepreneur in his own right, having built A&R Development, one of the larger African-American owned real estate development firms on the East Coast. He's a longtime friend of Michael's and a longtime co-investor. So they partnered to conceive of this idea, and then reached out to myself and Andy Cohen to bring it to fruition. Now, Andy Cohen is the president of Curio Retail Services, the franchising division of Curio Wellness that'll hold the relationship with franchisees. Andy is a little bit custom built for this opportunity, having worked with grassroots from early on here in the Maryland market. Building it from, I joke with him that he built it from dirt up through their acquisition by Curaleaf last summer. He joined Curio really in an effort to get back to, or to connect to his early entrepreneurial roots, having built a chain of women's retail stores in along the East Coast from concept up to 25 stores before selling it to a private equity fund. So being able to put retailing along with cannabis really is a great opportunity for him. Additionally, Daryl Green is a consultant to the fund. He's the former head of franchising for GNC. And then Douglas Palmer is the former mayor of Trenton, really has become a leading voice around diversity issues, particularly working with corporate partners to understand how best to position themselves to support diversity effort. It's really more of a criteria than than a list of states. So from our perspective, it's easiest to talk about a criteria for medical programs. So we look for places that are patient friendly with broad treatment indications and make it easy for, and where it's easy for physicians to have that engagement with patients to identify them as eligible as cannabis consumers. We look for rapidly growing patient counts, as well as markets where the average patient spend is both strong and sustainable. So here in the Maryland market at our wellness center, our patient spend ranges from $3,200 to $3,300 per patient. As you all know, that's all in cash. So it's a very strong position in terms of the future prospects of cannabis as banking regulations become more permissive, and we would eventually be able to take credit cards. So there's strong consumer trends in the marketplace. Maybe one of the more important aspects about the design of the store is acknowledging that patients visit twice per month on average. So from that perspective, we really take an eye towards segmenting the store experience between those who are aware and visiting for a second time, or for that multiple times in a month to pick up their medicine, relative to someone who needs more education and support in selecting the right products. In terms of who we partner with on the franchising side, our goal is to identify individuals who both have a clinical lens, given our positioning in the marketplace, as well as a really strong entrepreneurial spirit. So you can see Takoya Farrakhan, that's the GM of our wellness center here in Maryland. She really embodies those two facets of our criteria for an entrepreneur. She's got a lot of natural leadership qualities, which is important in terms of building a business and building the team with whom you're going to drive the financial success of the site. And as a pharmacist, she has both the clinical perspective and the retail background that will really drive the success of the store. The way that we'll support Takoya is really separated into two components. Really, the launch support, in that the challenges of getting a license via application or acquisition may be more significant than a typical franchisee or small business owner is prepared to handle on their own, as well as the site selection, build out, and the hiring and training of your initial employees. The second phase of the support we offer is operational support from years that will survive through the life of the franchise agreement. All of those typical things you think of in franchising, from standard operating procedures through marketing and other back-end support. And then because we're in cannabis, we have continuing education as a component to make sure that we stay current, right? So to quickly describe the relationship that the fund will have with each franchisee, we require that a franchisee make a minimum investment into each store, and in exchange, the fund will provide access to the remaining capital that they need to get the store up and running. Two components to that is an equity investment for 40% of the store, as well as a loan directly to the franchisee that allows the franchisee from day one to be 60% owner. The fund protects its interest via a lien on the license and the lease, and then the franchise partner pays down the loan and becomes eligible to buy out the fund and transition to 100% ownership, and provide investors with a return for having supported the launch of the store. So I'll jump to the end there. If you're interested in additional information, I'd encourage you to reach out to me directly. I'm available on LinkedIn or at the email address on the screen. I'd also encourage you to visit Curio's website at www.curiowellness.com. Thank you.
Thank you so much, Jarrell. Wonderful presentation. Very, very interesting. And I think you're doing some very necessary things and having a necessary discussion. in just one market, but hopefully we can all replicate that in others. So thank you again for being here with us.
Thanks a bunch.
Fantastic. Awesome. So that was Curio Wellness, Curio wellness.com. Very interesting opportunity there. I think they said they're already 50% committed on their raise. So that's awesome. Please do check them out. Now to one panel that I am just uber excited for. And it's not just because it has the coolest Italian leading them all, Anthony Noto. Not Tony Toto, like I called you yesterday, but Anthony Noto.
I don't remember that. You could have slid with that one. I had no recollection of that.
Oh, I don't think I'd want to slide with that one. That was awful. So, Tony, I'm going to let you take it away. This panel is incredible, so please dive right in.
Yeah, thank you so much, Elliot. It's been a great day so far, great 2 days, and I'm certainly honored to be hosting everybody today. You're all terrific. It's a pretty jam-packed half hour that we have, or a little under a half hour, about 25 minutes. And I want to get to everybody as much as possible. So we'll try to find equal time for everybody. So welcome to this California Cannabis panel. We got Megan Halstead, Nick Kovacevic. I'm sorry, I butchered your last name, Nick. You want to help me out with that one? Kovacevic. Got it. George Allen, who was here yesterday, and Jessica Billingsley. So welcome, everybody. My first question goes to Jessica, actually. I want to know, when I spoke with you recently, we talked about what California cannabis consumers are buying. What are they leaning toward? What do the numbers indicate? I think Jessica's here. Is she there? Is she off camera?
I am here.
Oh, we don't see
And
ya.
I don't know why my camera's not showing up, to be honest. I've been on Zoom videos all day.
That's the story of our lives this past year. Well, the audio is what matters, I think, because sometimes folks just have like their YouTube up and they're just listening to this as they go about their daily business. So if you want to talk without the camera, that's fine. And we'll probably adjust as we go. But yeah, you had some great insight the other day, because I know Akerna is crunching the numbers. They're keeping track of buying habits. So what are your thoughts? What makes California different? Or is a cannabis consumer different in California than, say, our neighbors over here in New York, New Jersey?
Well, there are some differences. California trends a bit more male in the consumer than female, which I think is interesting. And also trends toward a bit of a younger demographic than we see nationally. And then after that, I think the next really interesting data point as we look specifically at California consumers is that flower is still king in the California market space.
Okay.
Over 50% of all cannabis sales fall into the flower category.
Is there an indication that might change at all? I mean, is something creeping up there? Like, or what are the buying trends showing you? I mean, are edibles catching up at all?
Actually, kind of an interesting note on edibles. The older you are, generally, the more likely you are to spend on edibles. So we're not actually seeing our younger demographics spending on edibles. And we see a direct, almost an inverse correlation with our younger demographic and the cartridges, pens, and concentrates category. So our younger folks who purchase something other than flower, it tends to be cartridges and pens. The older you are, the less likely you are to purchase in that category, the more likely you are to purchase edibles.
Interesting. Okay, Megan, Ease put out a report last month on consumer trends. What insight can you provide for us on how 2020 impacted consumption? And is that an indicator of how consumers in other markets might behave?
Yeah, so it's interesting. Some of our data actually is slightly different than what Jessica's seeing. So as you know, Ease is a delivery marketplace, so slightly different angle there. For us, we actually see edibles as our most popular product. Our consumer base is more dominant in terms of males versus females, but women are quickly catching up on our platform.
Interesting. Okay. So now, George, you grabbed headlines yesterday. I'm going to tweak the question for you. just to shake it up a little bit. And Indus announced a deal with Lowell, $39 million. It was an M&A heavy day and a week even. Actually, we had our deals section on benzinga.com has all the latest of M&A news within the cannabis space. And I'm keeping track of that. And I know a lot of the folks watching are too. What's to come? Is this part of the Indus strategy book now? And should we expect more M&A either from you or competitors in the space?
Well, I definitely think you're going to see more M&A in the space. I think California is one of the markets where people are seeing a fair amount of opportunity to grab brand and heft. I also think you're going to see a momentum swing towards California as people start thinking about what does cannabis look like underneath a sort of a consistent federal legalization policy, which I think is starting to come into focus over the next 12, 18 months. So I do see a fair amount of M&A happening in anticipation of that. I think for us, the Lowell acquisition was really about a brand that we had seen and watched that we felt that was entirely different. I mean, I've said this countless times on panels and presentations. I generally think that most brands in cannabis have very little equity value in them because they're really unable to sway the customer. Very few customers will actually come into a dispensary searching for a specific SKU. What we see for the most part in California is a customer that is very transactional. They walk in and they're looking for a deal. They're usually looking for, and there's great call to actions on deals that you can get out of customers, but very, very rare. We think it's somewhere between 25 and 30% of sort of transactions in California are sort of are brand aware transactions, I mean brand intentional. And we think Lowell is a very unique brand. On top of that, our view on Lowell, the short version is we think the product has we think that the brand there has real separation in terms of how it's identified with clients. It obviously has a massive social footprint, and so we really like that brand as our hero brand, our sort of our high-end brand, and it's certainly going to become a brand that we are going to do everything we can to make a common nationwide name here in cannabis.
So did that make for an interesting partners, the social footprint that's kind of unique, no?
Yeah, 100%. And it's definitely something that they've done a phenomenal job with historically. And it's something that we're committed to maintaining.
Yeah. Nick, I want to switch it over to you. I'm sorry for my Travolta Adelgazim moment before for butchering your name. But Nick, we chatted earlier this week where you talked a little bit about a freight Armageddon. It was an interest. I hadn't heard this story, but I was very, very interested in learning more about it. How did California end up in this mess, and what's going on now?
Well, it's a myriad of factors. And first of all, thanks for having me. And it's an honor to be here with my esteemed colleagues on this panel. So thank you. Today is the last day of our fiscal quarter. So as you can see behind me, we've got a ton of product lined up, ready to go out the door. But, we're having a problem getting product in. And that brings you to the freight issue, right? And this is a global issue, right? Anybody importing freight right now is seeing challenges. Why? It started with COVID. And what we've actually seen, most people predicted that, consumption would go down. The opposite happened. We're seeing record number of imports coming for all industries, right? And one of the largest ports in the world is the Port of Long Beach that services Southern California. Right outside my house here, I was taking a morning stroll along the beach. I counted about 15 boats lined up, sitting in the harbor, waiting to get into port to be unloaded. The other thing that's exacerbating this is not only demand, but the port is short-staffed due to COVID restrictions. As you know, COVID has hit Southern California pretty hard during this winter season. So we do expect that to improve. We also thought that the freight headwinds would slow much more than they did, improve much more than they did, in light of Chinese New Year shutdown, right? So the factories are shut down early part of February. They were, which means there were no ships leaving. You would have thought all of these boats would have gotten through the port by now, but as I said, I was out this morning and counted about 15 boats. So we have this problem. It's affecting our industry. It's affecting all industries. And that's an opportunity for a company like KushCo to get creative and figure out the best ways to still get goods to our clients. Supply chains can't go down. Consumers need their cannabis. They're in the market every day. And so we have to make sure that we deliver product. It's a challenge that we've been able to successfully navigate, but it hasn't been easy. And again, we look forward to this issue subsiding, but there is no direct line of sight as to when that will happen.
Well, let's just do a quick follow-up to that. How do you get creative? Give us some insight into that, because a lot of young entrepreneurs might be watching. It's tough to get creative and navigate those problems, especially if there's a regulatory aspect to it beyond their control. What did KushCo do?
Yeah, so look, we have a whole international freight team that tackles these issues. We look at alternative options to bringing product in by boat. You can bring product in by air. We're bringing product in through Canada, less congested ports. We're onshoring production. We're now producing goods here domestically. We're producing, as we have been for a while, but we're also now moving some of our manufacturing to Mexico. So it's a much easier supply route. So it's not a one solution, but you've got to use them all at your disposal. We also rearrange production schedules to meet customer needs. If we can ship somebody something that's in stock and they don't need their custom order as quickly, that frees up opportunity to now take that on the slower boat, and maybe the delay is then acceptable, right? So it's all about meeting customer demand. It does tie up working capital, right? And a lot of people don't understand the working capital burden that it requires. We announced we raised $40 million on Monday morning. We announced the deal. It closed on Wednesday. And that was one of the reasons we called out as to the raise. The working capital is tough, especially when you factor in the tariffs, which we have to pay up front. Customs just comes in and takes the money out of your account. They have full access, right? It's not, hey, I'll mail you a check when I get to it. No, they come right in and grab it. And then those tariffs are all paid up. We've got products in our warehouse. Then we ship it to clients, and then they pay us on a net, 30 basis a lot of times. So it's tough on the working capital, especially when you factor in these freight headwinds, and it's something we have to navigate. But no excuses. We got to get product to our clients, and that's what we do at KushCo.
No excuses. I like that. So Jessica's back on camera. Welcome back. So let's. I want to delve into social equity a little bit, because, and it's kind of comes full circle for me, because when I first arrived at Benzinga.com, I covered a panel with Al Harrington. I wasn't hosting, but I was covering it as a reporter. And one of the things that he said that really struck me was, well, he didn't mince words. And he said California's social equity program was an example of what not to do. And that was about a year ago, maybe a little less than a year ago. So I want to get everybody's perspective on what's changed in the last year. What's the program like now? What should folks know? Has it gotten better? Has it gotten worse? Or has it sort of stayed the same? Why or why not? And let's tee off to Jessica.
Sure, thank you. Well, I actually, one of my inspirations for getting into the industry way back when originally was Montel Williams. He's a passionate medical advocate, of course, with MS, and I have a family member with a similar demyelinating illness, and he really inspired me to get involved in legal cannabis originally when I invested in an operator back in 2009. Today, we see this through a number of lenses, and it starts with each of our businesses. It starts with capital. We are a member of the Cannabis Trade Federation, which recently announced the formation of United States Cannabis Coalition in partnership with MPP, Marijuana Policy Project. And one of the things we're most proud of at CTF is our DEI task force, which has been doing a lot of work on this topic, to which member businesses will subscribe and participate and agree to a rating system and a scorecard by which to measure ourselves. Also, I want to mention that we're getting a lot of inbounds from our clients on this too. And in our point of sale function, we added a roundup donation piece of functionality that many of our clients are leveraging to use to donate to social equity programs. I think you're on mute, Tony.
I'm in a New York apartment and the heat is making a lot of noise. So I put myself on mute to not disrupt that because I know the mic would pick it up. All right, so we have about 10 minutes left. Megan, I would love to get your thoughts on that because I know Ease has addressed the issue in the past. What are your thoughts? Good, bad, worse?
You know, in progress, I guess I would say, you know, Ease really does strive to be industry leading in terms of supporting social justice. And the way that, you know, we have been doing that thus far is through our Momentum Business Accelerator program and also our social equity menu. So the Momentum Business Accelerator, we give out grants to 10 underrepresented founders of $50,000, and then we help them with basically a 12-week training and mentorship series of engagements with, you know, Ease employees and also other members of the cannabis community to really help them focus on, you know, building their cannabis business skill set. And then also trying to, you know, help them seek access to capital. So really proud of that program. We just announced our second class. This is the first year we are expanding out of California. So that's really exciting. And then, you know, we also focus basically on how do we embed, you know, social equity and social justice throughout the supply chain. So, you know, we have our social equity menu on the platform, and to date we've done $2.6 million in revenue, and those are dollars directly in the pockets of social equity licensees. So we're really proud of that, and we continue to expand that platform. And then, you know, in 2020 we really focused and continuing to focus today on how we incorporate more social equity into the Ease supply chain. When we were doing that is we've partnered with Blackstar Farms, who is actually providing all of the packaging for our private label brand circles. So, you know, I think it's an ongoing effort that we need to stay, you know, committed and dedicated to. I won't say, you know, we're there. I would say we continue to, you know, push forward and really focus on progress.
George, I know in some situations, and I hate to put you on the spot here, but usually when an M&A deal occurs, there tend to be layoffs because, you know, companies make cuts when they have more people in the fold, if there's overlap or such. But in some cases, there's more hiring going on. And with all this talk about social equity and diversifying the landscape and who's getting involved in the cannabis space, is there any insight as to what the situation is like with Indus and Lowell now, assuming that, well, that layoffs or hiring could happen?
Well, you know, I would say we're a big employer in our respective communities in Monterey as well as in LA, and I think the key here is being responsible to your employees as well as to your customer community, and that's something that we take. That's something that we take absolutely as paramount with us. And, you know, I think the reality is, yes, ultimately businesses go up and go down, and ultimately there's always a need to right size, you know, here and there, not necessarily around acquisitions, but also just around right sizing businesses to adjust them for demand cycle. But I think one thing that, you know, I personally loved about Lowell was that they have just a massive history around social justice. I mean, they embraced social justice in a way that I thought was so compelling, as well as is completely approachable for all cannabis investors. I mean, they had a really famous campaign, billboard campaign, which was basically, if you know, got a record, we're hiring. It was one of I thought one of the most sort of evocative campaigns around social justice awareness that I thought was really exciting. But the reality is there simply haven't been enough grants in the community for social justice dispensaries. And the problem is every minute that they wait, you really are tying the hands behind the back of entrepreneurs who do get in business, because the prospect of being the third, fourth, or fifth dispensary in any given neighborhood is far less attractive than it is to be the first or second. And California in certain areas is definitely reaching certain saturation points in terms of penetration levels, where you certainly are going to start seeing share by share losses in dispensaries. So I think, that's something we focus a lot on. We spend a lot of time on working through new dispensary as well as some minority-owned dispensaries, giving them price breaks and discounts and help, and as well as payment terms that really help these stores get off the ground. And that's something that's been part of our legacy and our history for a long time. We're not in retail, so our view is, we want retailers to be successful. They showcase our brands and our products, and it's very important to get it out there. So I would say it's something, both a commitment to our employees. The reality is, give your employees a fair opportunity to participate in the upside of the business, and that's something that's extremely consistent with our ethos and who we are as a company. Because your employees make a choice every single day. They're not only employees at the company, but when they leave, they're ambassadors of who you are and your brand. And in cannabis, that matters, because a lot of our employees tend to actually be consumers of cannabis. And so it says something when they leave and they walk and they're using your product and they're saying positive things about how we treat employees. That's a big deal to us. And so I can't say that we're perfect at it, but it's something that's high on our priority list, and certainly something we can always improve on over time.
Well, we have about 4 or 5 minutes left, and I want to tweak the question a little bit to Nick, because we talked a little bit about advertising earlier this week, and on during the event yesterday, that was brought up quite a few times on how companies can really differentiate themselves from the competition. And as California, a lot of other states look to California as an example setter, especially now with more states coming into market, New Jersey being one of them. How do you do it? How do you differentiate yourself in California if with such regulatory oversight on advertising, and we talked about the billboard situation and how it's a little muddy. I couldn't quite follow it, but does KushCo concern itself with that, and what does it do?
Yeah, we actually don't. We're behind the scenes, right? We're all B2B. Our marketing is in our sales force, getting out there, building relationships with leading operators, and then being able to service them with the goods that they need on an ongoing basis. So we don't do advertising. We really stopped going to conferences, except for Benzinga, of course.
But
it's especially with COVID, but it's something where, that's kind of more our model, right? We're not out in front. We don't need the consumer to know who we are. We just make sure that they have some beautiful package or a high quality vape pen that they can consume that they're happy with, right? And then our clients are happy with us. Now, we are very close to the California market, obviously being in business here for over a decade legally, which of course is rare. So, we know the market well, and I think it's one of the allures we talked about earlier. I think the biggest thing on California is, when are the MSOs going to take a more meaningful presence in California? We know it's the biggest market for building brands. You talk about marketing and advertising. If you don't have a presence in California, it's going to be tough to build that national brand that everybody is so wanting to do over this next decade. So at some point, all the MSOs are going to need to take a meaningful stake in California. Some of them are starting to do that. Many are still on the sidelines. So I think that's what's really exciting to watch here, as now we have some operators clearly emerging with size and scale, many of them private companies, a few public companies like Indus here. And also we saw the SPAC with Kaliva and Left Coast Ventures. But for the most part, private operators getting real size and scale. At some point, there's going to be a lot of M&A activity in California. And if it becomes federally legal, and the Canadians can all of a sudden, Canadian publicly traded companies can all of a sudden buy U.S. assets, watch out. California is going to be a very hot M&A playground. And so, companies want to position themselves with brand awareness in the market, and they're going to use any available measure to do so. And we see billboards being utilized. We see grassroots marketing campaigns. We see text messaging, which has led to an onslaught of TCPA lawsuits with the ambulance chasing firms, which are all, wish that wasn't the case, but hey, it happens. And hopefully these companies keep beating them down because we hate frivolous lawsuits in this industry. And, it's sad to see, but we do with it what we can, and we keep moving forward. And we see a lot of brands building brand value here in California, which is exciting.
2 more minutes. I want to get Jessica and Megan's insight on this. Starting with Jessica, what could other markets learn from California? So if, say, there's a person who's very big into Colorado, for example, right now, or that's a bad example, but maybe perhaps one of the states that went legal over the past election day, like New Jersey or South Dakota, although that's a bit of a mess right now. They're trying to fix it. What are your thoughts? What could they really take away from California?
Sure. Well, I think Nick really gave me the perfect lead into that, which is that that brands in California are real, and that we are seeing more and more transition to digital methods of advertising. And hey, is anyone even driving to work anymore anyway to see those billboards? I'm not sure that's happening. Yeah. So we're really seeing our clients, especially leveraging. We have over 80 integrated partners that offer many different pieces of functionality, and we're seeing lots of our clients focus on different advertising campaigns, use our analytics to compare which coupon codes, which campaigns perform better than others, and really access and get to their consumer that way. And so I think perhaps California being our historical tech hotbed, as well as such a thought leader in brands and other industries, that we're seeing the combination of those two things really drive what we're going to see mainstream brands across the world, certainly across North America, do, which is leverage digital to access and communicate with their consumer more and more.
Megan, take us home. What could we learn from California?
Look, in terms of California, I think what we learned in 2020 is that cannabis is an essential business. That was a pretty watershed moment for us. And I think, from the East perspective specifically, delivery isn't going away. It will, persist after COVID, and hopefully we all go back to our normal lives. But I think every emerging market needs to be thoughtful about, how they think about delivery, because, we've seen in some markets that states have actually banned delivery, and we don't think that that's very consumer friendly.
Well, that about wraps us up. I don't know if Elliot's going to give me the red light. I know he's on deck. And there he is to spoil our fun.
Red light, unfortunately. What a powerhouse panel. I appreciate all of you all being with us. Tony, Heat Schmeat, man. I don't know what that was in your background. It was like your wife sawing a pipe or something.
Yeah, I'm sorry. It's just, it's these old New York apartments. What are you going to do?
Yeah, I feel you. Maybe we should move to California after this panel.
Yes.
Jessica, Megan, Nick, George, thank you so much again. We will talk to you all very soon.
Thanks, Elliot.
Take care, everyone. Thank you.
Take care. Thank you.
Thanks. Bye.
Awesome. Tony, thanks again, my friend. Tony Toto.
Elliot Bain.
You should have gone with lame. All right. So I have the absolute pleasure of leading a discussion with the Sharp Capital Advisor team, specifically their head honcho, Steve Miles. As we bring him over, Steven, can you hear me? It looks like we just need to get your camera and microphone on there, sir. But I'm excited for this. This is a topic that I have needed education on myself for quite a while. There he is. I see him. How you doing?
How you doing?
I'm well. It has been a busy, compact 2 days.
Yeah.
But we are still pushing through, my friend. And honestly, this discussion that we're about to have for me is very important. It's something that I feel like a lot of people maybe undervalue this discussion, and it's really the importance of what you do specifically. So first and foremost, before we dive into what you do, tell us who you are, and then you can dive into what you do.
Perfect. Well, thank you very much, Elliot. And by the way, I'm very used to being undervalued, so no surprise there.
Oh, not you specifically, man.
I'm just kidding around. No, but thank you very much for having me. So I'm Steve Miles. I'm the founder and CEO of Sharp Capital. And by way of background, I've been working with privately held companies in private capital market transactions for my entire career, which is unfortunately now 25 years. After working for several other mid-market investment banks, I launched my own, co-founded a firm called Livingstone in 2007, so about 15 years ago. And Livingstone focuses on providing mid-market M&A advisory and capital raising services, again, entirely to privately held companies in private capital market transactions in the sub $1 billion size range. And started studying cannabis about 2.5 years ago. We were working on a transaction with a craft brewer who, for a while, was entertaining an offer from a soon to be publicly traded cannabis company. And it got us looking at the space and quickly realized that, you know, it's obviously a massive industry and a growing industry. And it has built-in fragmentation because of the state-by-state regulatory framework. And so, you know, just was going to be a great place for Livingstone to provide its services. We're a privately held partnership, so most of our competitors in our normal business won't play in this space until there's some federal legalization, and it leaves us, the industry, really needing the types of professional investment banking services we offer. So we launched a sidecar firm called Sharp. We focus there exclusively on the cannabis sector. All the transactional work actually gets banked by Livingstone professionals, where we have 85 bankers. But Sharp is meant to be a thought leader in the space, trying to produce valuable content for privately owned businesses out there. You can see on our website, we have an interactive map where we try to dig into each of the states and what's happening in the states and who the players are and what the regulatory framework is and what you should be thinking about if you're an operator in one of those states. And yeah, that's what we're doing. Right now, we're focused almost exclusively on licensed operators, of which there are, you know, literally hundreds of privately held, valuable licensed operators.
Absolutely. So you say sidecar business, and that kind of leads me actually into my next question. There's actually a local beer in New York City called Sumo in a Sidecar. It is delicious, FYI. But secondly, cannabis is that giant industry, that sumo in this sidecar business for you. So, you know, with that being said, I'm curious, why cannabis? Was it that one deal that you did that you saw a bunch of success in and you said, hey, there's potential here? Or is there a potential passion for the industry in your background? I'm curious, you know, what made you choose to take a little more interest in cannabis than your competitors?
I mean, it's really a combination of a lot of factors. I am a lifelong consumer of the product and an advocate of the product. And I do believe in the medicinal benefits, and I do have a passion for, you know, helping people that are less fortunate than us. And as I started to learn how negative the war on drugs has been on these communities, that also, you know, pulls at my heartstrings. But the reality of the matter is, it's just a very good place to apply our trade. There's not a lot of professional advisors in the space, as all of your other panelists have been talking about. The amount of M&A activity is, I mean, wildly robust, and will continue to be robust. And there will be waves of consolidation as nascent markets mature, as people reposition their assets. So there's always going to be a lot of activity. And what we see right now is most sellers are selling their businesses without any representation of the type that we provide. And, you know, I think that we did a webinar on this. I think that they're selling themselves short. I mean, when we represent a company in a sale, we run a process around it that is meant to create the equivalent of a public market. It's meant to be very efficient to make sure that you're getting the best possible price and the best possible terms and meeting all of your other objectives in that process. And we just don't see a lot of that. So there's a real, I think, you know, so when you do something like this for 25 years, you can oftentimes become cynical. I don't know, in our regular business at Livingstone, where we do 50 or 60 transactions a year, and half of those are for private equity sellers, you know, that our advice is always that valued, you know, but here I think our advice is actually quite valuable. And you know, I don't think at the end of the day, people will actually ever pay for our services, because I think the amount of value we can create by providing our services far offsets any fees we could ever charge.
So I actually, this is a kind of a twofold question here, and it's a little bit of a going back to the question I just asked, but there's also been a ton of interest today on ESG in our chat, specifically around corporate governance, diversity and board, environmental protection, and moving towards sustainability. Do you see a lot of focus on that with the executives you work with, especially in M&A? Is there more focus on that? And you know, you having the Livingstone Foundation, it seems like you do have a culture that's focused on giving back. So I'm curious if you all are encouraging that.
Well, for sure. I mean, it's very important to us. And Livingstone's a very international organization, and we have about 85 of our. We have about 55 of our 85 bankers are actually in Europe and in China.
Oh, wow.
So the Livingstone Foundation works with in a small town in Zambia in Africa. We built a school down there that's called the Livingstone School. We continue to support that school. We put water systems in place, and it's just been a wonderful thing for us to be able to do. And in the States, you know, we're doing something very similar. I'm very involved and have been for years in an organization here on the west side of Chicago that works doing gang intervention with at-risk youth, which is very hard work and yeoman's work. And so that would indeed be considered a place that was negatively impacted severely by the war on drugs. And so we donate 10% of our profits to that organization to build. We're all involved in the organization. I sit on the board. We try to volunteer our time and as well. And yeah, it's an important part of our DNA. You know, to be honest with you, you know, I've not yet seen the social equity component to this industry really pan out. Maybe I'm not in the right areas or close enough to places.
No, it's interesting observation. It is.
Yeah, it's there needs to be a lot more done on that front. I think it needs to be done better.
Yeah. Well, I think a lot in our chat would agree with you. So I appreciate your forthrightness there. So let's skip ahead here. You were talking about, you know, where you're going to play in the space and the fact that there really aren't that many competitors at the moment. So in terms of how you're doing it, I looked at your website. So Sharp Capital, where your namesake here, a Sharp in horse betting parlance, this is from your website, is a seasoned handicapper that utilizes data and analytics. So we have put a lot of emphasis on data in the conversation, not over just the past 2 days, but the past several months. It seems a lot more people are emphasizing it. So how are you emphasizing it and when you work with clients?
Yeah, I mean, that's a great question. And that is a part of our namesake. And I think when I first started to look at the industry in late 2018 and went out to the Vegas show, I mean, it was a free for all, right? I mean, everybody was having the time of their lives. Everybody was flush with cash. The public market valuations were through the roof. And, you know, it seemed to me that there were a lot of people who were looking for a get rich quick scheme. And, you know, that's not what we're all about. We believe in this industry. We believe in it for the long term. We want to build our business and our brand to be in this industry for the next 100 years. And we hope to align ourselves and work for operators who share that vision. And, you know, so over the last 2.5 years, I've seen an enormous change in the caliber of management teams. And you look at the public MSOs and they've got religion. I mean, they're very much focused on generating positive cash flow and earnings, and they understand about building sustainable business models. And at the same time, the investor universe is evolving and changing, and that's happening every day, which is great. And when Safe Banking Act passes and some of this other federal legislation, it's going to continue to be a sea change of a different type of investor into the space. And that investor is used to seeing transactions presented in a certain way. They're used to very intense financial models that are based on data and analytics and realism and experience. And so, you know, when we send our materials around to investors that are historical cannabis investors, I think there's a lot of, oh my Lord, what is this? I can't believe somebody made this easy for me. It almost shocks their system. right? Because they're not used to seeing this, something that's kind of this well thought out and this well presented. And that's what we have to do, because it would be, it's too hard for me to go out and convince investors that they should be investing in this sector, because it's this incredible sector and this growth sector, and the horses are out of the barn and it's going to be federally legal, and then also sell them on an opportunity that isn't very well thought out.
Mm-hmm.
And so, we're looking to work with proven operators that have real cash flows, existing cash flows. They're either looking to sell because there's consolidation in their market, or they're raising money for expansion. But in any event, their models are, there's no pie in the sky. This is based on experience. It's based on facts and figures, number of lights, square footage, market size, wholesale pricing. Not just kind of, hey, we got a license in a cool state and now we should worth $50 million.
Right. Steve, I could listen to you talk about this all day, my friend, but we do have to wrap up here. So I'm going to make my producer mad, though. I'm going to give you one more minute here. Please give a piece of advice to the investors in this audience, and to the operators, to those looking to put more money into the space this year, or if they should. What do you tell those people?
Well, I would focus on proven operators in limited license states. I think there's a lot of opportunity there. And I think the other interesting thing is I think there's so much attention and so much capital flow, obviously to the MSOs, but to the states, Illinois, New Jersey, Pennsylvania, the states everybody loves. But there are other places like Missouri and Utah and maybe Arkansas, places where proven operators from other states are going down there and standing up new businesses. And so I think there's some opportunities that are maybe being overlooked.
Awesome. Steve, a lot of knowledge you have, my friend, and I can't wait to dive into it more. This is Sharp Capital Advisors. Is there a place where they can reach you?
Yeah, www.sharpca.com.
Perfect. Thank you again for being with us. This is Stephen Miles. He is the founding managing partner of Livingstone Partners and Sharp Capital Advisors. Apologize for missing your title there, but you are the head honcho is the ultimate goal there. So my friend, thank you again for being with us.
Thanks, Owen. Have a good day.
You too. All right. So I am being very genuine when I say I was excited to learn about the importance of investment bankers in this industry, because they are a necessary part of the M&A process, and Stephen Miles is part of that. So if you're an operator, I think you probably should be in touch with him. The day is so far from over, though, because we are here with probably one of the leading cannabis stocks on the NASDAQ, I think, if I'm not mistaken. Clever Leaves with Kyle Detweiler. How are you, sir?
Hey, Elliot, doing well. How are you?
I pumped you up, probably too much pressure there, my friend, but you are awesome. Your company's awesome, and I can't wait to hear it. So I'm going to let you go.
All right, perfect. Well, I apologize in a bit in advance. Just got a bit of a frog in my throat today, so my voice is a little bit off. Let's see here. Great. Well, yeah, thanks everyone for joining. I'm Kyle Detweiler. I'm the CEO of Clever Leaves, and I'm going to give people a bit of an overview of the business, and then leave time for Q&A at the end. So if you have any questions, definitely feel free to submit them. So what is Clever Leaves? Clever Leaves was founded around a very simple idea, and that is that cannabis production has been built in places where it doesn't make economic or environmental sense. We wanted to be a little bit of a fashion-forward mover in the space, build what we think to be, the Cargill or the Driscolls of cannabis, and move our operations, a couple years ahead of time to low-cost regions like Colombia and Portugal. Today, we are one of the largest, if not the largest, cannabis company outside of North America. And one of the most fundamental differences about our cost structure compared to our peers is because we grow where cannabis was probably intended to be grown by Mother Nature, our operating costs are about 90% lower than those of our peers. So today, we have a global cultivation footprint of approximately 1.9 million square feet. And in Colombia, where we're probably best known for our operations, we have nearly half of the country's quota to produce psychoactive cannabis, held by one single company. We believe this creates the ability to scale efficiently and reach profitability much faster than other business models in this space. This also isn't, a pipe dream of a business model. We have raised approximately $225 million of cash. Our leading private investor prior to our IPO was the biotech team over at Fairlawn Capital, large hedge fund in California. And today we have, going into the end of the year, we had approximately $80 million of cash on hand and a NASDAQ listed security. So there's really no doubt that Clever Leaves will stand the test of time. And we're trying to build a bit of a moat in terms of our capabilities by getting some of the world's most stringent certifications. Clever Leaves is one of the only cannabis companies in the world to have EU GMP certification, but it is also the only cannabis company in the world that also have an INVIMA GMP certification, as well as what they call GACP certification on its cultivation. I should go without saying that, with our employee base of approximately 500 globally, we have also been deemed a project of national and strategic interest by the Colombian government, which helps speed up our process in what is a very complex regulatory undertaking to export cannabinoids. Lastly, to prepare ourselves for entry to the United States, we do own a nutraceutical brand in the United States called Herbal Brands, and it will be launching CBD products sometime in the near term. So as you think about our operation, Colombia is probably the best known operation. I'll show you some pictures in a minute. But in Portugal, we also have one of Europe's few licenses to cultivate, import, and export cannabinoid products. We own 9 million square feet of land. We have GACP certification for that operation. There's just a couple of kind of neighbors or other Portuguese or European operators. And so Clever Leaves is a very advanced in that business. So we've kind of proven to the world that we can produce cannabinoids at world-leading quality and cost. It's all about really getting it out when you're talking about the international game. So in Brazil, we've struck a number of relationships. We have over $14 million worth of taker pays that we've announced just in the last couple of months. In Europe, we hold ownership or complete ownership over 2 German importers. One's called Icana. The other is an independent called Consolidation, which happens to hold the domestic monopoly on the distribution of German-produced cannabis. And lastly, at the bottom, we have Herbal Brands, which is our U.S. nutraceutical business, reaches about 10,000 doors, retail locations, I should say, in the United States. Biggest customers are GNC, Vitamin Shop, CVS, and Walgreens. So why Colombia? I think the most obvious question I had when I was looking around at Canadian cultivation facilities is, why am I up here? It doesn't really make any sense to put cannabis cultivation north of the US border. And in Colombia, you can kind of follow the tail of the red roses. In Southern California, where you see a lot of these greenhouses producing cannabis today, ask yourself, what was grown in these facilities 20 or 30 years ago? We have the Rose Day Parade for Pasadena for a reason, but all of those red roses have now migrated to South America. So Colombia is actually responsible for 7 in 10 cut flower imports to the United States. We like to say that you have to build a very expensive facility in the US or Canada to trick cannabis to feeling like it's home in Colombia. And that translates into a massive cost advantage. I've spent a lot of time investing in KKR and at the Blackstone Group, and I've looked at the oil business and the manufacturing industries. And you can see that you can get hydrocarbons from Canada, just like you can make cannabis there, but it's much cheaper and better for the environment to move to Saudi Arabia. You could also manufacture in the United States, but if you're looking for a cost advantage, you would probably manufacture in a place like China. And in cannabis, we have over a 9 times cost advantage, even larger than some of those other industries. And where does that cost advantage come from? Well, part of it comes from the 12 hours of sunlight and 12 hours of darkness that we get naturally, but also it comes from more nuanced innovations. So for example, we cultivated over 8,300 feet of elevation. That's one of the highest elevations of a cannabis company I'm aware of, higher than the city of Denver. Of course, labor is lower too. Minimum wages could be less than $2 an hour. And in Southern California, you'll be lucky to get agricultural workforces to work for $15 an hour. But it's also the fact that we don't have to have artificial lighting and HVAC systems to deal with snow, for example, or deal with the high levels of rainfall or cloud cover that could come in. And so in our operating costs under US GAAP, PCAOB audited numbers in 2019, before we reached full scale, Clever Leaves was operating at a cost production of 20 cents a gram compared to our peers at $1.89. In Q3, our operating costs have fallen further down to 13 cents per gram. But if you're thinking about a startup, it's just not the core unit economics. If you're thinking about cannabis as the beginning of an industry, and in the future we're going to sell to many more possible customers or patients, you have to think about the scalability of that business. And I think this is actually one of the most interesting parts about Cleverly's kind of return on invested capital thesis, is that we've been able to build our capacity 14 times more efficiently than in Canada. So we build at $14 a square foot instead of 200 like many of our peers. So here we kind of benchmark ourselves against some of our peers. Internationally, you know, we have 1.9 million square feet. That's larger and right up there with some of the biggest Canadian cannabis operators. But also to differentiate, we're also one of the largest extractors in the world. I didn't mention it early on, but Colombia today requires all of our production to be extracted or isolated. And so, you know, whether we want to or not, we're one of the world's biggest extractors for cannabis as well. But when you're talking about pharmaceutical products going into places like Sydney or Berlin, you have to understand that the quality standards are very, very different than the United States. There are no dispensaries in the countries in which we typically sell. There are pharmacies, and when you're working with pharmaceutical regulators, it's not good enough just to have a product that has a nice certificate of analysis that says this strain is 20% THC. No, you have to have full traceability. You have to have very consistent production techniques. It's very, very expensive to get them. And you have to have an agency which proves with a piece of paper that says you can do that. And that's called the famous EU GMP certification. So there are only, by the way I measure it, approximately 4 cannabis companies on the planet that have these capabilities, and Tilray, Aphria, and Aurora are all located in Canada with a higher cost structure. And we are one of the most efficient producers with our base in Colombia. So not only does this allow us to sell into markets that many of these other cannabis companies, which you may be familiar of, can't, it also creates a different price point. You know, GACP or EU GMP certified product that we could produce might be valued at, you know, 10 to 15 times the price of a more, you know, kind of nutraceutical grade production. So here's just a quick look at some of our facilities. You know, in Colombia, you're staring at one of the largest cannabis production facilities in the world. You know, 1.8 million square feet of active and contiguous greenhouse. Again, that was EU GMP certified in July. But, you know, greenhouses are only one step. We also want to be able to go outdoor. So we have secured one of the only outdoor facilities in the Colombian cannabis industry. It's 73 million square feet. You know, this could be 5 times larger than most of the Canadian producers put together. And so that could drive a further reduction in our kind of operating costs and capital costs. And also it's just a heck of a lot of capacity at the right moment. Here's a quick overview of our extraction facility where we can extract approximately 100,000 kilograms per year of product. Again, this is EU GMP certified, and so very different than an American extraction facility. You know, everything here is treated like a pharmaceutical ingredient process, which means we have a lot of testing and analytical equipment in-house to make sure this product is the same thing every time we make it, no matter what time of year, no matter what kind of volume we're putting out. Here's a quick overview, crossing the ocean over to Portugal. So again, I mentioned that there are not many cannabis operators in Europe, but this is one of the more promising projects, I believe. So today we have 110,000 square feet of active cultivation. We're in the process of expanding to another 150,000 square feet. And you might ask yourself, why not do this in Colombia? Well, again, you know, Colombia does not allow the export of flower products. And so to tap into that market, we wanted to find the Colombia of Europe, which to us was very clearly Portugal. And I think, you know, the growth of this market in Europe will prove out to be very, very healthy. So, you know, often people are asking, well, how do I compare your business to some of the others out there that are focused in Latin America? And one way to say is that we, you know, just a very different business. You know, we might have a production facility based in Colombia, but we're really thinking of ourselves as an international company. You know, we are the only one that is EU GMP certified. But even if you want to look at them pound for pound, you can see that we are certainly the largest in Colombia. And also the Colombian government kind of rations the production of psychoactive cannabis within the country. And as a single company, Cleverleaf has approximately half of the country's supply, or about 26,000 kilograms of THC. And again, very different from some of these other businesses. You know, we have a licensed flower operation in Portugal. So maybe just to speed through a bit of the rest, you should sense that we like to focus on high markets with high startup costs, very difficult regulatory thresholds to get in, and we think that translates into better pricing and better ultimate addressable market. If you forget Canada and forget the US for a moment, in Europe and Brazil, you can have approximately 1 billion possible customers or patients, and you have a federally legal system, depending on the country you're dealing with, where it's extremely difficult to get in there. And there are even places like Brazil, which prohibit domestic production of cannabis, arguably much like Germany was up until a couple of years ago. So fewer operators are able to compete with those higher standards, and that translates into higher pricing. In Germany, you can see $22 a gram of pricing. And in Brazil, where most people think it might be, very low cost, you still see actually fairly healthy prices for what may be a more nascent economy. So just as we're winding down times, we talked a little bit about Brazil. Brazil, I think, is a fantastic market. The barriers to entry on that side are very tricky. Not only do you have to be in an extract product, but you must also be a GMP certified producer. The last requirement that was sort of a curveball for a lot of people was that you also had to run what they call stability data that was suitable for the Brazilian climate. So, if you had validated a product for cannabis in Europe or Canada, it wouldn't actually be valid in Brazil because it wasn't run for that temperature and humidity standpoint. And so, that is a barrier that has led to Clever Leaves having a very unique advantage. And this slide's a little bit dated. We had a $4 million take or pay signed a couple months ago, and then we added on another $10 million plus contract a couple months after that. Just to give you a quick look at some of our customers, some of the largest cannabis companies in the world have worked with Clever Leaves, including Canopy Growth. We've made inroads into Australia with Canatrek and Brazil with Green Care, and as well as to the Israeli market with a company called Univo. For those interested in investing, I won't go through this, but this just gives a bit overview of our capitalization table. I think the key thing here is that we have over $80 million of cash on hand, which leads the company to pursue a variety of different value creative opportunities. I'm also just very blessed with our team. I'm the CEO, but Andres Fajardo is a Harvard Business School graduate. He ran a private equity-backed healthcare business in Colombia and now leads the global sales organization as our global president. Our chief regulatory officer, Julian Wilches, used to be the former drug director for the country of Colombia. And David Kasten is the former general counsel of the Vitamin Shop. We're also very honored to have people like former U.S. Senate Majority Leader Tom Daschle. Senator Daschle has been instrumental about making sure that we are very true to our word about pursuing federally compliant methods of business, as well as trying to make sure that we're making an impact to society around us. We think that our cash reserves do create a very unique comparison to some of our other peers. I realize these numbers are a bit dated now, but with over $80 million of cash on hand, again, Clever Leaves has a number of capital deployment opportunities. Some of those are organic, where we can expand our current Portuguese facility, we can invest in our sales team, and some of them may be inorganic or M&A oriented. So we're focusing on distribution assets that can take the large cannabinoid supply base that we've created and send it out throughout the world. So just to wrap up, Clever Leaves has been a company of firsts. We are the first company to legally ever export cannabinoids from Colombia. I can't tell you how difficult that is. But as we're seeing a Democrat in the White House and possible federal legalization coming around the corner, Clever Leaves took a couple years to do it, but just a couple weeks ago, we imported our first CBD for commercial purposes into the United States. And I think that's just a reminder, the industry that we all know and love today is going to change. Barriers are going to fall internationally. And when that happens, you're going to want to be involved with a low-cost company that not only survives that wave of commoditization or wave of increased competition, but that prospers in it. And that's exactly what a large-scale, low-cost cultivator like Clever Leaves can do. And so you can follow us online. Our ticker is CLVR, and we are publicly traded on the NASDAQ. So with that, I guess I'll pause. And Elliot, if we have any questions.
Well said, Kyle. Awesome opportunity here, man. We have tons of questions. So real quick, your recent shipment of CBD into the U.S., parentheses, congrats from Jamie. Was that part of your financial year 2021 estimates?
Actually, in our past financial forecasts, we actually never really thought that the U.S. market opportunity would emerge. So we didn't really count on any imports to the United States. So it's really all upside the way we think about it.
Yeah, I would agree. That's fantastic. Does U.S. legalization, decriminalization result in significantly more lower cost domestic cannabis production? From Donald Marchioni.
Say that one more time. Did the criminalization of the...
does U.S. legalization and decriminalization result in significantly more lower cost domestic cannabis production?
No doubt it will. And I think that's good from a social perspective. I want, patients and customers to have more innovation, more competition, lower costs. So there'll definitely be more low cost production. I'm a firm believer that interstate commerce is going to happen very, very fast. The California operators that I talked to, they're probably not even going to wait for the legislation to come in place to establish interstate commerce. They're just going to ship from California to Massachusetts and say, okay, Supreme Court, you decide. It's interstate commerce. Is it going to win like it has for the last 200 plus years of the Constitution, or is it going to be changed? And this time it's a little bit different. So I think imports too, could play a very important role. And just like alcohol or just like pharmaceuticals, we don't have to make everything in the United States. There are some very good reasons to do, pharmaceutical ingredient production in Southeast Asia, where it's lower cost. That will lead to lower prices for the whole system. That means more people can benefit from cannabis. It means Clever Leaves is going to be a very successful company, of course, if that happens. But I do believe it'll happen no matter what shape regulation or legalization comes in.
Fantastic. Kyle, we much appreciate you being with us today. Clever Leaves is an incredible company, so congrats to you for building a great one, my friend. But we look forward to seeing you down the road.
All right. Thanks, and apologies for the voice.
Oh, no worries at all. We got everything. All right, that is Clever Leaves, www.cleverleaves.com. They are listed on the NASDAQ as CLVR. Apologies for not getting to all the questions. They were great ones, but we are out of time on that one. We are to the final presentation of the day. Again, last does not mean least. Turning Point Brands is back with us, their Chief Business Development Officer, Louis. Are you with me, my friend?
Elliot, I am here.
Awesome. Good to have you with us. I am timing Sarah's phone to go off here, right in the middle of your present. I'm kidding. All right, my friend, I'm going to let you take it away and finish us strong.
Sure. Okay. So let me put the slide deck here. So quick intro on me. So I spent 20 years in the investment industry before I joined Turning Point Brands in 2019. What really attracted me to Turning Points was the strength of his brands, especially kind of when you look at Zigzag and really kind of the power of that brand and what we are, what able to do to extend that brand into the cannabis market. So with that, let me just give you a quick overview of the company. We really consider ourselves a consumer products company with high growth. As I mentioned, Zigzag is one of our staple brands, #1 premium and overall rolling paper brand in the US. And #1 in what's called make your own cigar wraps. Think about that as essentially the outer shell of a cigar that is primarily used for cannabis consumption. So this segment makes up a vast majority of our profits, and clearly is going to be benefiting from the secular trends that we're seeing in cannabis consumption, and it's the near-term growth driver for our business and really kind of the exciting value driver for us going forward. Our other core brand is Stoker's. So Stoker's is the #2 loose leaf chew brand. More importantly, it's the leading moist snuff tobacco, or otherwise called MST or dip, value brand in the market. So that is a business that's seeing double-digit growth for us, and we expect that to continue going forward, the MST side. The third segment is New Gen. So this is really our segment focusing on our next generation products. It was built through a series of acquisitions. So we have exposure there to the vape market, also in other products like nutraceuticals, CBD, and we'll talk a little bit more about that later. On the back of that, we've got a business model that is asset light. We only manufacture really one of our products, which is our dip product. Everything else is outsourced. So our CapEx has been about 1% of sales. So that allows us to generate a lot of free cash flow from our business with recession-resistant products. So I think that's what's unique about us in the cannabis space, is that we actually generate a decent amount of free cash flow, and I'll go through our balance sheet a little bit later as well. So overall, the company went IPO in 2016, Before that, it went through a period of distress. So, part of this is really a turnaround story in the company. Now that we're entering into the investment and growth phase of our future, we're finally starting to demonstrate the operating leverage that we have in the business. We saw 11% sales growth in 2020, but delivered 34% adjusted EBITDA growth. That accelerated through the year, where we saw 31% revenue growth in the fourth quarter and 81% EBITDA growth. And going forward, we guided in our last earnings call that we expect another year of double-digit EBITDA growth. And I'll go through some of the drivers of that a little bit later. On top of that, we've got a balance sheet that has over 150 million of cash. And we expect to generate around over 100 million of EBITDA this year, with CapEx around 6 million. So expect us to keep investing, especially our exposure in the cannabis space and cannabis accessory space. So as I mentioned, brands are very important to us. We've got a great combination of these iconic staple brands in Zigzag and Stoker's. And what we're really doing is we're leveraging the power of those brands to introduce new brands, both acquired and organically driven into a distribution channel that Zigzag and Stoker's is already in. And so that includes brands like Solace, which we acquired, New X on the CBD side, which we developed, Wild Hemp, which is a smokeless CBD product. And you see up there also, we made an investment in Lotus late last year. So Lotus is one of the leading California cannabis brands and one of the more recognized brands. So look for us to continue to increase our exposure to the cannabis space with further investments in it. So this kind of highlights out what is unique about us in terms of in the cannabis space. We have a massive distribution infrastructure where, because of our staple products, we touch over 210,000 retail outlets in North America with one of our products. A lot of those are convenience stores where we touch both the national chains and independent C-stores. We've built up a pretty robust e-commerce platform in each of our main brands. And on top of that, I'll talk a little bit about our strategy into the head shop and dispensary market, which was previously an untapped market for us that we are really kind of ramping up our efforts to. So I'll go through each of our business segments here in detail. I'll talk about Zigzag in more detail later. That's really going to be the focus of the presentation, given the platform here. But let's touch on these other two segments. So our other core brand, as I mentioned, is Stoker's. So there's two products at Stoker's. 40% of the segment is chewing tobacco, and which is a nice annuity business for us. The other 60% is the dip product that I mentioned, and that is the real growth driver for us. It's in an industry that's fairly consolidated. 85% of the market is controlled by the two large players, so that's Altria and BAT. So the brands are Copenhagen, Skoal, and Grizzly. We play in the value category here, and we play. We price 40% below our peers. Our peers take 5 to 7% price every year, and so we follow on that. So it's a nice umbrella to be in. But we are the fastest growing product in the category because of the secular trends into the value space and the premium product that we have that is priced at value. As we call it, a great dip at a fair price. We still only have less than 6% of the volumes of that market, and we're still in only 60% of the volume weighted distribution of the market. So plenty of runway here for us to continue to grow. The third segment I mentioned is New Gen. So that is most of the sales right now is from our third-party vape distribution platform, which we acquired a series of companies since our IPO to build it. Expectation here is really to drive the profitability mix to more profitable products for us, which are proprietary products. So we think the PMTA is a catalyst for that. So the PMTA, in short, is an FDA process where the players in the vape market essentially have to go through this very expensive and very onerous process to be able to stay in the market. That is an ongoing process. The deadline for the applications was last September, and we should hear over the next year kind of the decision from the FDA and who can stay and continue to market products in that market. But essentially, where we play, which is the open tank vape market, there's hundreds and hundreds of manufacturers there. We think that is going to consolidate down to a handful and put us in a great position to consolidate share in that market. So within New Gen, we also have a New X division, where we have launched a number of new products into the market, including CBD, nutraceuticals, and other products. As I mentioned, the segment is made up mostly of third-party products. Our goal is to keep increasing that to third-party proprietary products, which will increase our margins there. So here's kind of our mix. As I mentioned, Zigzag is over half of our operating income, makes up 55%. This last year it became our fastest growing segment and will continue to be the growth driver going forward. Stokers is a nice growth story for us, as I mentioned with DIP. And UGen, really, it's less than 10% of our EBITDA this year. It's going to be huge optionality with the PMTA. We're positioned to be self-funding and to be able to participate in that upside from the PMTA process. And now, so let's go through Zigzag, which is kind of really the heart of the story of the company right now. So there's two main products in this segment. Our most iconic product is our rolling papers products. So we've got a perpetual license there in the US and Canada. So that makes up about half of the revenues in the segment, with the number one brand, with 34% of the market in what I call the measured market, which is mostly convenience stores. We'll talk about the alternative channel a little bit later. And then the other half of the business is the wraps. So look at the middle of the page there. So think about it as the outer shell of a cigarillo that people like to use a little tobacco with their cannabis. So we are the market leader there with over half of the market. Overall, what we have with our Zigzag segment is one of the best brands in the cannabis space with a unique history. A lot of cannabis companies are trying to essentially build what we have, which is a truly nationally recognized brand. But it's very hard to replicate the history of the Zigzag brand, especially the kind of the iconic nature and the way it's been woven into pop culture, from Dr. Dre's The Chronic album, which looks like our Zigzag white paper logo, as you can see there, and Andy Warhol sketch paintings. So the power of the brand is unmatched in the cannabis space. But until recently, we've really underinvested on it relative to the large market opportunities that we had in front of it. As I mentioned before, the company went through a period of distress and wasn't able to properly invest in the growth markets in the space. So we changed that in 2019. As I mentioned, I joined kind of late 2019 to help drive the growth in Zigzag. And we started out by addressing some of the glaring holes that we had in the market from both a channel and a product perspective. So for example, e-commerce is a big piece of market that we were not in. So we had to build an e-commerce platform from scratch. I mentioned our presence in the convenience store channel. That's really been the strength of the company. But the growth in the market was happening more in what I would call the alternative channel, which are head shops and dispensaries, which we were not really calling on those clients. So we were underrepresented in those markets. We developed a strategy last year to get into or start calling on these chains. And we'll talk about the results in a little bit on that. So and then on top of that, we also were lagging in some of the new products that were growing and were a large part of the market. For example, up top, you see there paper cones. So paper cones is essentially our paper booklet that's pre-rolled with a tip. What's nice about that, it's in retail, it sells for one usage, it's about 4 to 10 times the price of an individual sheet of our paper booklet. So it significantly increases our TAM. We were not in that in earnest until 2019. So we introduced that product and are continuing to ramp on it. And we're going to have even more products that we're going to launch later this year. So net, because of some of these initiatives that we put in place, really, we finally saw the growth that is inherent in the end markets that we're serving. We didn't grow much since our IPO in 2016. We finally saw that growth with over 22% growth in Zigzag in 2020. And we ended the year with 47% growth in the fourth quarter because of these initiatives that we think are just starting to bear fruit. So I mentioned our papers business. Our market share had been flat since our IPO in the measured market, which is convenience stores. It grew 250 basis points to 34% last year. We finished with a high point in the fourth quarter with 36.7% share. And our growth in that measured market was 1.9 times the rest of the market during the year. I mentioned e-commerce that was non-existent for us in 2019. In the second half of the year, In our papers business, it was double digits of our sales. Cones was another product I mentioned that was not a big piece of our business previously. It was 10% of our sales in the U.S. papers business in the fourth quarter of last year, and we expect an even bigger ramp from cones in 2021. So really, what you see in this in the slide is that Zigzag had always been our most profitable segment, but had not been properly invested. But because of the changes that we've made to that business, it's now become our fastest growing segment. And for 2021, we're guiding to another year of double-digit growth in the segment, and we expect it to continue to be the fastest growing segment in our business. So just gonna go through the drivers of the business going forward. And a lot of you have seen the slide, I'm sure, in the presentation before. We think that legalization, and more importantly, decriminalization, is actually benefiting our products. 7 out of 10 Americans are now in favor of cannabis legalization. More importantly, I think there's a huge change in consumer perception around cannabis being more of a health and wellness product than it was before. So we think actually as more states legalize, the pie is going to shrink even more than what we've seen in previous states. That 7 out of 10 number was 5 out of 10 when Colorado first went legal in 2012. So I think there's a big sea change that is coming in this market as some of our newer states come online from a legalization perspective. And just kind of go through what happens to our business when legalization takes place. So you see here on the paper side, in adult states up top, we see faster growth in the measured market, which is really the C-stores. What's not captured there is the non-measured market, which are head shops and dispensaries. So there's actually a shift into those non-measured markets when legalization happens. So if you add those numbers on top of that, which it's harder to measure the volumes in those channels, you'd see an even bigger spread. So on our wraps business, where there's really not a shift in terms of channels that you purchase, because tobacco products are not sold in dispensaries and head shops. You need a license to sell it. So you see what actually happens when there's legalizations on the clean number on the wrap side. And we're seeing more than twice the rate of growth in legal markets that we've seen in non-rec states in a couple of years. So that's going to provide us with continuing tailwinds that we're excited about over the next few years. As I mentioned, where we are in the cannabis space with our cones and wraps, that's less than a $500 million market opportunity for us. Cannabis is a $20 billion market. We're going to over 40 billion. And we're going to keep extending the market reach we have in the cannabis and cannabis accessories space. I mentioned the investment in doses, so look for further investments there. And there are other accessories that are great extensions of our product lines that we will get into as well. Our wraps business, the alternative to that really is cigarillos. A lot of people split open the cigarillo, leave a little tobacco and add cannabis to it. And that is a $2 billion plus manufacturer market. So we're going to get into that market in earnest. And so really our addressable market will be 5 times once we get into that market. So that's a really exciting opportunity that we have for us. So this is just a summary of the results. Kind of numbers speak for themselves. Last year, because of some of the things that we've done, we really turned around the business and saw the operating leverage that we had with our fixed cost structure. We reported earnings and guided to the year. As I mentioned, we're expecting another year of double-digit EBITDA growth with 99 to 105 million. And more importantly, we just did a high yield offering in February earlier this month, and we've got 80 million of available liquidity. We're going to generate a decent amount of free cash flow this year. So look for us to deploy that capital into reinvesting in the business and extending our product reach further into the cannabis accessories and cannabis space. So I do want to leave a couple of minutes for Elliot to ask some questions. So I'll end it right there.
Yeah, awesome presentation, my friend. From your own personal perspective, I'm curious about your thoughts on vaping ahead. And I ask this to everybody that I feel has an interesting perspective and AKA participates in the market. But are you going to put any emphasis into like these interesting new technologies like a heat not burn or, no secondhand smoke? Or are you seeing trends that really follow that?
Yeah, so we are a New York Stock Exchange publicly listed company. So we do have, in the cannabis space, we have restrictions in terms of kind of how we gain exposure to it. But we did make an investment in Doses last year. So it's one of these securities that convert upon legalization. And so we are looking, really what we want to be in is the consumers always will all have different preferences, and there's going to be markets for different form factors. And we want to be able to provide the consumer with their form factor of choice. So we're open to evaluating different market opportunities and different form factors. And the Doses investment was a signal to that.
A true business answer, Louis. I loved it. So Louis, I guess, why should Zigzag, or why does Zigzag, why is it impressive compared to, say, one of these major California brands that's getting all the rage in cannabis? Why should people pay attention to Turning Point?
Yeah, first of all, there's room for many brands in the cannabis space. What Zigzag has that a lot of these brands don't is the unique history and the emotional attachment that people have between Zigzag in the cannabis space. As I mentioned, it's been around for 120 years. And what we have is true national recognition of the Zigzag brand. So we did a survey a couple of years ago when I joined on the Zigzag brand, and we had 71% aided awareness of the brand. The next brand in the cannabis space was 48%. So it just gives you the power of that Zigzag brand. Now, we're restricted in terms of where we play in the cannabis space today because we're New York Stock Exchange listed and cannabis is not yet federally legal. But imagine the value and the potential of that brand when there's federal legalization.
Right, which may not be too far, but this year might be a stretch. Now, from your own personal perspective, Louis, last question from me. How big of a player in 2021 specifically, let's keep it this year, is the tobacco industry in cannabis?
I think you're starting to see on the margin, a lot of the larger guys kind of play into it on the fringe. The one unique thing about us is, really, even though we have a tobacco product, most of our profits is really tied to cannabis consumption. So we have intimate knowledge in this space already. We have the brand in this space already. So I think that's the unique opportunity. Certainly there's a lot of learnings from what happened in tobacco space that I think will apply in the cannabis space as well. Tobacco at the beginning was kind of viewed more as a molecule, if you will, and an ingredient in the infancy of cannabis legalization. I think that is the case. People really care about potency and value. Going forward, as the market develops, as in any consumer product space, brands do become important. Consumers want to have reliability and want to trust the products they're using, and brands are a perfect avenue for consumers to experience that.
Fantastic. Louis, Chief Business Development Officer of Turning Point Brands, NYSE listed TPB. Fabulous to have you. Thank you so much for being with us on both of these days. Very impressed with your all's company. I appreciate you being here.
Thanks, Elliot. Appreciate it.
Wonderful. All right. So that concludes the main content of the Benzinga February 25th and 26th Cannabis Capital Conference. It is the first of 3 of these this year. Next one is June 3rd, followed by October 14th. Who knows? Maybe we'll be in person in October. I don't know. I hope and pray. All I know is that Javier Hasse is a consistent statue of cannabis news. How was your day, Javi?
It was great. I was just paying attention to Louis, and it's very true, right? Zigzag papers for people living or who have visited the US enough are really a staple. And I was thinking also about the fact that rolling papers is one of the very few, if not only, category in cannabis where there are 3 or 4 dominating brands, and that's it, right? You got your Zigzags, your raw papers, your OCB. Maybe now you have Vibes and maybe Rizla in Europe, but because it pre-existed, all of these actual brands pre-existed the market, people love them. People are loyal, right? And the brands are across the country. They're not just in a couple of states, right? And I don't know, something interesting to think about.
Absolutely it is. And Louis he's very knowledgeable when it comes to perhaps what the future of Turning Point Brands looks like. That being said, Javi, I am going to let you give us a little update on your expertise here shortly, but really quickly, before we lose too many people, I do want to say thank you all. Thank you so much for being here. This content is for you. It is to provide actionable insight within the cannabis space to our investor community and our financial audience. Keep in mind, we have CEO interviews daily. Not only Javier providing articles and interviews and videos, but we do this on Benzinga's YouTube, main YouTube. Like and subscribe, both that one and this one, to receive updates about conferences. But that one in particular, you will get some incredible insight from Jason, from Hot Stocks Luke, from Javi and myself, from Spencer, from Neil. So much insight into the markets that ideally you can get right here at Benzinga. That being said, Javi, what have we missed today, man? What's the end of week looking like for cannabis?
Let's do a general, recap of the week. Of course, check out the Week in Cannabis. It's a recap we do with all of the news from the cannabis industry. We've been doing this for 6 years now. It's always on benzinga.com/cannabis every Friday at the market close. Don't miss it. Here are some of this week's highlights. All major ETFs were down considerably, between 9 and 13%, while the SPY was only down by 1.5%. A few things were driving this. We'll break them down in a Benzinga article, of course. Big highlights of the week also included New Jersey Governor Phil Murphy signing finally adult use legalization, Parallel's $1.9 billion IPO in combination with Cyrus Acquisition Corporation, the Advisor Shares ETF, the MSOS ETF, hitting $1 billion in assets under management, Coach Capital launching a $100 million fund, Rainbow Realty Group raising $47 million, Australis Capital acquiring 51% of Alps for $13.7 to $25 million and adding Terry Booth as the CEO, Verano's slew of news around expansion and $18 million in funding, Red, White, and Bloom's acquisition of Acreage's Florida operations for $60 million, GTI's $56 million raise, Indices purchase of Lowell and Hacienda for $39 million, KushCo's $40 million raise, Philow's appointment of Katie Ford, a former high-level executive at Twitter as COO, Medmen's getting $73 million from Ascend Wellness, and Coach Capital launching a $100 million fund.
You're reading this off Benzinga, aren't you? You're reading this off Benzinga, right?
No, I'm reading it off my notes.
But your notes are Benzinga, so that benzinga.com/cannabis. This is where this is.
On Benzinga Pro.
More than 1 million people see your news in a 30-day period.
More. 3 million.
That's 3 million. Well, there you go. So I'm underselling us. Anyway, Javi, I appreciate you. You can see us every Thursday at 4 Eastern time in video format. We come to you live, bringing you executives. Javi, do you know who we have next week? I'm blanking at the moment, but last week we had Gary Santo from Tilt. We had Deanie Elsner from Charlotte's Web. We had Gage. We had we've spoken to Sol Clahane from Canopy, MetaFarm Labs, Measure 8 Venture Partners. Justin Ort was a powerhouse up there. He was awesome. We have investors, we have operators, we have the people that you want to hear from every Thursday at 4.
So next week we have Collegiate Tribal from Curaleaf, Andrew Bowden from Item 9 Labs, and George Sadler from House of Platinum or Platinum Vape.
So next week we have Curaleaf, and please don't tell her I forgot. Honestly, though,
did an amazing job. 2 days, like just the entire day presenting. That was a lot of weight to carry.
Oh, it was fun. So, I love the energy of this crowd.
I love Elliot. Love how he hosts. Want to see him again hosting on the next event? Drop us a 1. Come on.
Give me ones. If anybody gives a 2, I'm kicking you off the chat. Oh my God. Come on. Give me at least 1. Come on, people.
1.
Oh, anyway, I love it. I love it. I love you guys. It's so much fun. Javi, we love you. Hey, Javier Hasse gave me a 1. Love that guy. Anyways, everybody, please, if you missed anything, you can go back and rewatch this. The videos will be available. And Benzinga Events gives me a 1. I appreciate my team. Nicole, Sarah, Aaron, Rohan, everybody in the back end, thank you all so much. Track 1, all those people, they're okay too, including my brother. Awesome content on that track too, though. Cool Kids track. Is that a wrap? Nicole, you want to play us out?
Thank you for joining. Replay that.
Welcome to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
Oh, it was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
It's this new industry where now billions of dollars are being made.
We're here to bring cannabis into culture.